Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey everybody, good morning, good afternoon, wherever you are in the world. Happy to have you here. We've got 158 people just joined into the show. We just got started, so I hope everyone is doing okay, hanging in there in this crazy, crazy market. Gold is absolutely just shocking to me this year, guys. It really is one of those things. I've traded gold for, oh man, like 5 or 6 years now. Like I've been trading this thing for a long time, watching it every single day. And it still amazes me, it shocks me how quickly and how persistently it can move in one direction. So if you're baffled by this gold move, you're not alone. Me too. It's just amazing. It just goes in one direction so well for so long. And it doesn't always do that. That's the hard part, right? The second you say, okay, fine, yeah, no, it just keeps going, I'm just going to buy, that's when it turns around, right? Gold is a master at just tricking and confusing so many people all at once. Good morning, Bulent. Bulent says, I'm at the 50% profit on DNA Funded challenge because of the gold move. What a move. Awesome. Congratulations on your progress so far with that. Just if you guys could just double check for me, do I sound okay? And does the video and sound coming okay? Just let me know if we are all good. Just want to make sure my microphone looks like I should sound okay and look okay. I'm a little pale this morning. It's my, I don't know, my light is a little bit white light focus. Let me see if I can tweak that. Can I do... Like I can really change what I'm working with here, but well, there we go. Hold on. Which one do I want to do? I think I like that. It makes me feel like I'm tan and I actually go outside. But then now the brightness is so low. Hold on. How do I get the brightness up? Anyways, you look beautiful. Thank you. Thank you, Gareth. I appreciate that. Congratulations on your sniper entry. Thank you. I always find that expression to be kind of a meme because, you know, it's just like, I can't look, this entry is probably the most picture perfect entry I've ever had in my life. Like, I don't think I've ever had a better entry than this, but it would just be like really dumb of me to act like that is what I usually get when it comes to entries. Like entries are hard, man. Entries are the hardest. They're not just hard for beginners. Beginners are like, yeah, I just kind of need to figure out like when I enter the market. It's like, oh yeah, well, everybody else does too. Trading is hard because entries are hard. The market is really difficult to predict when it's going to turn at a certain point or continue from a certain level. It's hard to do that. It seems easy. And when you watch YouTube videos about it, it's always like they show you the perfect example of when it works, right? But in the actual, trading the right-hand side of the chart, right? New data is really hard to predict. That's why trading is so difficult. People think entries are easy. So context, I took an initial try on gold right here. And then I stopped out right here. And then I re-entered right here. That's pretty much what happened with gold. So I took a first attempt, took a loss. Took a second attempt, and this has been a monster trade. But, it would be foolish of me to say, oh, yeah, next time I'm just going to wait for this entry because that's the one that worked. No, that is where people run in circles with this stuff, guys. This 38.2% retracement, you might think, Nick, yeah, of course you should have waited. Like it was obvious that you needed to wait for this level. No. I'm telling you, that's the thinking that gets people stuck in loop, in a never-ending, vicious, changing your strategy loop. So I talk about entries all the time as attempts. Okay, what I like to think of when I'm bullish on something like gold, or I'm bearish on oil, or I'm bullish on something, right? I call it starting a campaign. Okay, and I mean that. In a campaign, I have no military experience, but in campaigns, right, there's lots of skirmishes and battles and fights that occur throughout a war or a campaign, right? You could still win the war and lose a battle, right? So when we're talking about trades, I start what I call campaigns when I have the right setup. So let's say this is exactly what I did. Gold pops up on the EdgeFinder getting a very bullish reading. I say, okay, if the technicals give me a setup, I'm going to start a quote unquote campaign on gold. So what does that mean? Well, when you rewire your thinking and you take some pressure off yourself, it's amazing what can happen in your trading. What I mean by that is so many traders are so hyper fixated on entries because they're trading lot sizes or contracts or shares that are way too big for their portfolio or their account, whatever. What I mean by that is that many traders, they can't handle taking a stop loss because their trade size is so big that one or two stop losses wrecks their account. How much are you up? So let me be as real as I can here with you guys. The P&L on this trade is somewhere in the 40s. But I think context is really important in a year like this because this year has not been a walk in the park. Market's been crashing. I've been fighting for profitability this year, I'll tell you that much. So I will be showing you where I'm at year to date. Hold on. Okay, you ready? It's not super glamorous. This year, including the amazing gold trade, which is up like 45K right now. Okay? This trade's going phenomenal, but I have other stuff that's costing me. And the market's been selling off. So a lot of my stock positions are not doing so well, right? They're mixed. I have some winners, some losers. Like Nvidia dropped like 5% last night. I hold Nvidia. So here's some important context. Year to date, I'm up 1.78% on this account. I have other accounts that are doing better. I have other accounts that are doing worse. But this account is up 18,000 for the year. And at one point, this account was down like 50K. Actually, what was it down? Look, Year to date, at one point, no, it was worse than that. At one point, this account on the year was down $77,000. Okay. Now, all time, this account's done very, very well. This account has done really, really well over the years. This is slow and steady growth that I focus on in this trading account. But I show you this because it would be easy for me and it would be irresponsible for me to only show you the P&L of this gold trade, which is like $45,000, and saying, oh yeah, look, I'm a genius trader. The problem is that's what most people you follow on social media are going to do. But I'm just better than all of them and the best in the trading industry, and that's just a fact. I'm just kidding. But no, and there are other, people that uphold transparency. It's something I find really important because I've been in the shoes of my audience and felt it was so frustrating when people would only ever show you the good moments in their trading, and they would only ever show you winners, and they would only ever show you what was going right after the fact. That's just really frustrating to me, and it doesn't actually help your audience. And you might be saying, well, Nick, why would you want to help your audience? That just sounds like you're being superficial. Well, I'll tell you what I've found, and I talked about this the other day, my business strategy, which is ultimately self-serving, right? I want to sell you stuff. I want you to watch my videos so I can make ad revenue. I'm this evil businessman, right? My strategy, you ready for it? Is to help people as much as I possibly can in the trading space. Wait, what? Nick, you want to what? I want to help you as much as I possibly can because I know that it also makes me a lot of money. That's the honest truth, okay? I know that if I help create content that helps people to reach their trading goals, you may also consider, you don't have to, but you may consider purchasing a tool from us, or maybe you sign up with a brokerage under using our referral link, or you watch my videos and they help you. And so you watch more of them and the ad revenue stacks up and it helps to, pay to keep the lights on for our operation here at A1 Trading. That's the reality. What I found, my business strategy is I can honestly do the best I possibly can for my business by helping the most amount of people that I possibly can. That is the truth. And for anybody who is, whether it's trading related or not, or content related or not, whatever you do, that's been my business experience throughout the years. If you can truly help people, it will come back to you tenfold. So yeah, I'm very, I do my best to just stay as real as I can with what we're doing here, right? This is not a channel that I do out of charity. Like if I just wanted to trade, I've done that before. Like there was a period of time where I traded and just did a little bit of side work for a brokerage, like doing some content in their portals for their customers. I did that for a while, and I wasn't really big on YouTube at the time. And I did that on for a while, and it was like so not fulfilling. Like I didn't find that to be enjoyable. Like I did that. Like I did the lifestyle of like I was done with everything I needed to do by 11 a.m. And it sounds nice, but when you're a person, when you feel you have more to give to the world than that, you don't want to be done working at 11 a.m. Right? That it sounds nice, and it is nice for a while, but then it's like you want to build stuff, you want to do stuff, you want to impact people, meet people, network with. There's just more to do out there than to trade for an hour and then go to the pool. It sounds good until you realize like all your friends are at work and you're by yourself. And now I have an awesome opportunity. I build and create cool stuff with a team of people, and I love doing that. So anyways, let's get into some charts. I know I've been ranting. S&P 500 had an overnight swing lower. You guys may have seen that. NASDAQ and S&P in the futures overnight, they sold down. NASDAQ down about 1.25% on the day. Morning, Sean. Nick, I admire you. You're young, having a mindset. You're headed to success. I appreciate that. Thank you very much. Stay with us forever. As long as I can, my friend. I don't think, I thought about this the other day. I was like, I don't know if I ever see myself not making videos. I just enjoy it too much. Nick, if you help someone cross a river, guess who else gets across? Exactly, Lee. Because of that, I bought EdgeFinder. See, that's ultimately the strategy. Neutral setups show up on the EdgeFinder even though I unchecked them. Will that get fixed? Let me check that. If I remove neutrals. Oh, interesting. Thank you for pointing that out. Yeah, you know what? I'm going to show that right now to the devs so that we can get that sorted out. Stay tuned. Okay. Thank you, Hamadi, for that. I just shared that with our developers, so we'll get that sorted. I'm not sure why that's happening. That's a really weird error. Anyways, we've got NASDAQ, Euro, Gold, all top of mind. Look at silver's also on there. What is silver? What is silver up to right now? Look at that. Silver is also rocketing. You got gold up 2.4%. Honestly, so I've gone back and forth over the last few months. We got news. Sorry, guys. We got retail sales here this morning. Let's see what we got. Let's see. Retail sales came in month over month better than expected. Core retail sales came in better than expected. That is a positive signal. Let's see if that's impacting positively to markets. Nothing huge on the S&P, NASDAQ. Dollar index slightly higher to that. Not a huge move. Slightly higher for stocks. Gold slightly lower on that. Dollar index slightly higher. But this is a 5-minute chart, so I'd say pretty much non-reaction to that. He also revised the previous number up. So retail sales, I mean, holding in there, right? There's been a lot of concern that, you know, U.S. consumers would there's been a lot of negative sentiment in terms of, you know, in response to tariff uncertainties and inflation worries. Like the consumer in surveys has mentioned that they're pretty concerned. But this is why, you know, then you get that rumor, and then what actually happens? You can see, well, consumers still went out and spent money. There wasn't a huge fall off in consumer spending. So this is something you really have to think about. Again, regardless of your political views, one thing you have to remember is that a lot of those consumer sentiment reports, there's going to be political bias in people's responses. And I've heard this talked about a lot in, you know, financial media. And it's a really important thing that we acknowledge this. Again, whether you like or dislike what's happening, a lot of respondents to these types of surveys, like, do you think prices are going to go up? Do you like all that? There's a lot of like political bias that goes into those surveys. And then that doesn't necessarily mean that political bias is like there may actually be price hikes and things like that. But people's political bias when surveyed gives you one thing, but then actual data on what consumers did is a whole nother thing. Because sometimes it matches the consumer sentiment. But a lot of times it does not. A lot of times it's different. A lot of times people say, oh yeah, no, this year's going to be really hard. I'm worried about my job. And there's a little bit of political bias in there. People did that under Biden. They're doing it now under Trump, right? Oh, you know, Biden's going to send us into hyperinflation. And then now it's, you know, tariffs are going to cause hyperinflation, all this, right? The consumer gets worried, but there's some bias because they see it all over the television, right? But then what they actually do, what they actually go out and spend, like what we just saw, retail sales numbers came in slightly higher than forecasted. So it just goes to show you have to take everything with a grain of salt when it comes to the forward-looking indicators, because the thing with forward indicators is that sometimes there is some bias or some, news media can impact the way people think, stuff like that. You know what I'm saying? So you have to be careful with that stuff. So this is what I would say. This is the hard data. So the soft data, the consumer sentiment reports, inflation expectation reports from consumers, they told you like, oh yeah, no, I'm not going to go spend. I'm worried about inflation. And then what happens is, look, people actually went out and spent. You see what I'm saying? Hopefully that makes sense, but just have to think about it. Nick, this is March's data before tariffs. Is this data negligible to the recent concern? That's a great question. And I would say no, because if you remember, this whole debacle with tariffs and fear around this got really scary in as early as February, and especially in March, right? In March, you had all this going on where we saw the first half of this sell-off, and then we saw it get louder, to your point, towards the end of March and into April. But then now you've had a little bit of a bounce back, right? So sentiment oftentimes straight up follows the S&P 500, right? It's in many ways following it, not leading it. So you get all this sentiment report like, oh, but then the retail sales data for March actually came in okay. But yeah, no, there was fears around tariff and inflation before this sell-off, right? Even when it was starting to sell off, people were nervous about that. So that's in there. That sentiment report is in there. But that's a great question. Haven't seen James for a while. Yeah, what's up with James? Is he coming on today? Just a heads up, if you guys ever want to check, we discussed this yesterday. If you ever want to check who is coming on the show, our producers do a great job putting together notes for the show. So here is your layout. So James is coming on today. So if you go to a1trading.com and then click live stream schedule right here, you can always check who's coming up next on the show. So today in 8 minutes or so, we've got Tom from Simply Forex coming on to do some technical analysis with us. And then I'll be back for a little bit. And then Chris is coming on, and then Forex James. And then we got Alan showing up, Alan in the building. And then we got me coming back for a little bit, and then I got to head out. We're actually touring. I'm touring a new office space for us today. We'll see how it goes, but should be a nice change of scenery for the team, which I'm excited for. Moving offices, man, is like both a nightmare and exciting. I can't wait for your stop loss to get hit on gold. I got out at 29.92. I was long on the 4 hour. That's an interesting comment to leave. You can't wait for my stop loss to get hit. My stop loss for gold has been moved up to this point. I locked in a little bit more on the trade here. If we break 3,200, I'm going to take profits on the trade. And if we don't, I'm just going to look to trail further. Still in Hotlanta? We are. Sean, this is something, I don't know, maybe my fellow Atlanteans will agree, but like in Atlanta, nobody ever calls it Hotlanta. But then everybody who I meet outside of Atlanta knows it as Hotlanta. It is a fitting nickname. It gets really hot here in the summer. Whoever said that is a hater and that has personal issues. Well, what they meant when they said they want my stop loss to get hit is because they're looking to take a trade themselves and looking for a pullback, which I've had a lot of comments like that. People are like, I can't get in on gold. It never pulls back. And there's a little bit of a hindsight bias here with gold. Like if you're in this trade trailing stops, if you're using the same methodology as me, it looks picture perfect right now. Like this, you could not pick a better example of an EdgeFinder trade plus trailing stops. This is it, right? Because look, you've got gold on top setup, plus 10 score on the EdgeFinder, pulled back to support, 61.8% retracement, entered the trade, no drawdown, tight stop, moved my stop loss with the trade, moved it again. And if it keeps going, right, we'll just keep doing that. And that trade, a friend of mine who also trades sent me a message, and we were talking about how, like, you know, those are the types of trades, like one trade like that can pay for like a dozen losses. A dozen losses can get paid for by one trade like this. So my whole year, this is a bit of context. This trade has taken me from being, you know, the stock market's down like what? 10%, 15% on the year or something like that. I'm like 2% in profit on my portfolio on a year where the market is down quite a bit, simply because this gold trade has run so hot, right? So that is a perfect example. But the reason I point out that this is a perfect example is because it doesn't always work this way, right? A lot of times I take a trade, stops out, and then it runs without me. Or I take a trade and it moves in my favor, but then it comes back and takes me out for a small win. So this is the rare example. They don't happen that often. I wish they happened more often, where the trade just worked perfectly as planned. It's just not that often that it does that. I wish it did, but it just doesn't, right? But that's what I trade for. This is the type of move that I trade for. Like, I look for these moves and it takes me a long time to find them. But then once I find them, they pay for tons of losses and more and net a profit. That's pretty much my trading in a nutshell. Is I swing for home runs with my momentum trading strategy. I have two strategies: a dollar cost averaging / mean reversion style, which is a high win rate with small profits. And then I have, you know, the opposite, where I take small losses, but I have the occasional massive runner. So I like having two trading styles. I trade a little bit differently on foreign exchange currency pairs. I'm a little bit more dollar cost averaging focused, but then I'm trading momentum on indices and gold and silver and oil. So I have a Forex strategy and I have a everything else strategy. So anyways, just a heads up, if you do not have a copy of the EdgeFinder, this is probably a good chance to remind you that our sale is ending. It's our biggest sale that we do all year long. You can currently get 45% off for a limited time. It's our 3-year anniversary sale on the EdgeFinder. If you're a regular viewer and don't yet have a copy of the EdgeFinder, now is a great time to do so. It is, like I said, it's the biggest discount that we do all year long. If that's something that you're interested in, if you'd like some more information about unlocking the access to our tools, we have everything from the commitment of traders report dashboards that we've built out, retail positioning, the put to call ratio, economic data screeners, and of course our top setups algorithm that pulls it all together. If you don't have a copy of the EdgeFinder, don't miss this. It's the biggest discount that we do all year long. It's a one-time price to pay. And if you're somebody who is watching with us here live, click this link to send us a direct message on our website, a1trading.com. And if you need to split it up into payment plans, we do also offer that as well. So if you need to split it up so that you don't miss the sale, click the link, message us, let us know you want to split it up, and we'll see if we can help you in that way. Again, we got 3 wonderful support reps on our team who will be happy to assist you with any information in regards to the tool, how it functions, etc. We also did something recently. If you are interested in setting up a training call on the EdgeFinder with one of our support team members, that is something we now offer. It is something that you can apply for on our website. I'll show you really quick where you can do that. If you're interested in exploring the EdgeFinder on a call, on a Zoom call with someone on our team, head over to a1trading.com, click on EdgeFinder, and this button right here, request free training call. You'll be connected with someone on our support team who can go through the tool with you and help to guide you on this. And actually, specifically what we're going to be doing in these calls is some of the main topics. I just wanted to highlight this because this is something I'm working on right now. In the call with the support rep, you'll be going over how the top setups page can help you find better trades, how the EdgeFinder can help filter out poor trades, which is incredibly important, and how to align your trading with the classic 3 you guys know and love: technical, sentiment, and fundamental trends. So set up a call if you'd like to. That can be found, like I said, on our website, a1trading.com/edgefinder. Just click this button here and you can apply for a free training call with a member of our support team. Love you, Nick. Appreciate you. Love you too. Is DNA funded legit? Do they pay out? Yes, they do. And what I like about DNA funded, Chandler or James, if you guys could drop the link to DNA funded for anybody who would like to explore them. What I like about DNA funded is it's not run by some influencer on social media. I like those less. I mean, they're not all bad. There are some influencer run ones, but what I actually like when a prop firm is run by a business that's like a brokerage business, I like that a lot more, because then it's run by a professional business team. It's not run by, some guy who has, social media platform. So DNA funded is that. So if you would like to explore them, we have a promo code with them, A1T20, which gets you 20% off on any of their products. So check it out. So yeah. DNA funded is the specific thing that I like about them is that many of you guys may know DNA Markets. So it's a brokerage first that launched a prop firm, and I like those a lot. Of course, it's only limited to certain jurisdictions, certain people in certain places. So explore that option if you would like. And like I said, we have that promo code that gets our subscribers 20% off any of their challenges. 2.55% on the day for gold. That's wild. Absolutely crazy. Silver's up 2.25%. Oil's up a little bit today. Is oil still bearish? Nope. Neutral territory for oil. I didn't mean for that to be so big. Okay, neutral territory for oil. Dollar yen, dollar Swiss, CAD yen, all getting bearish readings. Let's go take a look like that. Let's see, where are we at? Oh, Bank of Canada has 1 hour from now, they have interest rate decision and their rate statement. And then 45 minutes later, they have the press conference. Then we have Powell speaking later. It's a busy day. We'll be streaming for most of the day. And if you're enjoying the stream, make sure to hit that thumbs up button, subscribe. And if you have any trading questions, I'd love to answer some. If anybody has a trading question for me today, I'm in the mood to see if I can answer some questions, see if I can help anybody out with something they're struggling with or thinking. Drop it in the chat. I'll see if I can help. So I just mentioned dollar yen. I'm going to look at dollar yen here. Not pulling back for me. This is one that I'd like to establish a short position on if we get that pullback. So we're not getting that pullback. So, yen as well as gold, both are looking kind of strong right now. Yen is going up, which is causing dollar yen to move lower. Same with gold. EdgeFinder's a one-time payment. Yes, it is. Yes, it is. And for people who need to do so, you can actually split the payment into like 2 parts or 3 parts. If you need some clarification on how to do that, we'll drop a link here in the chat to where you can speak directly to our support team. I struggle to be confident over a trade idea, and I tend to get biased after I enter the trade. Quang, that's a great question and a common issue. I would encourage you to spend some time back testing to make sure that you actually have a system that has an edge, Because if you do enough back testing and actually spend the time to research your strategies, you're more likely to stick to them because you know what to expect in drawdowns. Like you've seen examples of drawdown periods, how long they take to get back out of. How to gain trading skills: a lot of time, a lot of back testing, a lot of effort, and a lot of crying. That's how you get better at trading. Fund my own account, but I also don't hate the funded approach because it works. It's not for everybody. There's some constraints and it doesn't fit everybody's trading style. But if you know your style well enough, I would highly encourage you to explore that option, but to be skeptical, be skeptical about everything. And when I say skeptical, I don't necessarily mean that everyone is a scammer. I'm just saying be skeptical of like the rules and things like that. Like look into them. Make sure you do your research. Okay, we got Tom coming up next, guys. He is here. Tom from Simply Forex. He's been coming on the show for quite some time and is a highly technical focused trader. With that said, in just a second, we're going to be bringing him on to take over the show to go over some charts that he's looking at. Just a quick reminder, if you're interested in getting access to the EdgeFinder, the 45% off sale will be going through the end of this month. But if you'd like to lock in that price before that ends, make sure send us a direct message on our website, a1trading.com, the live chat feature in the bottom right, or we'll drop a link here in the chat to where you can speak directly to our support team if you have questions. Okay, guys, we're going to take a quick break, thank a sponsor, and then up next, we've got Tom from Simply Forex taking over the show. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello traders, Trader Tom here from Simply Forex. Hope you're all well. It's been some crazy markets recently, right? I am presenting, yeah, okay. So yeah, okay, just checking you can see my charts, guys, and you can, good. Yeah, how are we all? It's been some crazy weeks, what with Trump's tariffs and the pauses and everything, and these tariffs are not going anywhere, right? They're just paused. So, welcome to the new volatile markets, basically. Now, from a Forex point of view, that's what I focus on mainly, guys, currencies. It's been a case of trading against trend, a lot of it, right? So I'll give you a few examples. So if we look at pound Swiss franc, this is a trade that I've literally taken today, right? Basically what you're seeing is super overextended day charts, right? Like pound Swiss franc was, right? All the flight to safeties, yen, Swiss franc, gold have been flying, right? Because of the volatility and turbulence in the market. And you've ended up with super overextended trends, right? And, once it's found a nice support level, we've seen bounces off of these levels, right? And that's what I've been trading, okay? Now, the criteria for this is the following, right? We need a daily chart that is overextended, okay? Tick, this is overextended, right? We need to find a good piece of support, right? If I just zoom out, right, you can see this has historically been a good piece of support, right? And we need a nice big bullish candle, right? This is a nice bullish candle. And all I'm trying to do, guys, is, potentially come back up to these daily highs here. And then, this is when the moving average 20 will catch up with price. And this is arguably a good selling opportunity in here. So because how crazy the markets have been, I'm trading against trend, which is what I normally don't do, right? You want to be with trend. But if you have, you know, a setup like this with the following criteria that I'm giving you, then potentially we can trade the retrace, right? And that's what I've been doing for literally a couple of weeks, really, right? Rarely have I been with trend. And I'll show you another couple of examples in a minute. So overextended at an area of support, bullish daily candle. Let's see if we can take it higher, right? That's the idea. But then also, guys, I need more confirmation on lower time frames. Okay. And I'm looking for a H4 uptrend as well. Okay. And as you can see, with pound Swiss franc, we are in an uptrend, right? We're starting to get higher lows, right? Potentially a new higher low and higher highs. Okay. And then, like I say, guys, right, we're just trying to take price back up to this 1.100 level. But I probably will take some profit at this last high. Okay, so there's one trade idea, and I'm currently in this trade, right? I'm buying pound Swiss franc. I also bought euro Swiss franc earlier, right? Same scenario. If we look at the day chart, right, overextended at a weekly support level, right? If I just zoom out, you can see a nice important level, right? Bullish candle, bullish daily candle, right? And then I'm looking for H4 structure. So if we go back to the H4 now, this was a very in and out trade. I've already taken profit on this trade, but this was in an uptrend, right? Only just, we broke these highs, right? In an uptrend. These lows have been holding. And all I did, guys, was enter on this candle. We got a nice bullish candle, entered here, stopped below here, took profit up here, okay? And we were done with this trade. We were very in and out of this trade. Now, if you're going against trend, against daily trend, I would suggest a more, you know, achievable target, right? Because, you know, the market wants to go with trend. So if you're trading against trend, then obviously have a more conservative target, right? But I actually closed 80% here, and I'm going to let 20% run, right? And again, potentially back up to here. All right, so there's a couple of against trend trades, and there are, you know, that's what the market has dictated from us, right? Another one was Euro Aussie dollar, right? And just, you know, we know Euro was on the tear, right? That was stronger than, you know, Bruce Lee and Jackie Chan combined, right? It was super strong. And we saw this massive uptrend, right? And then bang, you get a candle like this, right? Followed by wicks like this. There's just so much selling pressure there, right? And we just want to sell this market. Again, a conservative target was just back down to these lows and this 1.78 thousand level, right? And that's where I took it to. So daily was telling us down, and then we're just waiting for, you know, structure. So we was in a H4 downtrend, right? We wasn't too sure what was happening here, but then when I got this big bearish candle, we entered, started selling here, stops above here, took some profit down here. All right, so not, you know, just simple price action, technical stuff, guys, right? Not rocket science. So yeah, that's the kind of trades we've been entering, because markets are so overextended, right? And guys, please don't forget to ask me a question, right? I'm with you for the next half hour or so, so please ask as many questions as you like. Are there any pairs that you would like me to analyze? Please feel free to ask some questions. Other things I'm looking at today, I really like. So this is interesting. Let me show you this, guys. So first of all, I really like pound Canadian dollar. right? So if this is more of a swing play, but we was calling this trade, right, back in here, right? But I just really like this level in here for buying, right? This is a weekly chart, but I love this combination when you have an uptrend, a clear uptrend, you have a nice big retrace into value, and then you have the moving average 20 plus horizontal support as well, right? So this was an area to get involved with pound Canadian dollar, right? Okay, so let's take a look at a few. So we've got a few people now wanting to look at a few pairs, and there's a couple of people wanting to look at gold. All right, so let's look at gold. Normally I sing a well-known song regarding gold. Now, gold is like some, you know, magical bullish unicorn, right? It's, you know, it's not a bull, it's a unicorn, right? It's just mental how strong this is. Now, you know, we know all the reasons why gold is strong, right? It's a flight to safety. We're in very turbulent times. The Fed was saying it's going to, you know, potentially decrease the interest rate. That led to US dollar weakness, gold strength. You've got central banks, especially China, buying up bullion, right? There's loads of fundamental reasons why gold is strong. But my God, how strong is it? Now, the problem with gold is just value, right? And if there's one thing you take away from today, guys, it's this, right? You know, anything you buy, right? Whether you buy a car or a house or a table, right? Nobody wants to pay top price for it, right? You know, if I'm going to buy a house for $500,000, you want to get it for about 450, right? Okay, it represents value and you are happy with your purchase, right? And that's the same idea with gold. We all want to buy gold, right? And if you have any gold at home, just melt it down, give it to your local jeweler, and you'll be an instant millionaire, right? I'm joking, but you get the idea, right? I'm currently melting down all of my gold. I'm only joking, I'm not. Anyway, back to gold as a market, as a chart. So I want to buy gold, but I don't want to buy up here, right? Now, I'm not saying gold can carry on doing this, right? Of course it can. And fundamentally, you know, geopolitically, macroeconomically, as I said, everything's pointing that it will continue to go up. But there's no value for me in buying gold up here. Now, up here buying gold, just no value. Now, the real value play on gold, and hindsight is a beautiful thing, was this, right? When it retraced back to this level, right? We know that price was in an uptrend. We had this big candle, big bearish candle, suggesting price would retrace, and it did back to this level. Now, that is the trade. That represents value. And that's what I'm looking for on every chart in real time, not in hindsight, obviously. Yeah. So, you know, if it didn't get in here, it feels like a bit of a missed opportunity, right? But ultimately, you know, markets retrace, right? Seldom do markets do that. And it's sustained, right? Even if it is tearing, eventually there will be some kind of retrace. And that's your opportunity with gold. Not here, right? Wait for a retrace. You've got this new level now. Maybe this could be a really nice level to start buying gold. Okay. It was the same with Bitcoin, right? Everyone saw the 100,000 mark. They're like, oh my God, it's going to 200,000 or whatever, right? And then it retraced, right? The market, any market wants to retrace, right? And that's your opportunity to get in. So gold is no different. If you look at the day chart, I mean, it's just tearing. It's unbelievable, right? But this level, yeah, if we get, you know, some kind of bit of a retrace, you know, down into here, moving average 20 catches up, right? I think we've got a really nice gold buy trade in here. All right. And obviously, you know, not that I can see tariffs or anything clearing up quickly, but if we start getting a better picture and better understanding of what tariffs, the implications of tariffs, right, then gold might slow down. But as long as these tariffs are very uncertain, very unknown, I can't see gold slowing down, right? But I still want to retrace. Yeah, buy from value, guys. Right, what else are you looking at? So somebody said, how do you draw the moving average 20? So it'll just be one of the indicators, right? It'll just be a normal indicator you can just use. This is the simple moving average. Just put that on your chart. I just use that visually to look at trend, right? Generally speaking, if price is above the moving average 20, it's trending strongly, right? And again, right, it's trending strongly. Did have a bit of a sell-off here, but generally speaking, above the moving average 20, I'm looking for buys. Below, I'm looking for sells. It just helps me visualize, yeah, what I'm looking for. Right, what else are we looking at? We had some other questions here. Anthony wants to look at pound against the Aussie dollar. Thoughts on that? It's at a really interesting level, pound Aussie dollar. And before I show you pound Aussie dollar, guys, if you're enjoying my analysis and want to hear more, then please don't forget to subscribe to my channel, Simply Forex. I'm sure the guys will leave a link in the live chat. And hello to everyone at A1 and Trader Nick. Didn't say hello, how rude. Right, so let's do a top-down approach with pound Aussie dollar. Right, this is what I do every day. Okay, now I'm zooming out so you can understand why this is an area of importance. Right now, clearly, we are in a weekly uptrend, right? And we would normally want to buy, right, in an uptrend from this level. This represents a really nice level, and we'll look at this on the day chart as well. Right, it represents a really nice level for buying. But you have to ask yourself, do you want to buy that candle? Right? No. Yeah, that's the problem here. Okay, so weekly uptrend, really nice level. I don't want to buy into that candle. But let's get more information. This is why I do a top-down approach, right? So let's look at the daily. Let's see what the daily is showing us here as well. And you can see this uncertainty, right? So let's understand this uncertainty. The uncertainty is we are in, right, a daily uptrend. We're in a weekly uptrend. We know we're at a really nice support level in here, but we have very, very bearish candles. We have a very bearish weekly candle, and we have, you know, a very bearish daily candle. So because of that conflict, no one's winning, right? There are no winners in here. If you look at the H4, this will be just disgusting, right? Disgusting price action. So what we need to see is a break of this uncertainty, a break of this contraction, right? Because all you've got in here is buyers, sellers, buyers, sellers, buyers, sellers, buyers, sellers. Nobody's winning, right? And if I ever see price action like that, I want nothing to do with it, right? I want to stay well clear of that. Okay, like don't touch it with a barge pole, right? But if we start to see a big, nice, big bullish breakout of this level, right, then that would suggest we can take price back up to here, right? If we see a bearish break of this level, that would suggest price wants to come lower. So patience, guys, right? Don't be so quick to want to get into that. You're like, right, it's at a nice level. Quick, Tom, I want to buy. It's at such a nice level. No, right? Wait for the market to tell you when it's ready. Okay. And that will be in the form of a bullish candle if it wants to go higher, or a bearish candle if it wants to go lower. and just let that guide you, right? Stay out of this, okay? Now let's take a quick look at the H4. Yeah, okay, so that was that little pop-up with that larger candle, but typically speaking, we're just sort of in this, we're in here, right? Now, you could be more aggressive with the trade, right? Now, I would wait for a daily bullish or bearish candle, right? But if you wanted to be a little bit more aggressive, you can trade the H4 break, right? If you've got a H4 candle break out of this high, that would suggest room to the upside. If you've got a bearish H4 candle break out of this end, excuse my candles, I've been drinking, then that would suggest room to the downside, right? Okay, so when I say aggressive, I mean the time frame, right? If you wait for a daily candle, right, there's lots of confirmation that buyers and sellers are in control. If you take the H4 break, it becomes a little bit less reliable than a daily break, right? And as you go down the time frames, I would suggest the lower the time frame, the more aggressive the trade, right? So yeah, there you go, guys. That's what I'm looking at with pound Aussie dollar, right? But just this kind of price action, stay out, right? Right, what else are we looking at? What else are we looking at, guys? I'm just looking at another. Okay, we've got a couple of people wanting to look at a couple of yen pairs. Coffee spinner. Okay, somebody who spins coffee, I like it, is looking at Swiss franc yen. Okay, now I am seeing across the board Swiss franc weakness today, right? I'm an intraday trader. When I say I'm seeing Swiss franc weakness, I mean today, right? And I will take a Swiss franc weakness trade today, right? I was in Euro Swiss franc. I'm also in pound Swiss franc buys as well, right? So Swiss franc yen, based on that understanding, I would want to sell it, and I do, right? Now again, yeah, as I said at the start of my analysis, this is what the markets are like, right? They're just caning up. They're caning in one direction or the other, and they're overextended, right? Now, this is clearly overextended, right? And there is a piece of support here. I mean, you could probably even include these highs. I mean, this just, let me tidy up my resistance level, right? So when I say tidy up, I just want to include this level and these highs, right? Because that collectively is an area of resistance, okay? But look at that candle, okay? Super bullish, right? But we are at an area of resistance. And then if you go to the day chart, as I explained, a lot of my trades are against trend, okay? Because of these massive moves we've had. But if we just look at trend, right? You don't have to be Warren Buffett to see that is in a uptrend, right? However, we've reached an area of resistance, and then we got this big bearish candle form yesterday. And that suggests we can take price potentially back down to the next piece of support, and this 173 level. So I would actually look to sell Swiss franc yen today, right? But, right, I need something to tell me to sell it, right? So weekly and daily are just generally my direction, okay? And then I'm going to go down to lower time frames, H4, even H1, to really pinpoint my entries and stop losses, right? So if we drop down to the H4, I've just been waiting for a bearish candle. Simple as that. And also, guys, sorry, before we look at bearish candles, also important, look at structure. We have literally just had a fresh structure break, right? You can see this area through here, right? they were the last lows, right? And this candle here, that was when we had a structure break, right? These lows have broken. We're now getting lower highs, lower lows, right? And then a retrace in and around the moving average 20 is always a nice area, right? It acts as dynamic support and resistance, right? If you don't believe me, look at it, right? Dynamic support, 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 right? It's not an exact science, but support could potentially become a good area for resistance, right? And that goes back to my point, above moving average 20, looking for buys, below it, looking for sells. But more importantly than that, I need a structure break on the H4. Okay. And, you know, that's what we've got. So if cookie spinner, if we get a nice big bearish H4 candle that looks something like this, right, I would suggest we can start selling here, put your stop, give your stop a bit of room, and then take price back down to these lows. I would take some profit. I'm a big believer in taking profit at the last highs or last lows, especially with these market conditions, right? Trump opens his mouth and the market does that, right? So, but even without Trump, I've always been a big believer in taking profit early, but let some profit run. So when price gets down to here, you can close 70%, 80%, 90%, and then leave a percentage to run, potentially all the way back down to this 173. But nothing as yet telling me to sell this. I need that bearish candle. That is the catalyst for me to start selling. All right. So yeah, Swiss franc yens, we like the look of. Let's have a look at pound Swiss franc. Okay. So yeah, we'll see what price does here. I'm still in this pound Swiss franc buy trade. But yeah, there you go, guys. Swiss franc yen. Swiss franc in general week today. Right, we've already looked at gold. Let's look at one more pair, guys, and then I believe my time is up. What else? Pound yen. All right, let's have a look at pound yen. Let's have a look at a yen pair. Now, these were similar to what I was explaining earlier against trend trades, right? We had this big sell-off, right? Flight to safeties like yen was strong, right? Because of all the turbulence with tariffs, right? But no coincidence, when we got that pop off the indice lows, let me just show you this, guys, right? Once we got, you know, this big candle on the back of the 90-day pause, that will be reflected in the flight to safeties, right? And pound yen was no different, right? We had a massive bullish candle. And ever since then, guys, I've been looking to buy pound yen. I actually bought other yen pairs. They were better setups. But ever since then, right, we've been seeing some of these bullish candles. But for me, there's no room with pound yen anymore, right? That is the last level, okay? So I'm not interested in buying pound yen. There's no room to move into there. Whereas if we compare that with the Swiss franc pairs, you can see pound Swiss franc has that room to move into, right? And that's why I'm looking at Swiss franc pairs and not yen pairs. All right, guys. So yeah, hope you've enjoyed my analysis, guys. And thanks, guys, at A1 and Trader Nick for having me on. And yeah, I will see you all again soon. Don't forget to subscribe to the channel. See you later, guys.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, guys, I'm back. I was just writing down something. You know, I watch a live stream every week. I've been talking about this a lot on the channel, how this year I'm trying to be a better YouTuber. And I've done YouTube for a long time, but I've never taken it as seriously as I have in the last 3 months or so. And it just goes to show, like I've always taken YouTube seriously. Like I've always wanted to put out great content. But in the last 3 months, I've really spent a lot of time trying to study and better my YouTube skills, like how to get people to watch videos, how to get them to stay on the video longer to make sure that they're actually getting good quality content from what they're watching, and how to avoid topics that the audience is not super interested in. But the reason I'm telling you that, because again, that's kind of what I'm doing right now. These are topics that you're probably not interested in unless you're a YouTuber. But for traders, one thing I want to talk about is I've been watching this stream here recently. I'm learning something new, just like many people who maybe watch these streams are trying to learn something new. I'm learning about YouTube through watching some of the people that, are basically YouTube training coaches. Like they help people to improve their YouTube channel and have clients and things like that. So I'm doing that process. But a lot of things, what they do in their streams is they answer questions from traders. Well, not traders, content creators. And I wanted to do the same thing for traders within my live stream. So I'm curious if maybe that would be a segment I should start doing on my show more often, is like answering questions, maybe like creating a forum where people can submit a question about something that they're struggling with in their trading. I think it could be a fun inclusion, especially now because I went through earlier a whole bunch of charts. So I don't really want to go back and just do all that again. So I'm curious, maybe if you guys have some questions, maybe if you have questions in regards to risk management or fundamental analysis or technical analysis or trailing stops. If there was ever a thing that you wondered about my trading style or just general trading knowledge, I might be able to help if you guys have questions. So drop a question in the chat if you have one, and I'll see if I can help. What about fair, unicorn, breaker, gapping, block order setups? Well, those are the best ones. You don't use those as your entry points? I'm being sarcastic. Nick holding a cigar, answering questions. You never know. You might see it someday. What does the VIX affect in the market? That's a great question. Let's do it. What is the VIX? What is the VIX? The VIX is the volatility S&P 500 index. What it does is it looks at the expected, basically, the way to read the VIX, there's two ways you can look at it. You can call it what many people refer to it as, which is the fear index. When this thing is up like crazy, it's a lot of fear out there in the markets. And when this thing is low, it tells you there's a lot of confidence and euphoria in the markets. That's an easy way to read the VIX. But the more technical, there's like a highly technical answer, which I can't even tell you, or I can give you the basic technical answer, which is this is actually more about studying implied volatility in the options market. So when the options market is expecting huge moves, the VIX goes up. Volatility goes up. The expected future moves of the market are something that is traded through the options market. That's why the options market's a really cool market to study and learn about. When you get everybody buying puts, betting the market's going to go down, the VIX goes crazy high. So which markets does this pertain to? All of them. If you trade Forex, if you trade gold, if you trade indices, the VIX matters, because what you'll notice is that typically at the same time that the VIX is going crazy, things like the euro are also going crazy, right? We went from like this choppy environment to all of a sudden you have these huge breakout moves. But look no further than the VIX to tell you, oh yeah, that's because volatility is high. Volatility typically ricochets in all directions to all markets at once. And volatility contractions do the same as well, right? So when you get high volatility, it's typically across the board high volatility across all markets. Most of the time, that is how that works. It's very rare that one market's like barely moving and the rest are going crazy, right? Usually they all are moving like crazy or they're all moving very little. So volatility is a staple that I think every trader here should have on their watch list. The VIX is very important. And a lot of traders don't really pay attention to it, but it's really important. Nick, what are you looking for before buying stocks? St. G, that's a great question. I actually have, so I don't talk about it too much on the channel. I need to talk about it more because it's a really great tool. But we built an entire tool for tracking stocks. It's just that my audience is not super interested in stocks. So I have this internal struggle where I don't want to get too far into this on stream because, again, I don't want to take away the focus from what majority of my audience is interested in, trying to be a better YouTuber. But we can take a look at, for example, a stock, and then I'm looking at the fundamentals for a individual stock. So let me see if I can give you an example. Like, here's one that everybody knows, NVIDIA, right? So I like looking at NVIDIA, and I love this setup for NVIDIA. NVIDIA is one of my favorite stocks right now to be buying because of what you see on the screen right now. When we take a look at the financials data for NVIDIA, we have rising net income, rising revenues, and profit margins are very nice for NVIDIA. The other thing I love is take a look at the PE ratio for NVIDIA. The price to earnings ratio for NVIDIA has come down a lot in recent times because people are paying less for most stocks right now because they're fearful of what could be coming. Maybe we have a recession, all this and that. So I look at things like this, PE ratios, the valuations of companies, their income statements. Are they growing, confidently or not? I typically love to see companies that have rising revenues and rising net incomes. And then, of course, I'm looking for innovative technologies that I think could be the future. So when I look at like NVIDIA, right? NVIDIA is a stock that I own, even though it's down today, right? It shot lower on some headline news about the Chinese American kind of trade war stuff. I still like the company a lot long term. So that would be a company that's on my watch list, and I've been adding to this name in my portfolio the last few months. So there's a short answer of what I'm looking for in the stock market. If you don't have a copy of the stock box, you may already have the EdgeFinder, but if you don't have the stock box and you're interested in stocks, this is a really powerful tool to explore. And if you'd like some information about it, we're also offering 45% off to the EdgeFinder as well. For existing customers, you can also get that 45% off discount on the stock box as well right now. Again, like I said, we have tools for Forex and futures, but if you're a stock person, highly recommended that you send us a direct message right now on our website and ask about the stock box. We'll get you that 45% off discount for a limited time. So if you guys could just drop the link to the talk to, that would be awesome for anybody who would like to send that direct message. You can also explore the stock box on our website. Head over to a1trading.com, hover over stock box, and you can go to tutorials or get access. And like I said, if you're with us here live, send us a direct message there, and you can speak to our support team, get access to that 45% off discount while it lasts. Okay, let me keep going through some questions. Let's see. What else do we have? Nick, I like your trading style, small position, running for longer. You were good with Kiwi dollar and gold trades. I followed those. Michael Jordan, awesome name, by the way. Yeah, that's awesome. I'm glad that you like the style. Why if trading is basically a 50-50 game, 80% of people lose in the short term and 97% of traders lose in the long term? Shouldn't it be 50-50? Loris, that's a great question. Most people, what they do, what they mess up in their trading, it comes down to position sizing. Like I've said this for years, and I'll say it for years to come. What messes most traders up is position sizing. What I mean by that is that most people do not take a slow and steady approach in trading. They take a got to make quick money fast. So let's say somebody is super bearish on the NASDAQ and they short, right? So they take a sell position on the NASDAQ. Maybe your system, your rule set, your back-tested strategy says to sell. Okay, great. Even if you have a great system that over the long term should be profitable, right? If this is your take profit, stop, like let's just say that that strategy overall works well for you for whatever reason. You can still mess that up by putting too big of a size on this trade and losing 3 trades in a row or 5 trades in a row or 10 trades in a row, and it blows you up, right? So most people lose money in the long term because they refuse to position size small because that's boring and that's not going to make them rich, right? Everybody wants to make money very quickly in markets. That's why most people lose money in markets. The old Warren Buffett expression is the market is essentially, and I'm paraphrasing, is essentially a medium for impatient people to pay the patient people. People who want to make money quickly, who want to turn their $1,000 into $2,000 in the next couple of years, like or next year. If you're doing that, you are likely just going to contribute to making profitable traders more money over the long term because they're going slow and you're going fast. That is genuinely the easiest way to improve your trading is to slow down. In my experience and opinion and working with so many traders, that is it. The easiest way for every single person who is struggling to reach profitability, slow the F down. That's how most people mess this up. You want to make money quickly. You want to trade live account. We probably all made this mistake, right? Everybody wants to jump right into a live account. Everybody doesn't want to spend time back testing. Nobody wants to spend any money on education or tools that might help you. They just want to take that money and pay for a prop firm account. If I just explained to you, you're not alone. That's like the common approach. That's what most people do. It's natural. You're like, oh no, I'm not gonna like spend money on back testing software or the EdgeFinder or a course material that might actually help me or some training sessions. I'm not gonna spend money on that. I'm going to spend my $1,000 on a prop firm trading account, even though I don't know what I'm doing. And I'm going to blow that money and I'm going to be back to square one with no education. That's what most people do in trading. They take all their money and they throw it at prop firms, or they throw it all in an account and try and double it. And they spend nothing on education, tools, training with a coach. It's really important. And I know you might be saying, well, yeah, Nick, you're saying that because you have something to sell. And that's totally valid. So you should take everything I say with a grain of salt. I've got something to sell you. I've got software to sell you, right? So don't trust me, but verify what I'm saying, and you will find I've done this for a long time. That's what people do. If you want to go chase throwing money at prop firms without proper experience, training, back testing, all that, if you want to do that, I'm not going to say be my guest because I don't want that for you. But like if you could tap into my wisdom right now, and I'm not saying wisdom like arrogantly, painfully earned wisdom that I have learned over the years of doing this and watching a lot of traders lose a lot of money on my social media accounts, as well as experiencing drawdown and pain myself. I'm telling you, if you go down that road, you're going to regret it. Because most people don't want to do slow and steady. That's not fun. They want to get right into the trading. And from the other side of this took way longer than I thought it would to become profitable and to scale this stuff up. It took a long time. I thought when I got started trading, guys, I really thought, and if I'm explaining you, like we may be more similar than you think. So when I first started getting into trading, I heard some of the more transparent YouTubers and traders in the space saying things like risk 1% or less per trade and don't think you're going to get this in a year. It's going to take you multiple years to learn. Just like most people, I heard that and I did this. I said, no, I don't want to hear that, right? That's what people do. I did that. So I'm telling you from personal experience, I'm not a dumb person. Like, I'm not a genius, but I'm a pretty hardworking person. I'm pretty diligent in whatever I do, whatever I take into, whatever I take into like my like, I want to do this, I go all out, whatever I'm doing. And the reason I'm saying that is because I employed that in trading and I was convinced I'm not going to take 3, 4, 5 years to learn how to trade. I'm going to figure this out in 1 year or less. And it's going to be, I'm going to start making good money. Okay. And I can tell you that that is exactly the trap that I fell into. It took me 2.5 years to get to a break-even stage in my trading. And it took me 3 years to get to a point where I, from then till now, have made slightly more than I lose in the markets. I'm not doubling accounts every month. I'm not making 10% per month. I'm not even making 5% per month. I'm looking to make a couple percent per month, 2 to 3% on average, and to scale up and compound wealth over the years, not trying to make money quickly. So I'm telling you, I know what it feels like to hear that being said by a content creator in the trading space and to be so annoyed by it because you're like, I don't want to wait 3 to 5 years. I don't got that time. But if you love this stuff, I'm telling you, you'll stick around for that 3 to 5 years. But if you don't truly love this stuff, you'll be gone within that first year. That's how this stuff works. Are there people who figure out trading in 2 years? Yes. But I'd say the average for amount of time that it takes people to figure out trading to the point that they get break even, probably 4 years. 4 years to get break even, like a college degree, 4 years. To get to a point where you're making small returns consistently, if you've embraced risk management, probably 5 years. That's the average. Might take you longer. Some people have been trying to learn to trade for 6, 7, 8 years, and they're just now getting to break even. Everybody's on their own timeline. And when I say it took me 2.5 to 3 years to get to a point where I was making slightly more than I was losing, you have to understand, I was in college and I was getting bad grades because I was so focused on trading. Like, not bad grades, but school was second to me. It shouldn't have been, but I was absolutely more focused on trading than I was in school than on my schoolwork. I went to school for computer science, which I did learn a lot of stuff. Clearly, I have a business now that is focused around software engineering. We build software tools for traders. So I combined I do love trading, and I also do love, software development, stuff like that. So I've combined my two interests to a degree. But just understand, it's going to take time, and that's okay. It's okay. Nick, can you tell me about market timing? Timing the market entries is really hard, and it never gets easy. Timing and entering the market is hard. If you're trying to do so with a tight stop loss, incredibly difficult. So instead of trying to be perfect with my entries, what I do instead is I take stabs with small size. So let's just say I'm not short biased on the NASDAQ, but let's just say I was, because I've got the chart pulled up and it looks pretty easy. So I like fundamentally, I'm bullish on the NASDAQ. Technically, I'm not. Technically, it looks bearish. Let's just say I'm looking to short the NASDAQ. This is how I would map out a quote unquote campaign. So this would be the quote unquote campaign. I'm not bearish on the NASDAQ, so these are not actual trade ideas that I have. But if I was bearish, let's just say my first attempt would be here, my second attempt would be here, and let's say that we fail out and we get some sort of, lower high or something like that. When I say a campaign, what I mean by that is stop losses shouldn't hurt. What I mean by that is that if your size is too big, they hurt. If your size is small enough, a stop loss is like, okay, whatever, that was just an attempt, right? So entries are ridiculously hard to get because the market fakes you out. Like, we've all been there. Everyone loves to claim they have some magical entry strategy on social media, but I'll be very real with you. Entries are hard no matter how long you've been trading. They're just difficult to time. So what I do instead is I take a stab at key levels that I like. And sometimes it takes me more than one entry to find the right trade that I'm looking for. I have a current example with gold. I am long gold on my second attempt to get long. It actually worked out. On my first attempt to get long right here, I stopped out as we broke down. And then I entered a second time here, and that trade worked out. Entries are very hard, right? Bashy says, I love this view Nick has. Reminds me of the Rob Booker clip he did about being small and steady. Rob Booker is probably my trading hero. I learned more from Rob Booker than probably anyone else in terms of trading stuff. I've learned a lot from a lot of people, but Rob Booker, it changed my life when he, that expression that I always use, I have to give credit where it's due. Fastest way to improve your trading is to reduce your position size. That is a Rob Booker through and through message. He said it for a number of years before he kind of semi-retired. And I have just like grabbed that torch and ran like HE double hockey sticks with it. Because I think it's a great message to share with traders who are trying to reach profitability. It's not exciting, it's not flashy, and it doesn't sell well. But it is the truth that has, you listen to anybody who is profitable, 99% of them are going to tell you small position size is the game changer that most people ignore. Right? So like, fastest way to improve your trading. Why does that improve your trading? So many reasons. When you stop trading a one lot on $1,000 account or multiple contracts on a small futures account, or you trade stock shares and you're using a whole bunch of leverage, when you stop doing all that garbage and you start trading minimum size, just watch what happens. It's incredible. Either you'll get bored because you never were meant to be a trader anyways, because you were looking for gambling, not trading, and you walk away and you save yourself a bunch of money. That's a positive. Or you reduce your position size and watch the flowers grow around you. What I mean by that is that when you take your position size down, some magic starts happening. When you reduce your size, your stress level immediately comes down. You're more focused. You're less negatively impacted when the trade goes wrong. You're not overly excited or terrified when a trade goes in your favor about, I'm going to miss out on my profits if I don't close them. What you actually start to see when you reduce your position sizes is that you don't care about this trade. You don't care about this trade so much that your eyes are glued to the screen. I'm telling you, everybody who is listening right now, if you are struggling in your trading, do me a favor, 1 month, reduce your position size to minimum trade size that you can possibly do. One contract, one mini contract or whatever in futures, one share if you're trading stocks, 0.01 if you're trading Forex. Do it for a month and come back. And you tell me how it went. If anybody does that, like I'm telling you, comment on my videos. I will talk about you. I will send you flowers in the mail. Not actually, but I'm telling you, like I want to see more people do that, because most people are not doing that. Most people are doing the exact opposite. They're tapping into as much margin and leverage as they possibly can. They're, stressed out of their mind about their trading. I've been doing this for a number of years. I think if I kept doing high position sizes, I'd already be super gray in my head, right? I'm 28 years old. I could have a full gray hair if I kept on that high position size. And that is absolute nonsense. Everybody who's watching this, I'm telling you, you want to change your life with trading? The fastest way to do it is stop blowing accounts and losing a bunch of money. Reduce your size dramatically. Dramatically. Right now, stop trading big size. Stupid. It mathematically doesn't make sense. And most people get all up in arms when I say, you know, go for a couple percent per month. But I'm telling you, with the money you save, you could buy your own flowers. Okay? What's your advice to grow a small FX account? You want the real truth? I got nothing but truth for everybody here today. You want to grow a small trading account? Don't size up your size. That's just going to blow your account. Keep your trade size small. Get a second job. Scale up your income. Don't try and do it through trading. If you want to grow a small account, grow it through your income. Build your account by depositing. Don't trade a small account with a ton of leverage to try and get your small account to be a big account. That's rookie mistake number one that most traders do. Okay? Small size forever. It's the only way to go. It's the only way to stay in this game for the long term. Ever since I've been regularly tuning into these live streams, I've learned so much more about fundamentals and improved my trading a lot. Omar, that is awesome. Nick, this is exactly how I'm heading towards completing my funded challenge. Position size is the heart of success in this business to stop being greedy. Frankly, I take all trades with 0.01. 0.01? There is no shame in 0.01. In fact, if somebody tells me they trade 0.01 lot sizes, I'm not kidding. You tell me that, I immediately have more respect for you because I think you're probably more aware about risk management than somebody who's trading, you know, one lots all over the place. Because if you're trading one lots, frankly, I think you probably have to have a lot of capital. Because one lots, like 1.00 lots in Forex, is no joke. So, yeah. Not gonna lie, the stream alone tempted me to purchase the EdgeFinder. I'm tempting you, man. I am tempting you. Comes with a warning on it. Warning, if you buy the EdgeFinder, you're going to understand a lot more about fundamental analysis, sentiment analysis, and optimizing trades to back them with fundamental trends. That's your warning. That's your warning. Don't do it. Don't you dare buy the EdgeFinder unless you want to understand fundamental analysis, okay? Don't do it because you know what's going to happen to you. I could tell you, you're going to get the EdgeFinder, you're going to pull up the US economic heat map, and you're going to have a quick and easy way to track a lot of data really quickly that most retail traders completely ignore and oftentimes miss major trends because they don't do that. It's 45% off right now. It's the lowest price that we do all year. In the nature of what I'm doing here, I'm speaking as real as I possibly can, right? You guys know I don't sugarcoat stuff. I keep it as real as I possibly can. The EdgeFinder is worth every penny. And this is our lowest price that we do all year long. I built my brand off of being honest in the trading space. And if you're somebody who wants to get into fundamental analysis and you want to track institutional money and you want to track retail positioning, I think you should buy the EdgeFinder. If you don't want those things, then you should not buy the EdgeFinder. Like if you're like, I don't really look into commitment of traders data. I don't really care to track institutional money. I don't care to watch sentiment indicators, and I don't really look at fundamental analysis, then I would say you should not buy the EdgeFinder. I don't want you to unless it's something that would actually benefit your trading. We want happy customers. We don't want people who feel pressured to buy something that they don't need. So if you're interested in those things, fundamental analysis, sentiment analysis, seasonality, you track economic trends, if that's something that you're looking for, then you should buy the EdgeFinder because it's the lowest price we do all year. So there you go. Again, I'm putting the heat on. I'm putting the heat on with my sales pitches right now because I have to. It's the lowest price that we do all year. And every year when we do these events, it's like the day after, people are like, hey, can I still get that price? So I always have to like make sure people who are regulars see that as an option before it ends. If I trade 0.01 lots for 1 month, will I be rewarded with the EdgeFinder by you? Well, I can reverse that question. If you do 0.01 lot sizes and you save a significant amount of money that you might have lost in the markets in that month, you could take that money, buy the EdgeFinder with it. So you can buy yourself the EdgeFinder with the losses that you might have saved yourself, because if you're over leveraged, any little type of move that moves against you crashes the account. Okay, so let's take a look at dollar CAD. Did we get any move on Canadian dollar? We did. CAD getting some strength here. Hey, this might help my drawdown that I'm dealing with CAD Swiss. So let me show you guys in terms of like position sizing too. I have this CAD Swiss trade, and with this one, I'm also using incredibly low size. So I'm dollar cost averaging on CAD Swiss. Looking to potentially add another position if we do continue lower. But the reason I'm showing you this is that with this, I'm also using very small size to stay in the game. And it's like such a low risk, I don't even care about this trade type of trade. Like I know I'll do well overall, most likely on this trade, or I'll have to take a controlled loss. But in this scenario, small positions makes it so I'm not worried. I'm not freaking out. Like this is such a whatever moment. I'm not positioned fully on CAD Swiss, and I wouldn't mind if it keeps going lower to build a position on this. Gold, I have a good size position on gold, but I'm trailing my stop, so I'm locking in the trade. So psychologically, I'm already like, okay, that's what the trade's going to result in. If it keeps going, that's just extra, right? The market keeps going, I'll keep trailing, keep letting it run. The EdgeFinder paid for itself within 2 weeks for me. Oscar, that is awesome. Awesome to hear that. Is there a way we can go back on the data in the A1 EdgeFinder to see if it is viable with my trading strategy via back testing? Wonderful question. Yes. So let's do an example right here. I'm going to go to our EdgeFinder score history, and I like looking at the history table. Now this is a software heavy page, so if my stream lags, and I apologize. What this does, okay, is it shows you the score day by day that the EdgeFinder had on certain assets and certain charts. It's a really cool way to test the EdgeFinder in terms of like, when was it starting to share bullish or bearish readings on certain charts? And just a reminder, -5 or lower is considered bearish, and 5 or greater is considered bullish. So what we can see, if like with this example of gold, right, we can scroll back, you can see gold has been giving us, it first gave a bullish reading February 6th, 2025. That's the first time that we got a 5 or greater score on the EdgeFinder. Again, that was February 6th. February 6th is right here. So from that day, February 6th, gold has obviously moved quite a bit. From that day, gold is up 15.5% since that reading showed up in the EdgeFinder for the first time. And so you can see the day-by-day score of the EdgeFinder throughout this period. So you can do that by asset within the EdgeFinder. What a lot of people do is they pay for a trial We do offer 30-day trial periods. You can pay $199 if you want to try it for 30 days access. If that's something you're interested in, we'll drop the link now to speak directly to our team about how you can set up a 30-day trial to try the tool out. That does get credited towards your final purchase of the tool. So if that's something that you're interested in, if you'd like to test it out for a while, see if it fits with your trading style, highly recommended. Send us a direct message. You can try it out for 30 days. Send us a direct message there and ask for some info on that. Nick, does the EdgeFinder track news sentiment as well? So we have some really cool stuff coming for the EdgeFinder. Still in progress, but we have some headline screening stuff that is coming to the EdgeFinder soon. Can I do a 60-day trial? Message us. They might be able to work with you. We have a support team trained to help answer questions, set people up with trials, things like that. So just message us if you have that question. Hey, Nick, if Trump makes a good deal with China about tariffs and gold drops to 3,000 level, will it continue to be strong bullish rally after that correction? If there's some great resolution with China, I would imagine that gold would drop. But I would still just be focused on what the EdgeFinder says during that time. So what I mean by that is that when we look at the top setups page, sentiment, technical, and economic data, if those things are all still kind of aligned in favor of bullishness, I'd probably still be buying that dip. Regardless of like news cycles and headlines and stuff like that, it would matter. Does the dollar look strong? Does the dollar look weak? That's what I'd primarily focus on. Dollar index almost back down to those lows. The dollar index still looks really weak at this time. What are you? Pretty much flat. Look at gold, man. Gold is still pumping, up 2.6% today. Holy crap. I found out recently that in the UK, and correct me if I'm wrong, UK friends, but I was doing a podcast with two gentlemen from the UK, and they were like, oh, crap is a pretty bad word. We can't say that on the podcast. And I was like, really? Is that a bad word in the UK? Somebody tell me. It's not really a bad word in the US. Maybe they're just a little sensitive. I don't know. Okay. Yeah, I don't know. Maybe they just, I don't know what you guys get up to over in that part of the world. NASDAQ's almost down 2% today. S&P's down 1.2. Nick, there are far worse. There's another one my friend Johnny said the other day. I can't remember the word, but he said some word. I'd never heard it before. Look at that 5-minute chart even. 5-minute chart, almost back to those highs. 33.17. It's just amazing. Like gold just has this incredible ability to just little to no pullbacks for a long time. And it drives so many people insane. It drives me insane when I'm not in the move. So I understand if you're like, this is annoying me with gold, like I'm not in that trade, I wish I was. I understand that frustration. I've been in that position many times. This looks made up. This trade looks absolutely like I just put the trade there. I am in the trade. Here, I'll show off for a second. I am red on the day despite the gold trade looking really good. Stocks are tanking here today. So here's the gold trade in its entirety. I'm long GLD. You can see the entry just like barely got in the trade right at the bottom. So I can brag about this one, but I'm still down $4,000 on the day. So, you know, but the trade itself is up almost 45K. It's all relative, right? That's the thing that's weird about trading. It's like, oh, $45,000. And that's where it drives me crazy because like creators sometimes will only show you this and they won't let you know, like they will never show you that their account could still be down on the day or they could still be, you know, like in my case, I mentioned earlier, like I'm only up 2% for the year so far, or actually now less, like 1.5% up for the year. So it's not been an incredible trading year for me, but this gold trade has been an incredible account saver for me. Like otherwise I'd be in a much bigger drawdown here. Like gold has pretty much kept me in the positive this year, just these trades alone. Nick, why don't you do gold futures? The main reason ball out is because number one, I trade options. I don't like the, futures contracts options as much. I like ETF options a lot more. That's the first part. The second part is I love trading with all of my analytics in one account. And Weeble has some really incredible analytics. So that's the answer. Plus the trading cost is very low for something like GLD. I get that question every time. Why are you trading, GLD? I'm a swing trader. Sometimes I can hold things for weeks to months. So I just prefer the ETF. So yeah, no, I trade GLD. I have traded it for years. It's just what I prefer. Even if there was like no difference in terms of like trading costs and efficiency, I probably would still just trade GLD just because I know it. I don't know. I just have done it for so long. I like it. That's the cool thing. I mean, they're the same thing, whether you're trading GLD or the CFD version, XAU USD, it's all just trading gold. It's all moving the same for the most part in terms of percentages and things like that. It's a good question from Derek. He says, do you think a trader should stick to an instrument and master that instrument or keep diversifying their watch list? That's a great question. And my opinion on the matter is, so if you are like purely a technical, it depends, right? I'm going to give you 3 examples. If you're a day trader / scalper focused on technical analysis, I'll give you the example of a swing trader. So these 2 examples. If you are a day trader and you scalp specific markets, which also, can I just ask the audience, what are you primarily? Are you primarily a swing trader or a day trader? Let me know real quick in the chat. I'm just curious to see what the sentiment is here. Do we have a lot of swing traders? Do we have a lot of day traders? Americans can't do CFDs. That's correct. We cannot trade CFDs here in the United States on regulated brokerages. So I don't trade XAU USD. Okay, we got a good mix of everybody. Swing traders, day traders, a little bit of both. Okay. So if you're a day trader, I'm not a day trader. I'm through and through. I love swing trading. I can't get enough of swing trading. Day trading, to be completely honest, I actually greatly dislike. I understand that some people love it. Some people have found profitability in it. In my opinion, this is just me. I'm not telling you can't do it, but I think day trading is hard mode. I think swing trading is easy mode. Day trading, you pay more in trading costs than a swing trader that is smart. A smart swing trader can pay way less in trading fees. A not smart swing trader can pay way more in fees. Because you might say, oh, no swaps. Well, there are ways to be smarter about swaps. I can tell you that in a second. But day traders, let's get back to this point. I actually think in this case, especially if you are a technical analysis focused day trader, trading one thing is probably the way to go. But if you're a day trader / scalper that uses fundamentals plus technicals, okay, let me ask you guys this. 1, 2, or 3. Which one are you guys? Let me know in the chat. I'm just curious. What are we working with? 1 is you're a day trader / scalper that uses technicals only. 2, you're a day trader / scalper that uses fundamentals and technicals. And 3, you're a swing trader that uses fundamentals and technicals. And if you're a swing trader that only uses technicals, we don't want you here and you can leave. I'm just kidding. 4, if you're a swing trader that uses only technicals, we do want you here, and I'm just kidding. Okay, 3. So most of you guys are a lot of 3s, a lot of 2s. Okay, that's what I expected. I didn't expect to have too many 1s in the building, because otherwise you would probably be annoyed by my streams because I talk about fundamentals so much. So for long-term only, okay, that's fair. Like if you're a position, okay, wait, is anybody, fine, we're just going to do the full list, okay? Swing trader, I'm going to ask you guys to repeat yourself in just a second. TA only. And then 5, position trader / long-term investor. Fundamentals or TA, etc. Or both, and or. Okay? We are really polling the audience today. Okay? Let me ask you guys now, which one are you on this list? Okay? So if you are, Omar says 6. Okay, now you're just trolling me. Okay. Which one are you? 1, 2, 3, 4, 5. Right? Position trader or a long-term investor means you hold trades for weeks to months to years. Swing traders, you hold trades days to weeks. Day traders, you do illegal substances, run around the house with no clothes on, and you trade the 1-minute chart. I'm just kidding. Kind of. I don't know. Okay, cool. Thank you guys for that. So the reason I wanted to get into this is because somebody asked, should I trade one thing or should I trade many things? So if you are on this list and you trade fundamentals, congratulations. You are the most likely candidate to trade many things, in my opinion. Because if you trade fundamental analysis as your basis, it doesn't matter what you're trading as much. If you're fundamentally focused, like you're looking at interest rates and inflation and what the Fed's likely to do and the economy, you can trade a long list of things because your basis is fundamentals first, then you're looking at a specific chart. If you're a day trader that trades technicals only, I really think you should probably only trade 1 to 2 things. Because if you're a day trader and you're only focused on technicals, you really want to get to know your one thing. Now, you do want to get to know your things and fundamentals too, but you really want to get to know the fundamentals more than one specific chart. Especially, you do, in my opinion, you do not want to trade one thing if you are 3, 4, and 5. If you're 3, 4, and 5, you really want to trade more than one thing, in my personal opinion, because if you're trading one thing and the fundamentals and or technicals are not aligning, you could go months without trading that thing. There are months of the year where I don't trade gold or I don't trade the NASDAQ. I haven't been trading the NASDAQ recently. For like the last month and a half, I haven't traded the NASDAQ. Something I love to trade, but it's just not setting up fundamentally and technically for me at this time. So I think in these scenarios, you likely want to trade more things if you're a swing trader or a position trader. Day traders may want to focus on a small number of things. Okay? So that is my reasoning for talking about that, is that you want to have trading opportunities at the ready. You don't want to go like weeks at a time with no trades. Unless you're a position trader, long-term investor, et cetera, and you're not really looking at this stuff every day, that's fine. But for most of us, we are looking at this stuff on a daily basis. And if you're a day trader, new setups are always kind of forming because the chart's moving so quickly, especially if you're, like I said, a 1-minute junkie. But if you're trading the 4-hour, the 1-hour, the daily chart, like the swing traders out there, in that case, you probably want to add, if you're doing fundamental analysis, you can add a watch list. I mean, this whole thing, that's what I trade. I trade all of this, because I don't specialize in the NASDAQ. I don't specialize in gold. I don't trade, specifically these things, because I trade fundamental analysis first and foremost. Fundamentals, sentiment. I use a system to spot. The chart matters less to me than the fundamentals and sentiment matter to me. Does that make sense? If you trade the 1-minute chart, I'm not picking on you. We all know you have an issue and that you're struggling with it. We get it. If you're a 1-minute chart, all I can encourage you to do is, have you seen the 1-second chart? I don't know. Something to think about. It might get you even more of what you're looking for. I'm kidding. There are people who trade the 1-minute chart just fine. I'm totally just, I'm being biased. You guys know I love the daily, the 4-hour chart. So the 1-minute chart scares me. I've done this for a long time. The 1-minute chart is terrifying. So yeah. But yeah, no, there's some people who do great with the 1-minute chart. I'm not here to tell you can't trade the 1-minute chart and you can't do fine. But the 1-minute chart, man, I'm afraid to see what your house looks like. I feel like it looks like a mess. Like, I'm just curious. The average 1-minute chart trader's house has got to be messy, right? Maybe not. Maybe it's the opposite. Maybe they leave all the messiness on their 1-minute trading, and then their house is like super clean. I don't know. We need a support group for the 1-minute chart people. The 1-minute chart people, these are the guys, these are the girls that they run marathons. Hey, fun fact about me, I've run a marathon. So maybe I should be trading the 1-minute chart. I ran a marathon against my will. My wife wanted to run a marathon, and there was just no way I'm letting my wife run. First of all, I can't let my wife run a marathon without me. That would just be sad. But two, I also didn't want her to be running out in the all around, at the time when we were living in Atlanta. I don't want to run around Atlanta by herself. So I had to train with her. So I might as well run the marathon with her. But I feel like 1-minute chart people run marathons. They have a messy house. They are like super, down for anything. Like they're probably the fun type of people, to be honest. No, I'm kidding. There are people. You're married? Yes, I am. I'm married for coming up on 2.5 years. Now that is skill right there. Running marathons while also trading the 1 minute chart. It's pretty incredible. That'd be a record setter. Take a look at oil. I would, the only thing that I don't like about your question on oil is I think you need more question marks. That's the only thing missing from your question. If you added like 30 more, I'm pretty neutral on oil. I was looking a possible short setup on oil if it tapped back into the 66 area, but the reading on EdgeFinder has since fallen off. So I'm just neutral on oil. So probably no trade setups for me at this time. Dollar yen retracements would be interesting, but we're just straight down right now. Dollar Swiss. Dollar Swiss looks pretty oversold. If it does give me a bounce back up into these areas, maybe a short, but I have to be really careful with that because that's where you get into really expensive swaps. NASDAQ, gold, euro. These are all, so NASDAQ, I'm waiting for a breakout and retest opportunity before getting bullish. Euro, just straight up overbought. I would love to buy it if it gives me a dip. Gold, I'm trailing stops. Silver, technicals are tricky for me on silver. Let's take a look at silver really quick. Like silver, this kind of move could be good, but that's pretty much all I see on silver. The Aussie dollar looking pretty interesting here. Oh, let me not mess up my watch list. Looking for this on Aussie dollar. FTSE, I don't really trade that one very often. Pound dollar. Retracement would be interesting. So there's like a whole bunch of stuff that I'm interested in, but a whole bunch of stuff is not pulling back. So I'm really, everything's kind of like one shot in one direction, and that will change. But right now, it's not changing. So if we can get pullbacks on Euro CAD, there's a lot of trade setups out there for me, but I just need some pullbacks. So I'm really just waiting patiently for new trades and managing the existing ones that I have. Bitcoin bullish is an interesting idea. If I pull up Bitcoin's chart, I'd love to see this one start to break some structure resistance like this. I like that trade. So there's trade setups out there for me. They're just not quite ready. Nick, do you have kids? No, I don't. What is the best pair to start with as a beginner? Gold seems fun and understandable. Gold is a lot of fun, but it's also a lot of nightmares. Gold is not easy. Nothing is easy to trade. Just for the new guys and girls, nothing is easy to trade. Nothing is easy money. Because think about this, if there was an easy to trade chart, the biggest players in the game would just absolutely dominate that space, and it would not be easy anymore, right? If euro dollar was easy to trade, quote unquote, right? Institutions would just play ball and would no longer be easy. There's no such thing as easy. Biggest tip for beginners that I would possibly have is go through the free content that I have in my playlist section on this YouTube channel. Watch as much as you possibly can. Take a bunch of notes. Demo trade. Back test. Don't trade a live account with a bunch of money in it. You're likely to blow it. It's going to probably take you 3+ years just to get to a point to break even. That's the truth about trading. Nobody wants to hear it. Most people would ignore it, and it'll be a very costly lesson to them, and then they'll quit trading and call it a scam. That's the reality. If you actually like this stuff, watch videos on it. Take notes. Take it slow and steady and approach trading with some humility, and you might actually stand a chance to become a profitable trader someday. But most people will not. Most people absolutely will not. Nick, what's your opinion on Tesla? I like the company for the long term. I think it's super innovative. It's a high risk, high reward stock. It's very expensive stock in terms of its valuation. I own a good bit of Tesla. I think Elon Musk he's a controversial figure, but he's a brilliant businessman. I've liked Elon Musk as a CEO for a long time before all this chaos in politics. Tesla's a pretty incredible product, and I think it has a lot of upside in the long term. But it's a super highly valued stock. It's super controversial stock, and there's just a lot of unknowns with it. Are people going to like massively boycott buying Teslas going forward? I don't know. I kind of doubt that. But what was the you guys remember the am I looking at this correctly? Anheuser-Busch. There was like some beer commercial. Remember the beer commercial? And it was like super politically charged, and a whole group of, Bud Light. I think that was Bud Light. Bud Light is kind of like, in America, your classic, like, I don't know, it's just like a dude's beer is what I think of, like a back patio dude's beer. And they chose to do some promotion with it that was very not suited, I think, to the average demographic for that group. Not saying I agree or disagree with it, but whoever was in charge of that marketing should absolutely have been fired. Like, they're just wrong audience. Like, again, not saying I agree or disagree with what was shown. I'm just saying, like, you have to know your crowd a little bit better than that. But clearly the stock is still, struggling from that. There was some serious, probably long-term, someone in my family, he used to drink Bud Light and will not drink it to this day because of that. So I drink Bud Light. I don't care. That stuff doesn't but there's a lot of people who do care about that stuff profusely. They're like, man, I don't know. You guys ever had Bud Light Lime? It's like, yeah, I like that beer. But my point is there some, I don't know if I can say this word correctly, irreconcilable damage, irrecoverable damage to Tesla's brand because of Elon Musk taking a role in politics? Maybe. I mean, I think the products are cool. I'm a Tesla shareholder. I'll tell you what I want real quick, and then we're going to pass it over to Chris Pulver. I want Elon Musk to get out of politics and to come back and run Tesla. He's a great CEO. I think he should be back at Tesla running CEO. That's my opinion. I think he could do much bigger, better things. I'm not saying what he's trying to do in government is not a valiant effort. I think many people agree we probably need some better efficiency in the government. But his role is really important at Tesla, and I want him to come back. So anyways, I'm playing for that. I think he will come back. I think, Tesla's down 50%. I think shareholders are going to get his attention eventually, and he's going to come back. And he's going to get focused on that stuff again. How can you do all that in the government and not have that take away from being Tesla's CEO? So anyways, we're going to pass over the stream to Chris Pulver. I've been on for a long time here this morning, so thank you guys for hanging out with me. Subscribe if you're new. Remember, EdgeFinder sales ending soon. It's 45% off. It's biggest discount that we have all year long. If you'd like to take advantage of that offer, click the link being dropped in the chat to speak directly to our support team at A1 to get a copy at the lowest price of the year. Up next, we got Chris Pulver. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, how we doing? Happy Wednesday. Markets are down, probably thanks to NVIDIA. NVIDIA last night had some news that their exposure to China is probably not going to help their current situation, and they gap lower. Big enough company at 2. What trillion? Market cap is $2.57 trillion, and we see a gap down here. So not a huge surprise that we see NVIDIA is down about 6% on the day, still hanging out around 105, but from a close yesterday, down about 6.5%, dragging the markets with it at top 3 market caps. On the subject of Budweiser and beer, actually, I was looking at the fundamentals. I mean, Budweiser is okay, even though it is kind of foreign owned now. I do wonder what tariffs look like for your beer company. I looked at also Molson Coors, which is ticker TAP or symbol TAP. Both of them have, fair value much higher, which I think is impressive. Molson Coors actually at a 10 times price to earnings is actually, to me, fundamentally stronger than Bud. I haven't looked at this one in a while because the options premium are not fantastic. But I think in an environment like this, I did buy some TAP and Pepsi and like all the beverage companies I looked at. Like if this is a defensive, meaning like there's way less volatility. Look at the beta here. Beta is 0.09. It's hardly correlated to the S&P. Okay, so if I were to buy, and this isn't a bad spot. I think if I were to buy some shares here and say, okay, I've got about a 3% dividend, which is okay, but a very low beta position. So the probability of keeping 3% every quarter is fine. Or I'm sorry, 3% every year is fine for the money that I invest. But if I said position 1 at current price and position 2 down here at these basically COVID lows, area 1, area 2 to align some shares, it may not be a big gainer overall, but if it was, position 1 at 60, position at 40, break even around $50, this has this potential to get to $55, $65, $75. What I thought was interesting is the fair market value with the discounted cash flow model at this low of a price to earnings is $180. Now, have we been there before? Have we been there before? I mean, yeah. 2012 to 2016. I mean, this reached $112. So we haven't been to the 175 zone, but even if this is, I start here, area 1, buy back in area 2, break evens in between. Even if this is a range, there's still profit to be made on price appreciation and dividends. I don't see it as a bad trade. Could this get worse? Maybe. I think fundamentally it's pretty strong. I think Molson Coors is positioned better for some upside or resiliency versus a like Boston Beer Company. I was shocked to see. I think it's is it Sam? Yep, for Sam Adams, Boston Beer Company. Look at this freaking meme stock. This was insane. I remember looking at this when it was up into the $1,000+ zone. I was looking at opportunities to short. We ended up going all the way up to $1,350 before this thing crashed. And here we are at $240. It's still really expensive. And take a look at it fundamentally. It's like, I don't know why the stock. This was, I think, in the days of seltzers being in the big thing. And I have no idea why Boston Beer did what it did. It was something maybe Truly. It was like in the seltzer phase. So it was like White Claws, Trulies, all that stuff. No laws with a clause, as they say. So Boston is Sam. But snowflake wise, less. I think TAP is slightly better, way less volatile. Price to earnings 45 instead of 10. Look at it versus his peers, like fair value, but it's like it was a $1,300 stock at one point. So anyway, point is, I don't mind looking at TAP, but if I started it now, if I start a campaign to buy TAP now, I've got to be prepared for another level to buy back in. So let me see a drawdown here. If I took let's say 100 shares, I mean, that's no joke. Like I could have a $6,000 investment that's going to be down to about $3,500, and I'd have to buy back in for some more. So do I really want to allocate, 10 grand for a 3% dividend? Not necessarily. I feel more comfortable doing it with something like that's a really strong dividend like MO, And I'll ask you this: in a time of struggle, I think that probably beer and cigarettes are still going to play really well. Unfortunately, it's the dirty portfolio. Most people don't think about it, but if you did, oil, gas, big energy, cigarettes, tobacco, or like tobacco, alcohol, the stuff that it's like, oh, ESG is against it, and the world it should be better off without it. Like, well, these companies still make money. When I was last week traveling, and I was with some family, we were talking about like North Carolina, Philip Morris, North Carolina tobacco. I don't know how many decades and decades that company's been around. Probably since like late 1800s, early 1900s, and it was industry. And you think about how many people were like in the doctor's office having a cigarette, and it's just crazy. Like our culture, like people are stupid. Like it's rare to see it now, but the point is, investing wise, get over the optics of like, oh, it's they cause cancer. Well, they also spend the most money on anti-drug campaigns out of necessity because they have to, because they're kind of mandated to. But people still, smoke, and they still drink, and they still vape. And when times are tough, maybe it helps take off the edge. So point is, I don't mind TAP. I'm looking for a bit of a better value here. I might kind of wait this out and see if it drops down to like 50 or so. Let me keep this really simple for today. I've got an interesting thought on the S&P. Okay. So here we are on the weekly time frame. And the backside of this trend line, which was a April low, August low, we broke through this in this floor during the March 13th low, and then we have our April 7th low. Those are 2 days to remember for 2025. Here is the backside of the trend line. Okay. Now, did the weekly chart hit the 200 moving average yet? No. And this is why I keep saying I don't think that the lows are necessarily in. Now, does this mean that we're going straight down to these lows again? Not necessarily. This whole idea of pausing tariffs, now having this big negotiation window for the next, I guess, 80 something days, maybe 85 days, 83 days, until I'm not sure what the exact deadline is, but somewhere between like July 4th, July 9th is our 90-day windows up. Make sense? So if we are going to come, kind of low to high, higher low to higher high, this might still have room to get up into like 5,700, 5,800 on SPX, or maybe the 560 zone on SPY. But because we haven't hit the 200 moving average yet, I just want to go back in time and see how important this has been technically to some really key bottoms and really key buying opportunities where the printing press gets fired up. We start talking about, where's that Fed put? Well, we had a bear market in 2022. It hit technical support on the weekly chart, and lo and behold, that was close to the bottom. We hit it once, we hit it twice, we bottomed out, and off you go. It took months to get out of this trough, but we still did it. It was essentially the low, and the markets rallied from there. Now we've given back a lot of that. We are back. We're barely above the all-time highs from 2022. We've pretty much given back most, not all, but most of the gains in 2024, because this is where we started to break out in 2024. So we've taken back probably half the gains from 2024 right now based on this little rip we had last Wednesday. Go back in time. Okay, COVID crash, and this is no joke. Like we went through the lows by another 18%. So it doesn't mean that it has to automatically bounce here. But I'm saying that if we revisit fresh lows and we can breach this by maybe 10 to 15%, the average bear market is 35 to 37%. Right? Average bear market 35 to 37%. So from the highs, this is the average move. Could it get worse and go to 50%? Sure. Could it be not as bad and be only at 21 to 25%? Sure. But average bear market in history has been about 35 to 37%. I think technically this market moving just below this 200 moving average on the weekly time frame would be a spot to start looking again for same thing as we did here. This was dropping, selling premium, selling premium, selling premium, looking to see if price wants to head a little bit higher off of a kind of a bear trap. Okay. So if I'm looking for a bottom, if this is 1, 2, 3, if this is a 4, 5, wherever this is going to be done, I would be looking for opportunities to buy low. Okay. And, is that a generational opportunity? Maybe. Maybe how far away it is. If we're 35% from the all-time highs, you're talking about a 40+% gain to get back to the upside. So let's measure this really quickly. Let's see what 35%. Let's go average bear market. 35% takes us down to about $400 on the SPY. Okay, so we're at 400. Well, if we start positioning at 400 back up to highs, 400 back to highs is around a 50% gain. I would be happy to start, getting a little bit more aggressive, still having dry powder, still understand there's risk on the trade. And, 35% is not 50. We could still go lower. We could take out the bottoms from 2022's bear market, because what I've said here is like, there's nothing good technically below 480 on the SPY, nothing good. In fact, to me, it's like, it's actually quite scary. You go out to an outer trend line here, which I'm not sure why my trend line disappeared, but take this low from the great financial crisis to the COVID low. And this is what scares me about this 480 level. If we do not hold this resistance becoming support, if we don't hold this level, my biggest concern is that this is open season for bears to do some major, major, major damage. We can take out the bear market lows in 2022. We can come all the way back to COVID levels. This would be your outer trend line. Now that is to me, kind of a no-brainer. Holy crap, I'm positioning for the bigger picture. But how much damage is done? A ton. And I mean, I just think that this year has been, I think we could say like everything about this year has been like 180 degrees different. Everyone was super pumped about the Trump administration, super pumped about deregulation, super pumped about tax cuts, super pumped about pro-business administration. And what's happening? Global trade war with really no plan other than retaliation, potentially forcing the hand of countries to align themselves with other trading partners. And what does that look like for the U.S.? Isolationism with a rising fiscal cliff. Well, that's not good. And boy, were analysts wrong, So I think that Buffett always goes back and says, like, don't bet against the U.S. But having said that, Buffett's also a guy that for Berkshire Hathaway has $300 billion in cash sitting on the sidelines. About 20% of Berkshire Hathaway is sitting in cash. And probably the rest of it sitting in low beta, like value that is still worth hanging on to, and dividends that are still worth hanging on to, and probably much less correlated than just trading the indexes. So try to keep the charts really clean and simple. I think this weekly chart is important because nothing good happens below 4,800. So if we break the fresh lows, nothing happens. I think in the best case scenario, if we breach the lows, it's a bear trap and the market can respond to there. That would be kind of the best case scenario, is if we breach those lows, it's a bear trap. If we breach those lows and it still is, clawing lower, if the bears are clawing lower, then this is what really has me concerned about the next couple of years, is that we've got no real technical support until we're talking great financial crisis lows, COVID lows, and we're talking SPY at 300. We're talking S&P at 3,000. We're talking, that would be roughly I think that's around the 50% zone. Yeah, that's about 50% off the highs. That will go down in history. If that's the case, we're going down in history as bad as great financial crisis, as bad as .com bubble. And of course, we're doing this at much higher valuations, and you're wiping away basically 4 years of gains since the COVID bottom. If we got to 50% correction on these markets, you're wiping away 3 to 4 years of gains, and that's going to sting. So I don't think that between fiscal policy and monetary policy that we're going to necessarily let that happen, but clearly a lot of things have to get fixed. And that's where all of this is uncertain, is how do we fix it? Is it sustainable? Is it just more of the same until the whole thing just runs off the rails? I don't know. But what we can clearly tell is that the whole world is a part of this game. The whole world is a part of, the same liquidity bucket. If the U.S. is struggling to find, thorough liquidity, I mean, look, if you think it's bad in the U.S., trade elsewhere. The liquidity in non-U.S. assets is way worse. Ask anybody that is forced to trade their stock market in an emerging market and how bad it is as far as like what you pay, your commissions, your fills, the labor you have to go through. It's like we are so lucky to have trading at our fingertips that wasn't like this, 20, 30 years ago, right? So anyway, there's always a few things to be mindful of and thankful for. It's like we still have liquid markets. It's not a fun environment. I know we've had some crazy intraday swings, but the point is, here's a good thing to look at. Today's gap lower is probably due to NVIDIA. Okay. But if the market shows some resiliency today, let me take a look and see, do I have analyze charts? So right now, we have the advanced decline line is gapped lower, but it's kind of stabilizing. Okay. Tick is actually showing some volume to the upside. So we're showing some resiliency. Like broader market is kind of hanging in there, even though NVIDIA is down today. That's fine. Right. And then we'll go to the heat map and see what it looks like this morning. Let's go FinViz heat map. So NVIDIA down 5.98%, dragging down semiconductors. Micron at 69. I've got Micron puts out to like $50. Everything in semiconductors is red. Apple down 2.38, 197. I think I closed out Apple already, so I'm not worried about it. Amazon's down, Microsoft down, Tesla down. We're at 250. I'm hoping Tesla can at least respond to a 255. Otherwise, I'm taking another assignment on Tesla with an ownership around 245. Less than that, actually, but I'll still do a quick repair. I've got to trade through earnings, which is kind of annoying. So I might do a very deep in the money income play on Tesla. So stay tuned for that one because the trade I have running right now on Tesla is a 265 by 260 by 255. Let me go here. Tesla. This is the expiration for Friday. So either one, Tesla gets above 255 and it makes some money, or two, I mean, even right now, if we're staying at 250, my break even on this trade, and this goes all the way to Thursday's expiration. So 255 minus 5 minus 2.03. I actually have a break even at 247.97. So coming into Thursday, if we're hovering around $250 on Tesla, I can still make about $200 on the trade based on my break even. If I still take the assignment at 255, well, I own it at 247.97. I have earnings on the 22nd. There should be some earnings premium that I can play with for like 1 or 2 weeks out, and I might go deep in the money and do like a 200 call. So I don't have to do it yet, but this will be something I take into next week if it's not above 255. So that's another, like last week, I needed Tesla to stay above 247.50. It did. I closed out for about $7,000 in profit. This week, I need to see if Tesla can get back above 255. If it does, $200 profit, and I've got this on 5 accounts, so about $1,000. And I've got another one out to 195 in May, another one here 245 in May, and then a wide credit spread that I sold during this big drop, 190 by 130. And this one I'm willing to kind of own. So for all these trades on Tesla, I am willing to take little chunks of shares. I took 100 shares and I flipped it in 3 weeks. And I could have flipped it faster, but I wanted to. I mean, I was rolling it for like $3 to $4 a week, and that ended up adding an extra like $1,000 to my bottom line per account. So anyway, that's where we're at. Let's do some top down. I just want to share that bigger picture weekly chart in case we are not done yet. I still think this market in this kind of window, any good news is probably going to be seen as positive for the market. We get back to these Wednesday highs. That's from last week. I'm still watching that level very carefully. So anything to come in and fill today's gap would be nice. Anything come back to Wednesday's highs, which the SPY hasn't done yet. I'd love to see that as an opportunity for the bears to say, okay, nice work. Now it's time to claw back a little bit. Now, I don't know if we go all the way back down to lows, but does it feel like anything is fixed right now? That makes sense? Is anything fixed? Nothing's fixed. All we have done is delayed the 90-day window. So instead of tariffs across the world and nobody knows what's going on, and everyone's head spinning, volatility crazy, all we did is we went, hey, look, 90 days before tariffs take effect. And now it's time to talk. Well, hopefully we're talking. Hopefully we're negotiating. And that does give a window to say that this little crash was event driven and not necessarily structural or systemic. Make sense? So there's time to see that right now, April, May, June, July, pretty bullish window historically for stocks. July 4th to July 9th is going to be the next window on tariffs. That does get us through a round of earnings. I am looking at some earnings plays. I have a trade on Netflix going out a couple of weeks. I've got DHI going out for this. I think it's this week. DHI. Yep. So I sold some premium here on DHI. I think they have earnings tomorrow morning. Yep. So tomorrow morning earnings, and I need price to stay within about a 2 to 4% range, and I can make some money on this one. So I think I pulled in. I'm not sure what the trade is. I pulled in. Let me look at the trade here. DHI. So I pulled in about almost $6 in credit, and it's already up, 3%, no big deal. But my risk on the trade is around $300. So I'm risking $300 to make potentially $600. I won't necessarily hold it all the way to expiration, which is end of day tomorrow. But if the earnings comes in a little bit quiet, that could be good for this trade. Usually the 1 day earnings print is about 1 to 3%. So I'm kind of counting on that and positioning for that to make some money. Okay. All right. So what else is going on today? We had Canada hold rates. Anything on currency strength that stands out? Swiss is still stronger. That shows some risk off flows. Yesterday, we had New Zealand pound and Aussie on top. That shows some risk appetite. Swiss was weak. Today, flipperoo. Euros on top, Swiss on top, Japanese yen dumped here around 420 in the morning. Dollar still weaker. So let's have a look at currencies in a little bit. But yeah, Swiss is still getting some additional safe haven bid. S&P down about 1%, but clawing back. I mean, we gapped lower essentially. This is what it was on the day. So we gapped lower and we're just kind of neutral. So intraday price action has been pretty quiet. We gapped lower and we're just holding. So I had a nice little win in SPX this morning. SPY, same. Equal weight, same. Let's go this chart here. I'll go to SPX and then switch charts. This guy. Futures market, still pretty quiet. NASDAQ, gapped lower. A lot of that, again, NVIDIA, Q, same thing, NVIDIA. Dow, not as bad. Gapped lower, but are we going to fight the good fight? Maybe. I'd love to see the bulls able to come up to this gap. We have a low right here that we did find resistance. If we can go a little bit into this zone, back to this 200 moving average, I think this is the spot where there's a lot of resistance ahead. The bears would probably be willing to defend, that kind of 200 EMA on the daily time frame area. That's on the SPY. That's the QQQ. That's a bit of all of them. Okay, Russell, responded off these multi-year lows. I think Russell is somewhat encouraging. If price is going to revisit these lows, I think Russell looks pretty good for a longer term play. I mean, I sold some puts on Russell all the way down to 105 and 100 for some income. But looking at this, like where the price stopped on the Russell, if we can hold these lows, and if we can hold these lows long enough that the Fed does start cutting rates, I think this helps small business. I think this helps small caps. So, I'm not saying Russell's going to be like this fantastic bullish trade, but if Russell comes back down to the lows again, that could be divergent. That could be a nice little, double bottom. Define risk. I wouldn't want to, hold on to this and say, I'm going to buy shares at 170 and then, watch it dump to 100. But if it holds 170 and we go back to, 195 or 200, that's still a really good short-term game. If we come all the way back to the highs again, well, that's a heck of a gain. So I might consider like a diagonal spread. If we pull back to the lows around 170, I'm looking at a diagonal spread, which is I'll, buy calls out maybe 12 to 24 months. And then every probably 30 to 60 days, I'll sell a call against it and see if I can, lower my debit down to, maybe $1,000, but I've got $2,000, $3,000, $4,000 of upside. Something along those lines. So that's something I'll be watching on the Russell volatility index. It's red today, but we did have an elevated move with that gap in Nvidia, and the market's down obviously, so volatility up slightly. I'm still wondering how much lower this goes. I think we're going to be dealing with more volatility. I don't think we're settling back into the teens. I think volatility in the low 20s would be probably welcomed by most investors right now, considering we were at 60. But if we get back above 30, we're right back in the thick of things where things are uncertain. Things are, intraday swings get a little bit wider and crazier. So just be careful what you wish for. Nice thing is bond volatility is going down a little bit. Let's have a look at TLT, SPXY. I'm gonna get rid of these shares in a couple. If the volatility index goes down a little bit, I'm gonna dump this for a small win. I'll probably take like maybe $2-3 of profit. I'm not trying to be greedy on this one. I bought some shares of SPXY. Dollar index. I see oversold conditions. I see divergence, but I don't see any price action suggesting that the bottom is in. So I'm going to be patiently waiting to see, does the dollar index form a low? Does the euro dollar form a high? Does the pound dollar form a high? Are we just looking to see that the dollar demise is upon us and any pullback is to sell? Any pullback to this trend line is to sell, and just focus on the technicals. Don't call the bottom here. I get it that it's oversold, but if this one breaches and breaches and breaches, it gets messy. It's like, just wait. And eventually you can get some buy stops here, get a squeeze trade, and that could be short term or that could be a bottom. But I just don't think it's worth forcing trades yet. If you're still riding euro dollar longs, move stop losses. You're riding pound dollar longs, move stop losses. Aussie dollar, New Zealand dollar longs, move stop losses. Dollar CAD shorts, move stop losses. Move stop losses. If it keeps going, take your profit. Oil. I looked at a 1-1-1 trade in oil. I just didn't like the risk profile. I was risking about, I don't know, $1,500 to make like $150 to $200. It's okay, but I don't know. I really don't have a good sense of where oil really wants to go outside of, because it dropped so quickly. If it just gets shaken out with some indecision, I could see a risk defined iron condor working out pretty well. Or if we bottomed out with the markets and we bottomed out in oil, then I would do like a 1-1-1 trade where I have a buy put and a sell put. I did that backwards. So that's a buy put and a sell put, and then I do a sell put and a buy put, and that creates a little profit trap and then creates a credit spread. I take in credit, and as long as oil doesn't crash, I make money on the trade. But what I'm trying to avoid is, if oil crashes, I don't want to be on the hook for a larger risk than what I am comfortable with. And that was the hard part in futures. I didn't really set it up. I couldn't set it up the way that I wanted. So I'll take a look at it today. I'll look at it. Actually, let's look at it right now. So lows around 55. Let me take a look at CL. I think I looked at it on Monday and I couldn't get my option chain wouldn't fill up. So if I went out 30 days to May 16th or June 20th, or May 16th, June 16th, that's a 30 to 60 day option expiration. If I went out to May 16th, lows around $50, 55 actually, right in here. So if we went lower than 55, so I can buy this put, I can sell that, and this is worth about $430 credit if I'm right. So if we're below 54.50, I've got a nice little profit trap. If we went down to 5,200 or $52, and I spread this by $2, like I get $60 of income. I'm risking about $1,400. I do have a profit trap here if it's needed. There's a 94% chance profit on the trade. I just like a little bit more income, so I could move this down a little bit. Now we get $80. Now we get $80. Now we get $90. It's not bad. I'm risking 1410 to make to safely make 90, or to profit trap and make 590. About a 94% chance profit on this trade. Okay. Now the threat to me in reality is if I move this even lower, but now it's a debit. Like I'm not getting the mechanics as far as like a profit trap. I'm not getting what I want. I'd have to go a little bit wider here. So if I went, this would be a trap plus the 50-50. Let's go out. Look at the difference. Now I'm risking $2,400 to make $90. So, I have to move this up a little bit. I think this level is a little bit better. This one's okay. It's just crazy how much more risk that is to go that much wider. So move this up. That's $1 wide. That's $1.50 wide. Like this one's okay but it's only 40 bucks income. So anyway, this is why I didn't take the trade. I'm like going back and forth and I just can't find what is like the sweet spot of, if I was making 150 bucks or 200 bucks, I'd take the trade. I'd be comfortable with that with the probability, but I'm only making like 50, 60, $70. I don't really love it. So let's see, 52 by 50. This one's okay. You know, I make 80 bucks, so I'm risking max of 1400. I have a profit trap if price were to come down. The lows are 55. I mean, the probability of going lower on oil over the next 30 days, I would think is pretty slim. But it's also like, am I happy? Am I happy, you know, only making 80 bucks in income? I don't like oil that much. And there's no reason that this has to be the low. This is like, well, that was an event. We had a low in the markets. The market rallied off of that, but could this be the break, the pullback, and then there's just more drifting to the downside? Maybe. So I think the safe play, honestly, is just don't force a trade. Not necessary to take the risk. Pound dollar, I said, if you're, pound dollar long, move your stop losses. I mean, it looks like it's got room to run, but the dollar index is oversold, which therefore pound dollar is probably a bit overbought. I wouldn't be buying at the highs. I wouldn't be, looking to short yet. It's like, just if you're not in the trade on pound dollar, wait for better setup. If you're in the pound dollar long, hopefully you're moving stop losses and taking profit. UNG, big freaking reset on UNG. We're about half. I mean, I was long above the 200 moving average. I've had some nice profits on UNG, but it's taken it all back. So the nice thing is I'm at least out here towards the end of the I guess January 2027 is my call side, but I don't know. I mean, I need to just continue to chip away at the debits to make this a cheaper trade overall. Gold. Okay. Gold can't stop, won't stop. We are now one of the biggest moves I've seen, 17.8% above the 200 moving average. And this is, look, this is what I'm saying. Gold could hit this crescendo until it crashes. And I'm not here to call the top. I mean, if we have gold running, enjoy it. There's going to be times to be watching, but it's like, okay, so let's say we make another high and another high and another high. Well, at some point, I got to move my stop losses, right? Like I'm not there yet, but I certainly don't want to be a bag holder when gold is up here, let's say to 3,500, and then it crashes down to 2,800. I don't want to give back those gains. So gold has been a big chunk of gains this year, which has been awesome. I'm still skeptical of, like, without this hitting the 200 moving average. We talked about it yesterday. I think it was in my 3 o'clock session. Somebody mentioned from like the great financial crisis, it went like 600 and some bars before hitting the 200 moving average, which is true. And we're about 385 bars right now. So it could still overstretch. But during that run of the great financial crisis, gold tested, let me go back here into the daily time frame. Gold tested the 200 moving average like 4 or 5 times before it actually hit. So here's your, great financial crisis. So we came, and I don't even know if that hit or didn't hit. I think this actually hit. That's got to be close. Yep. So that hit. That's the yearly 5 period. It's the red line. My 200 moving average is right here post great financial crisis. So right in here. Okay. So take a look at the red line. So we tested the red line there. We hit it there. And then this point right here, all the way to this point was over 600 bars. So to put a bar count there, it was around 630 bars. Now I say that because even though we had that crazy high bar count, right? We tested multiple moving averages in here. We tested multiple moving averages in here and came very close to the 200. Tested it here, tested it here, tested it here, tested it here, tested it here. Capitulation moved to the upside and then crash. So 1, 2, I'll group that as 2, 3, 4, 5, and then we capitulate before we crash. That looks very different Like this was still a pseudo healthy, wavy market before it capitulated and then crashed. Fast forward to now. We've only had pauses, right? So basically we started here. We had sideways to kind of test one time. I wouldn't even say this is a test. This is just sideways. This would be a test because we at least had a pullback, and that's it. So we have 2 tests. So are we stretching to a point where we're just going to go straight down? I don't know. So again, enjoy the run. Gold is doing things that everyone's probably happy about if you have some gold longs. Like I said, I'm not trying to call the top here, but this could be the bigger move where this is going to be like a gold rush and then it's going to break. But I don't know where that top is. I have a suspicion that around 20% away from this moving average, that's about where we would form some highs. And that may be as elastic and reflexive as the market's going to be. But I mean, we're already up 20% from the moving average. So how much higher do we stretch? I don't know. So anyway, am I moving stop losses on gold right now? Not yet. Not yet. Because if all it does is, pauses, evening star, pulls back a little bit, okay, then maybe we have some indecision. Maybe this has a wave structure and then we can buy a dip and take it long. So maybe it's a price pattern that's about to emerge. But I wonder if all this running into gold that just pushes it higher, 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 higher gets like, would anybody be surprised if it's the most extreme again? It's like our markets now are moving faster, more violent, more wild. Like the correlations are breaking right now. This could do something it's never done before. And if that's going to happen, I think this is like, oh my gosh, gold has never been that far away from the 200 moving average, right? Gold's never been 25, 30% away from the 200 moving average. Okay, well, that's the extreme. And then from there, it comes right back to it. And it's the same thing I've been talking about. It's going to hit the 200 moving average probably this year, but it's just a matter of how. So I'm not calling the top, but I'm curious if this is a, orderly decline for a long-term opportunity, or if this is everyone is so concerned, flood into gold, drive this price up, and then we crash later. Because if it's driving up higher and this looks like, let me look at the run. So this little bit right here is up around 11%. Okay, well let's go back and see how history rhymed back in 2009 when we had the market running, and then where did it crash? Okay, this would have been 11, so that would have been where it started. This market on this last little stretch, when we started to see some major capitulation, this run was 30%, 29.6%. Okay. So gold's up 11% on this last little push to the upside. Let's say we go to 25, 30% before we crash. Okay. Just a reference point. Not saying this is right, but if we go to current price and this last little pop here is up around 11%, let's see what 29% looks like. So this little bottom in here is up around 11.68%. So let's say we go to 30. Okay, let's say we go to 30%. That puts gold up towards $3,800. And that's if it rhymes with the 200 moving average capitulation that happened in 2009, 2010, 2011. So I guess for the bull optimists out there, for the bull, maximalists, and they're just loving this, for the Peter Schiffs of the world that just talk nothing but gold and how great it is, this is the first time in a long time that it actually feels like it's one of the best assets in the world. And if it comes anywhere close, okay, if it comes anywhere close to that capitulation that we saw in 2010, 2011, maybe we have a $3,800 gold. Maybe we have a $4,000 round number gold before it crashes. So it would be great. But that's also the time that I would say I'm moving stop losses. My GLD positions, if that is the case, let's go to GLD. If I've got to run this last little bit, probably around 11%. So this low to high is up around 11.9%. I'm just going to throw it out there and say we get to a 29% move. Okay, so I'd be looking at GLD up around 350. Okay, well I own this at like $200. So if I go 200, so I got $150 a share, and I have about 1,000 shares of gold. I'd be up $150,000 on gold. I'm doing something with that profit. Like, it's stupid for me to say like, oh, just let it ride. It's like, no way. That is a lot of money. That's washing away, ton of drawdown. That's adding to the bottom line. And if that's what we're about to deal with, the gold is one of the biggest extreme moves ever and the most capitulation that we've seen since 2010, 2011. Good. Bring it on. It's a good hedge, right? It's a good asset to be holding in the portfolio. So just trying to make some sense of it, not calling the top, but at some point it will revert. And I don't know when, I don't know why and how, what the catalyst is going to be. But do we hit like some type of, like I said, apex or crescendo where this is everything's about gold? And here's probably what happens. And Nick can probably allude to this more with like retail positioning on gold. But right now, what I keep reading is it's not retail traders that are long gold. And so what I'm wondering is like it just keeps going higher, 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 higher. And all of a sudden, retail traders are like, man, gold is where it's at. And they start buying gold and it's like the freaking top. And in natural fashion, they have just this tiny little window to be rewarded. And it's just going to be the worst timing ever for the typical retail crowd. So if it's institutions that keep buying, if it's central banks that keep buying, they can just keep bidding, to take this thing higher. Eventually, when the retail crowd jumps in, I think that's where they're going to be the bag holders. And we see the reversion that I'm talking about. So just throwing it out there, having a little perspective on the markets, looking at the big picture for the S&P, looking at gold with what has been one of the best performing assets this year. Gold this year, I mean, this is the 12-month chart. You talk about a bull market in the last 2 years of gold. Gold this year is already up around 25% and plus actually 25.5%. The last 2 years, gold is up 60% since last year. Since the start of last year to now, gold's up 60%. It's a pretty impressive run on old precious metal. Okay, so just some perspective. Is silver hanging in there? It's looking better. Silver's come back, most of that crash we had since the 3rd, 4th, and 7th of April, which is kind of nice to see the resiliency there. Bitcoin still hanging in there. I think there's sideways action as long as we stay above 75. Stay above 75. Sideways, I could see sideways, but risk on would be nice. We get some risk on. It'd be nice to see Bitcoin try to revisit highs this year. MicroStrategy stayed above 310. I've got a May expiration. I could get it called away. 300 shares. Let me look at my break even on Bitcoin. I want to say my break even is down in the 220s. Rolled 254. Not quite 220s, but 254.97. Get it called away at 310. So about $16,500 on MicroStrategy if it stays above 310. IBIT took some profit this week. Ethereum still not touching this thing. Copper's looking good. I've got expirations out to 424, which is only out about 8 days now. Hopefully, I'm going to see if I have most of the profit on copper. I might end up taking it. So copper as a whole is up around $1,000. I think I'm up. Let me check one account here. I mean, I'm up about 83.5% of my max profit. It's not bad. Let me see. So 80% of max profit, I can just take it, move on, not worry about it. I'm curious on the fill though. So if I close this down, a 10-cent debit, what I get into the trade for? I got in for 70 cents. Close it down for 10. Let me see if that will actually close. Also, I mean, what might be helpful is I just sit on this over the weekend. More time decay coming to this one next week. So that'd be 17th, 18th, 19th, 20th. Sit in this for another few days. This is probably up into like 85, maybe 90% of max profit. I could just take it there. Not that I'm not that worried about it going to expiration. The option chain is pretty good. I mean, 4.18 is the level. That's literally a 3 delta. So I've got about a 97% chance that stays, out of the money. And that offers up a potential profit trap of another, I guess, what's 0.10. I mean, that profit trap would be pretty awesome. So there's about $160 winner with a potential like $1,000 profit trap. But it's doubtful we're going to get back there because we'd have to have like another pretty serious crash in the next 8 days. So resiliency in copper, encouraging. Japanese yen still clawing out some higher highs. Nikkei fighting back. FXY doing a lot better. This is still, I'm long shares FXY like Japanese yen hedge. EWJ in positive territory. I'm up about $2 a share right now after $2 cost average levels. So I bought some here. I bought some here. My break even 65. If this gets back up to 71, I might take the profit on the Nikkei and just move on. This is this one, it dumps the bottom like I think it dumps the bottom 10% of the Nikkei or the bottom 15% of the Nikkei. We go. The fund excludes the bottom 15% of Japanese companies. I mean, I'd love to do that in the S&P. The bottom 15%, like buy the S&P 350. You know, that's a little bit more like market cap, a little bit broader, but you dump any struggling companies in the S&P. I don't know. I'm curious how that performed. I mean, obviously Mag 7 has been like the S&P the last couple of years, but all right, moving on. DAX. Resiliency, maybe looking for a cup and handle here. If this is a V bottom, crash up, a little pause, a little consolidation. This could be a V bottom. I think we could still see some non-US performance. DAX looks pretty good. Eurostoxx looks pretty good. If that's a V bottom off of the 200 moving average, I think a cup and handle pattern could be pretty strong. So some indecision here would go a long ways. A break higher, I would take this back up to highs on DAX. Eurostoxx, same thing. Now, if it just goes straight up, like it's hard to trade that. If it goes straight up, it's hard to trade that. But if we go straight down and we pull back and it pauses, well, then a breakout, we get to the highs. So look for a V bottom or some type of cup and handle pattern. FTSE, similar thing. I don't love the structure of the FTSE, but it may behave the same way. This might be, this trend line might just be, it doesn't matter. You know, the market dumped and corrected, and now it's here and it's pausing and maybe goes higher. But I think the structure of the DAX and FEZ is a cleaner chart with some more bullish posture. Argentina, I missed my opportunity to buy the 200. It'd be up about $9 a share right now. I missed it. It's okay. I'll see. I'll see if I get a pause or a pullback. This also might just be setting up for like a longer consolidation zone. So maybe we have, you know, one more test of the low. I don't know. I still like it, but you know, what's the upside? I'm kind of guessing and gambling. I don't know where the upside is. Technically, this has been in an uptrend since 2022. So does it chop around here? We've had a heck of a run. I mean, from 30, it's up like 200% for a country ETF. That's pretty good. Yeah. China also looking for a bullish pattern. If this is a low and we pause right here, that could be a nice little chance to get back into this pocket, possibly coming back to revisit highs again. So that whole idea of like non-US interest, so Germany, UK, Latin America, China, India, could be a lot of places that have some attractive looks. Watch for a pattern. Okay, Brazil, same thing. You know, it's below the 200 moving average. I've already taken some shares. I'm still holding, but if we get above the 200, I think there's good upside potential. I'm just going to wait. Mags, Nvidia brought it down today. This is another one that I might be considering long. I don't know yet, but if Mags gets back down to the same lows we had from April 7th, I'm probably going to get long Mags. And I'll just get long through this instrument. In fact, I might even consider a synthetic. Where if we come down to the lows again, I might look at getting, you know, buy a call and sell a put at the same strike, be synthetic long, this thing's down 30+% and see if there's some resiliency there and see if I can make, you know, maybe $3, $4, $5 a share. So that low 39 up to, you know, 46, 47, that was a pretty nice chunk. So we'll see. Apple, I closed out the ratio spread for profit. I'm happy. I don't have to worry about it. Amazon still has some work to do, but I still love Amazon. I think the big sign here would be if we get back above the 200 moving average, have a bullish pattern, maybe get back to the highs. Right? So if this is setting up some type of structure, we get back here, head and shoulders, Amazon gets all-time highs again. That's if we get that play. Otherwise, it's, you know, down and down and down and down and down. Wait for a break, wait for a falling wedge, and then we've got a chance to get long on Amazon again. I sold a lot of premium to Amazon during these lows. This was out to June. This is a ratio spread. So as long as we hold this low at 162, I've got this down to 150. Hopefully a nice little income trade there. Broadcom staying out of that one. Google, dollar cost averaging, purchase 191, 176, and 150. We're trading at 155 right now. Have some time in those income trades. Meta, I noticed Meta gap lower as well. I'd love to see Meta coming back to this level here. At a minimum, I'd love to see a pullback towards the previous 2021 high. There's a huge gap back here to fill, and this is a previous all-time high. So if we're below the 200 moving average, I don't think much good happens below that. So if this is, chop suey, chop suey, chop suey, chop suey, that's fine. Wait for a trend line break, let this thing round out. Really good opportunity long-term on Meta. Diagonal spread would work out for me if I went out 1 or 2 years. It's a lot cheaper than owning the stock at $400. I could probably do a debit for, maybe $2,000 to $4,000 versus $40,000, and use a couple of years window to get it right. Microsoft, we're trading at 378. I already took profit in this one, but I needed to stay above 370. That was a ratio spread, so everything on Microsoft's looking pretty good. Netflix, I took an earnings trade on Netflix out to May 2nd. We have earnings tomorrow after the close. We won't really get a chance to trade it. So that's why I had to go out to the 2nd of May. So I'm going out a couple weeks. But if Netflix is, I don't think Netflix is really affected by tariffs. I think Netflix is more like, hey, how are their subscribers? If Netflix can breach a high, that might be pretty encouraging to investors to see that, good stocks are still doing well. Earnings are still positive. The market's excited about something. As opposed to if news comes in negative, it's like, well, there's just more terrible sentiment to digest in the market. So hopefully Netflix is, king of streams. This is a bar count that I talked about earlier in the year. That was a large bar count all the way back here into October 2023. That's why I was bearish on Netflix as we started to get oversold or overbought conditions. I was bearish going into that 200 moving average and took some broke wing butterflies, bear put spreads. Those worked out pretty nicely. Then I did some ratio spreads down here, worked out well. The hell just happened? I heard some beeps. I think that was my Thinkorswim. Okay. Okay, that's Netflix. NVIDIA, gap lower today. Let's see what the news says on NVIDIA. Enhancing AI and rendering, April 6th or 16th with more models in May. Price target maintained at $200, maintained overweight by Piper Sandler. $18 billion China meltdown could be Huawei's big break. So what was this? This is what I was reading about overnight. This is why the gap happened this morning. Regulatory brick wall in China, and timing couldn't be worse. U.S. government quietly informed the company on April 9th that its H2O chip, the flagship AI product tailored for the Chinese market, would now require an export license. NVIDIA didn't go public with the news until a week later, leaving some of its largest Chinese clients in the dark. Internally, NVIDIA's own China sales wasn't fully looped in. A nasty $5.5 billion write-down tied to inventory, purchase commitments, and reserve, roughly 6.5 pre-market drop in NVIDIA. Okay, so yeah, that's a big one. $5.5 billion, that hits. So last legal lifeline into China after Washington tightened the screws in AI chip exports back in 2022 and again in 2023. Racked up staggering $18 billion in orders for the H2O, that's a lot. $18 billion in orders from China. Okay, Tencent, Alibaba, ByteDance, all ramping up purchases to fuel a new generation of affordable AI models. But the surprise move by the U.S. officials. I love how they can't fix spacing here. Confirmed to be indefinite, leaves its orders in limbos as a chip. That's crazy, man. So $5.5 billion write-down, looking at future sales of $18 billion that are now completely in jeopardy. Yikes. And that's where Huawei comes in. By shutting NVIDIA's last open door, U.S. regulators may have just handed a golden opportunity to China's most advanced domestic AI chip maker. Well, there you go. And that, ladies and gentlemen, is why globalization is coming to a screeching halt this year. Because companies are designed to make things bigger, faster, stronger, and more profitably. And the U.S. has said, nope, we're not going to do that. Go ahead and try to make things in the U.S. Everything in the U.S. Dumbest idea ever. It's not globalization. It's not free trade. I get it. You can argue that it's item national security and these essential businesses, but if you can't produce it with the same margins, you're just going to compress earnings and your stock market's going to take a huge fall. So anyway, earnings on NVIDIA is going to be out into May. So we have a little bit of time here. I still think this bullish window could be fine, but it's certainly not a good. It's not a good announcement. It's not good news. And again, top 3 market cap, not a good news. So that's mostly why the market's down today. Some resiliency is appreciated, but definitely a big blow for Nvidia. Tesla trading at 248. Potentially, I take an assignment this week at 255. I will quickly jump in with a covered call on Monday. Earnings on Tesla is out to next week, Tuesday the 22nd. So I'm going to get that covered call in. And honestly, I almost think fudge. We'll see. I almost think the better thing would be to do a debit spread, because if earnings dumps on Nvidia, I'll try to make like an asymmetric play. So I'll talk more about this on Monday, but I'll just write this out. So basically this, if Tesla is less than 255 by 417 expiration, okay, I'm assigned at 255. Break even is going to be 255 minus 5 minus 2.03. I think that's what it is. 247.97. Okay, so break even at 247.97. Now, there's a couple ways I could play that. I could come in on Monday. So I have, options. So Monday, I sell a, at the money, and I'll just put a 247.50 covered call. And I probably collect, $15 to $20 premium, and that lowers my cost basis. But what happens if Tesla misses earnings and it drops down to, let's say, $200? Well, then I'm down, $30 a share. So what I could do is Monday, look at a bear put spread and do like a 245 by 200 for a small debit. Like that's a 45 wide. It might cost me like $500 to do that. But if I risk $500, it's like, I think I can make $5 a share on this stock. So if we go up, I'll sacrifice $5 to see this thing rip $20, $30, $40 to the upside and not cover it. Does that make sense? So I think a bear put spread would get me better protected for any downturn in earnings and lower my cost basis, and then add the covered call after I take profit on a bear put spread if it goes down. So something, and again, I could see this thing like deathly disappoint the market and we gap to like 200, 190, 180. But that gap would also be something I'd say we're probably going to fill that gap. So it might be an interesting adventure on Tesla for maybe 2 to 4 weeks, but I'm hoping I can do a quick, maybe a quick flipperoo over about a month. If I can turn it again, like I grabbed like $7,000 last week, if I can flip it again for another, I don't know, let's say more, I don't know. Somebody popping in here?
Hey, Chris.
Chandler, you kicking me off?
I am. Yeah, we got Forex James coming on next, so
sweet.
It's time to transition. But
okay,
we appreciate
I'll see you guys later. Thanks.
Yep, I've been putting Chris's channel in the chat, so make sure to go sub to him. He's on almost pretty much every day, so we appreciate all the commentary that he brings. We got a video coming out soon featuring Chris, so it was pretty cool. So
all right, thanks, Chandler. See everybody.
All right, see you guys.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello, guys. Long time no see. Hope you're all doing well. Wednesday, halfway through the week. Start breathing again in 2 or 3 days. Yeah, been very busy over the past week and a bit, so I haven't been able to come on, but yeah, hope everyone's well. So Swiss yen still in shorts. I've had very little time on the charts recently, so I've not done anything with these positions exactly as they were last time I came on. So essentially trying to use the current Swiss attraction with the risk off move to leverage into some long-term positions to the short side on Swiss yen. Obviously, using that, that's based on the Bank of Japan path to normalization over, it's a long-term idea. So let's say 12, 18 months. Euro pound, I took a long position this morning. Now, Euro pound, I don't think I've taken a long on Euro pound probably over a year, just because it's a really, really nice mean reverting pair. However, with the CPI that came in this morning for the UK, Euro seems to also be pretty steady. I wouldn't say there's necessarily any overwhelming factors for the Euro, but it's definitely stable. Along with the 50% rejection here, again, also lined up with support, bullish trend. It seemed like a very textbook play. Dollar CAD, I did take a long, which actually isn't looking very healthy now. I might close this one just before we have JP come on pretty soon. Don't want to be exposed to his shenanigans. And the NASDAQ, similar situation. I'll probably close this as well just before we have Jerome Powell. But yeah, that's it for open positions. The NASDAQ, again, was more of just a technical play, also with a long-term bias. I mean, the NASDAQ, the S&P, the indices in general are very, very nice to go in for long positions. So if we can start seeing higher lows get formed, which in my opinion we are seeing. So let me just use the trusty brush tool. So we've got the low, and potentially now another higher low, using just the typical fib here that I always do. Again, keeping it standard, bread and butter stuff. Euro dollar longs are looking very, very favorable. I was considering going short on euro dollar here, possibly trying to trade it back down into previous structure. Decided to not do that though. So we can see here on the EdgeFinder, the euro dollar is very bullish. It's up there with gold with a reading of 10, which is very, what do you call it? Well, it's a big confluence, let's say. So euro dollar longs are great. I really like dollar yen shorts as well. So I was reading an article by, I think it was Mufji. I can't remember exactly who it was. They essentially stated that the net short positioning on dollar yen is currently at all-time highs, which is likely to lead to some sort of short squeeze, apparently. I'm not really sure I like that wording, or basically what I'm trying to say is I'll be waiting for some sort of bull move here on dollar yen. So any sort of move we have to the upside, as long as it doesn't break above 150, I'll be looking to go short. Now, if we look at the dollar index here, this is the monthly chart. We've got some serious level of structure here. Now, the trend line, anyone that watches me often will know that I don't really like trend lines. It's not something I'm a big fan of. But here, it kind of makes sense. I mean, we've got a low here that doesn't really line up. But, that's TA, technical analysis, never perfect. But we do have this really strong monthly level, along with this line up with sort of the 99.5 to 100 support. So it's a big psychological level as well. So I'm just waiting really to see, are we going to break below here and possibly even come down towards the 90 support level, or are we going to have bulls take over from here and start possibly climbing higher? I don't think we're going to get either just yet. I think in the short term, so over the next couple of weeks, we're actually just going to see the dollar sideways move, because we've obviously got tariffs that are still in play, but they've sort of transitioned now into more of a background thing, just because it's been paused for so long. What is it, 3 months? A 90-day pause is roughly about 3 months. So it's not now, in my view, you can't trade around it because there's no more data coming out for it just yet. So the dollar is more, I'm more expecting sort of just ping pong moves, in which case I will look to short dollar yen if we can see some upside. Similar thing here with dollar Swiss. The Swiss has been performing very, very well recently. The problem is with the Swiss, though, I don't want to get too heavy into going long on the Swiss just in case we get an S&B intervention. I'm not seeing that on the cards yet, but it is something I'm cautious of. So if I do go short dollar Swiss, it would just be a short term, probably an intraday position. But same idea, I would need to see a pop to the upside, potentially even just a very simple 50% pullback here to this previous low. Let me draw this up. So something like this, I think, would be great, actually, if we could get that. So eyes are peeled. The US 500 This is exactly the same as the NASDAQ in terms of the thought process behind it. We are seeing sort of bullish market structure form. Tariffs have been paused, so we might be able to see some short-term upside on these indexes, at least until we get more tariff news. Gold, as I showed just before, we do still have gold as a very bullish reading here on the EdgeFinder. So I'd quite happily buy into this this huge move, actually, if we can see a pullback, which at the moment we're not really seeing. So I'm kind of, just stuck on the sidelines, really, which is a bit unfortunate because I was looking at gold all the way back here, but unfortunately it broke the entry criteria I was waiting for. It didn't really work out. So I scrapped the whole trade and unfortunately missed all of this. But what can you do? Hindsight's always 2020. We've got the Aussie CAD. I'm not really set on this one yet. I was looking to build a trade idea this morning and didn't really finish it. So I'm not 100% set on if I'm actually going to take this or if I'm even interested yet. So yeah, if I do, the entry point will be around 0.9. Just a nice round number. It would also bring a full correction of this move we had back when we had the tariff mess around. So that would be, that would be interesting. But again, not sure if I actually want to take that trade. Now, the FTSE, I think, is probably one of my favorite ideas. So we did have CPI in the UK come out cool this morning at 2.6. So for anyone that isn't aware, inflation coming down generally leads or reinforces a rate cut narrative. Higher inflation does the opposite, generally leads to a rate hike narrative. Obviously, you need to take in more context. It can more lean towards rate hold. It depends situation to situation. However, in this case, cooler CPI is great. So I will be looking to go long on the FTSE. I think we do have potentially a nice buying opportunity here. So I'm going to have to wait. I don't really like to buy the DAX or the DAX or the FTSE out of session. So I'd have to wait until tomorrow morning for London session to really get into this one. So we'll see. Ball out. Good to see. I've not spoken to you in a while. How are you? Abdul wants CAD yen. Let me see. Doesn't seem like there's anything going on actually at the moment. It's pretty sideways. The problem is the Canadian dollar actually isn't doing bad. It's relatively strong at the moment. But again, with the tariffs that will be starting again in, actually, I'm not sure how many days it is now. But yeah, the tariffs will be starting up again pretty soon. I'm not sure I'm really willing to hold the CAD. I'd much rather go long on yen, to be honest. So I think shorting CAD yen on pullbacks, meeting this 200 moving average is sensible. In terms of targets, I wouldn't be looking for anything down here. I would just be looking for the support level. And then maybe if we get a break and retest, you could look to enter again or trail stops. But yeah, right now, CAD yen doesn't really have anything for me. I'm still long-term bearish, but yeah, just for now, I don't really have much of an opinion. Euro dollar, we did cover euro dollar. There's not really anything too new here. So it's bullish on the EdgeFinder. We do have a score of 10 over here, which is a really, really nice confluence. Tells me that we're definitely on the right side if we're looking to buy. It's just a case really of where. So as far as I'm concerned, we've got structure here that we broke. And yeah, we've got very clean traffic here on the left. So I would like to see that get corrected. So possibly down into the 618 level, then possibly look for longs to go higher. But yeah, for now, there isn't anything to do. It's a little bit too high. I don't want to buy here. Sean, hello. James, S&P buy, oil sell, silver buy. Yeah, ball out. We've actually got pretty much the same ideas. I'm looking to buy the S&P. I went for the NASDAQ instead. Oil, I was also looking to go shorts. Not just yet. I'm waiting to see if we can get into this 50% pullback level again, that would be great. If not, and we start just rejecting these previous highs, I would also potentially take that as well. But yeah, I don't mind oil sells. I think it's quite nice. What else do you say? Silver buy. Yeah, I'm still bullish on the metals, just like I am. I was saying about gold earlier. In terms of an entry, though, you know what? Actually, this looks quite nice. We do have the 200 moving average crossover market structure here. Looks like we might be breaking. You know what? Ball out. You've given me an idea. I'll leave that on the watch list. We've not looked at DAX yet. Okay, Euro Swiss. Sean, why is your head melted? You want to get that fixed. That doesn't sound healthy. Okay, Euro Swiss. Let's have a look. I'm not a fan of buying Euro Swiss already. I think shorts are definitely the play, and the market seems to be reflecting that as well. The problem is, do you want to short into these lows? Probably not. So the only thing I would really be interested in here is if we could see price come up slightly higher, meet this 200, and then potentially short back into these lows. Beyond that, again, this space down here, for me, there isn't any target. There's nothing I'd be interested in there unless you were trailing stops and trying to catch a runner. I just don't see anything apart from that. I am in NAS 100 longs, yes. Shirls, hello, good to see you. Indecision in the market, Sean, yeah. This is why I actually wasn't too bothered about taking last week off, because there just isn't anything to talk about from my point of view. I was speaking to a fund manager, a friend of mine actually, and he was saying he's done pretty, in fact, very poorly at the start of this year for Q1. So that's a little bit of confidence for anyone that did poorly at the start of the year. Don't worry. I didn't ignore or skip your comment, to be honest, my friend. I'll be honest with you. I'm a little bit slow, so I probably saw it and just didn't even register. But I can look at it. But I'll be honest, crypto is, I could probably give you about the same insight that your grandma could. It's really not anything that I am familiar with, to be honest. I can give you the price action and sort of my opinion there, but in terms of direction and drivers, I've got no idea. Okay, well, sell, my immediate idea here. Let's just see. So the weekly's below the 200. We don't have a 200 on the monthly. The daily's below. Yeah, so everything's telling me to sell, but I actually wouldn't mind paying attention to what happens here. So we've got this previous support structure, indecision on the previous week candle, slightly bullish. So if this week's weekly candle could close and engulf the previous week candle, that might tell me there's some momentum left in the market to go long. But for short-term trades here, I just don't see anything. It would just be a case of following this momentum and continue to short the pullbacks. James, why are the market so overextended with few neutral corrections? I would say it's because obviously when we had the tariff stuff, the market's obviously kicked off. We all know that. But then tariffs were paused. So it's not a case of, how do I explain this properly? So let's just use this chart, for example. So obviously tariffs came in, pushed the markets one direction, up or down. But then they're paused. So it's not a case of tariffs have gone and they're all fixed and everything's back to normal, because they're not. It's just on pause. So it's not a case of people are wanting to just buy the markets all the way back or sell them all the way back to where they were before tariffs. But it's also not a case of really anyone wants to continue the direction they were going. So it's a lot of indecision regarding what's going to happen after 90 days. Yeah, who knows? So we'll see. But yeah, in terms of direction, there's quite a lot of trades I'm interested in from a fundamental point of view or from an interest rates point of view. But I just can't take anything because either the markets are extended or I don't want to try and trade into Trump. So, yeah, there's also a lot of indecision around what's going on with the US. I think it was JP Morgan or Morgan Stanley. It was one of those two that was saying there's no recession, no rate cuts. Oh, sorry, we don't expect a recession. We don't expect rate cuts, blah, blah, blah. But then we've got other people saying, oh, we're expecting, more rate cuts throughout the year. We are still expecting recessions. So it seems like there's a lot of mixed opinions around the dollar at the moment as well. So yeah, it's very tricky, really, in my view. Pound dollar. Yeah, pound dollar is bullish as well. Yeah, so we've still got the score of 8. Retail is short, seasonality is bullish, trends bullish. COT is flat, which, yeah, it doesn't give me too much. Although this looks good. You know what? Actually, I think I would be really happy to just short on the next pullback here. So if we can see price come down to around the 50% 618 levels on the fib, meet the 200 moving average, I would quite happily then start taking long positions to go higher. I'm not very optimistic about the dollar. I think we might see short-term fluctuations. As I said earlier, we are at quite a major level of structure on higher timeframes. But I just don't really see any redeeming qualities for the dollar right now. So I would quite happily go against it or sell it. Yeah, Sean knows it's a wait and see moment, unfortunately. Real question here, what cigars you smoke? Cohibas, that's pretty much it. I'll smoke pretty much anything. I mean, and cigars, not anything dodgy. If I'm given, I'm not a cigar critic or anything. But yeah, if I'm going out to buy them, I normally get them from the airport when I'm traveling. But yeah, I don't really know much about them. I find them quite relaxing. Romeo Juliet, yeah. I think Romeo Juliet number 4, I think was the first cigar I ever had. Anyway, Siglo 4. Oh, Siglo 5. Okay. Yeah, I've never had those ones. Anyway, what was I saying? What were we doing? Yeah, so because I've been away from the markets, I've been very distracted. I'm not 100% clued into what's actually going on, especially in terms of sentiment. Huge net change on Dow, which is nice. Still a reduction in long contracts, also a reduction in shorts, but net positioning actually is quite flat. But excuse me. Yeah, I quite like this actually. It looks more like a what we call a cop flip. So here's a little thing for you. So, and it's a trading strategy. I don't do it because I don't have the patience or the attention span. But what you can do, and I've got some friends that trade like this, is you watch for when something flips. So let's just take Dow here. And I actually don't know. I'm not going to, you look at the history. So you could say last week, institutions were net short on the Dow. This week, they've flipped to net long. So that's the COT flip. So then you would essentially just use that as the indicator. So you'd then say, okay, this was where they were short. I'm going to go. I know this is obviously the Australian dollar, US dollar. It's just an example. You would say, okay, it looks like we're double bottoming. We created a new high. It might go long there. So it's really simple, but obviously you've got to check all of the COT data every week, and I don't have the patience for it. And then obviously keep in mind what the previous numbers were. Hate smoking more than you despise Teslas. Yeah, it's a bad habit. I've got to say, though, it's a good networking thing. I went to a cigar lounge in London a few years ago. Yeah, you can quite easily get talking to some pretty valuable people. Love the taste, hate the smell. Yeah, I'm the same. I can't be around someone that's smoking if I'm not smoking. The smell is awful. Any new trade setup suggestion? Yeah, Manic, if you go in my Discord, it's only $100 a month. You can get my trade setup suggestions in there. I'm half joking. But yeah, we've already gone through the trades I'm in and what I'm looking at. US dollar Swiss, you were very bullish. I don't think I was very bullish. I was probably maybe looking to go long, but very bullish is maybe an overstatement. CAD yen tested resistance on H4. So yeah, I've just realized my camera's really strange. It's like cutting me off. I think it's because it's dark in my office. What were we just saying? Oh, CAD yen. Okay. It just tested resistance on H4. Do you mean this? Yeah, I suppose that's valid. It's not enough for me to really go in a trade, to be honest. I'd like to see it come higher. So I would like to see probably around these previous highs here, 200 moving average, and then short back into support. But yeah, for trade setup suggestion, it's not a suggestion, it's just my opinion. I think this camera's really frustrating. Why is it doing that? Let's see. Whatever. I think the FTSE is probably my favorite right now, if we can get something going there. Market's trash. It is absolutely trash. Bashi, hello. Yeah, long time no see. But yeah, I'd love to go long on the FTSE, at least back into this resistance. And then I'd probably just trail stops and see if we can get even higher. Which is rare, actually, because I hate the FTSE generally. Turn off the background. Yeah, I would, but this is the wrong direction. So for some reason, what's this called? StreamYard, the thing that A1 use, it won't connect to my normal camera that I use on my streams, which obviously points towards my wall. But the way the camera is now points down the room. So I've obviously got some private things. I've got all my non-children friendly toys and dolls and all sorts of stuff out there. And my quants. It's my OnlyFans background. Yeah, can't have you connecting the dots to my OnlyFans. Seems like silver's had a very small break and retest here. So if we could get this H4 candle to close bullish from here, I would be maybe looking to go long actually from here. Stop loss below these lows along with the 200 moving average. Take profit at the previous highs. So probably, that's a horrible line, but you get the idea, probably from around here. Gold pumping like crazy. Yeah, I'm a little bit sad about gold because I've missed the entire move. Really unfortunate. But yeah, it is having a really strong move. It's not pulling back. This pullback wasn't enough. So yeah, it's sad, but what can you do? $21-day MA. What do you mean, Abdul? Check USD CAD. Lee, who said I was being sarcastic? Yeah, USD CAD's probably going to hit my stops, actually, which is a bit unfortunate. So this was a little bit of a contrarian play because it's not how I would normally take a trade because it's really against trend. But we did see this pullback here, slight slowdown on the 50% pullback. So I decided to take a long, but this was right before retail sales, and this is the result. So it's one of those things. I was quite happy to take the risk, but clearly it's not worked out in my favor. I was also thinking we're a little bit too deviated from this 200 moving average, so I was expecting some sort of pullback. The dollar's also obviously at a pretty major support level that we were looking at earlier, so I was trying my luck, and it seems my luck's not very lucky today. How far can gold go? As far as it wants, Raymond. Unfortunately, there's no answer to that. If I could tell you how far gold could go, I'll then just set sell limits at that level, and I'd be, multi-trillionaire. Are you referring to Sean? I see. Well, who was it? I think it was Morgan Stanley revised their target on gold for the end of the year to 4,000 and something. I can't remember exactly what the number was, but yeah, 4,000 and beyond is the end of year target. So I'd actually quite happily look to trade into 4,000 at this point. I remember it was only a few months ago I was sat here talking to Nick about 3,000 for the target, and now we're talking about 4,000. Crazy. Yeah, Bashi, if you don't know about it, go and write a letter to JP Morgan. I'm sure they'll love to hear your analysis about that. Maybe a recession, no 4K, JP Morgan, please. So yeah, I think if we can see some sort of pullback, to be honest, I'm at the point now where if gold pulls back, I'm not sure I even really care too much about the 50% because it's quite common for gold to have these very small moves down and essentially consolidate, then continue higher, which I'm a little bit annoyed it's taking me this long to figure out because I've missed so many opportunities. But, can't do anything here. Yeah, Lee, exactly. How do you know if I'm a millionaire or not? I've been DCAing into physical gold and ETF now. Is buying physical gold considered DCAing? I'm not sure. I'm not sure it is. DCAing 50 bars of gold from your local jeweler. Oh, okay. So you're doing it for an ETF. All right. I thought you meant physical bars. You're looking to short Dow 41,500. Okay. 41,500. I see. Are you looking for? Yeah, I kind of get it. So you're looking for this gap, previous structure as well. It might be a good counterplay actually, because I'm already long on the NAS, so I might, could look to go short on the Dow here. I suppose that would give me a little bit of diversity to US stocks. I miss sitting here watching you two have your little spats. It's like watching a married couple. You're like the two old husband and wife you see on a TV show. It sounds like Lee's 5'8" as well. Okay, what's your idea? Ball out. Let me know. If this isn't $1 million trade, I'm not really that interested. How tall am I? I'm 6'1". On a good day. On a bad day, I'm just around 6 foot. Countries will no longer run the world, but rather companies run the world. Oh, for sure. Yeah, it wouldn't surprise me at all. I think, I mean, it kind of is already like that anyway, because we have companies lobbying governments. That's been a thing for a long time. So, yeah, no surprise. Lee is 6'3". Fair enough, Lee. Put me in my place there, didn't you? You're going to try and short gold at 350. I mean, why? 335. Oh. Yeah, why 350 is what I want to know. Guru, how much is my course? I don't have a course. In fact, you know what, LFTJ, I do have a course. It's free on my YouTube channel. I've got the episode 2 and 3 coming out. I've got episode 2 coming out tomorrow, episode 3 coming out on Monday. So it is 100% free. It's 23% from the EMA 200 daily time frame. Okay, interesting. That's my $1 million idea. So we just go long stocks. We could short the UK royal family. AUD USD buys till the end of the year. Yeah, I mean, the Australian dollar's doing well. I wouldn't be opposed to buying the Aussie US dollar, but I think I might have missed my opportunity for now anyway. If we could see another pullback, I think it would definitely be something I'd take. Yeah, so I guess if I was going to go long here, we'd have to have a break, retest, and continuation. I don't want to buy it here. It had too much of a upside move, really. Ideally, actually, we come down lower and then I can buy it. But yeah, I quite like that. I'm going to add it to the watch list. May sound dumb, but gold dropped once in 2020 with the same idea. Doesn't sound dumb. If you've got a clear reason why, then go for it. It doesn't matter how it sounds; it's how it works is the key. Build a 100 lot position. Easy. I don't need to build 100 lots. We just put 100 lots. Build 5,000 lot position. Easy peasy. Yeah, I'm getting some nice opportunities to sell. To buy the yen again. I don't want to really sell Aussie yen. Pound yen, I'm not really. Pound yen, maybe. I still think Swiss yen is the number one idea, but we just need to wait for this for these market conditions to change. When is a good time to get out of gold? It depends if you're long or short. If you're short, get out now. If you're long, maybe trail stops if you can, and just let it go. AUD USD, every time it pulls back from here, take the buys. Ball out. I'm taking that's financial advice, and you will be getting a letter if it doesn't work. What do you think of pound card? I've got no interest in pound card, to be honest with you. Let me see if the EdgeFinder's got anything. I don't personally have an idea, but yeah, we'll see if the EdgeFinder's got some juice for you. Let's see. No, it doesn't seem so. But we do have New Zealand card, Euro card, Aussie card. So you had to choose the one card pair that wasn't there, didn't you? If you have to sell Bashi to raise money, do it. Fair enough. I quite like that idea. – . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . I feel like you've got a bit of a vendetta against Bashi. Poor guy. So yeah, I think selling Swiss yen, basically just looking for previous highs, is quite a good idea here. So I'll just be looking to add into shorts. Probably should have added in here actually, but I just wasn't really around at that point. So if we can come back up to, actually let's round this off at 177 flat. So we can come up to 177, I'll add into a short, and if we can come back up to 180, I'll add into another short, and that will be my final position until we do something. Yeah, Sean, the thing is with Swiss yen, it might not look bad, but it's behaved pretty poorly. It's not been the easiest one to get to trade, really. But, you know, sometimes the most difficult ones are the ones that pay off the best. Shows Aussie yen. Long term, still, I'm still quite happy with Aussie yen long term. Short term, probably not, just because the Australian dollar is doing quite well. They're the most hawkish central bank, or major central bank. There's possibility of China stimulus as well. So there's some optimism around the Aussie dollar right now. So going short doesn't really appeal to me. Short term. But having said that, you could just keep trying to follow this momentum. As long as we don't break the trend, maybe look to short again here. Obviously, if it doesn't work, it doesn't work. That's just price action view. But yeah, fundamentally, there's not really anything here for me at this point. Lee, I don't trade yen either. I came into this year, or ended last year, with a pretty strong narrative, actually, that I don't trade the yen, or I stopped trading the yen. And then like 2 weeks later, I'm looking to get pretty heavy on the yen. It's the beautiful circle of life. Okay, let's just do, I'll close the EdgeFinder again, I think. Did I? Oh, I didn't. Here. I want to see where the retail guys are at. So they're very long DAX. The long dollar Swiss, so short dollar Swiss is fine. Short copper, short UK 100 would be, wow, 96% short on silver. I wonder why. They're also short on euro dollar, pound dollar, and gold. It makes sense. They're selling against all of the trends at the moment. So silver, why? I don't understand it. The markets move up and they look to sell rather than buy into it. I'll never be able to fathom. Quang, unfortunately not. I'm pretty bored in the markets right now. I'm tempted to actually just call it a month already and go and do something else. When does Powell speak? Let me just double check. So Powell speaks, where is it? I've lost it. Here, 6:30 my time. So it's an hour and a half, and then Powell speaks. So not too long, and then we can start enjoying some volatility, hopefully. I used to love pound yen when I first started. AI pattern identifier, absolute garbage. Never use it. It's the most useless retail trap tool I've ever seen in my life. Patterns, in my view, are pretty much 50-50. If you've got a reason to take the pattern in a certain direction, then fine. But trying to just trade a pattern because an AI told you so, it's It's crazy. Bear in mind, if all that stuff worked, everyone would use it. Trust me, I'd be sat here with an AI chart tool on the left, charts on the right. I'd just be buying and selling all day. Unfortunately, JP Morgan and HSBC, they're not sat there buying and selling moving markets because there's a butterfly or a wedge. Yeah, it's not a Fed speech, as Lee said. But, you know, I'll be hopeful for anything at this point. M1 start was sick for GJ back then. Like crazy when we actually get tagged. Okay. I'm really surprised Bashy still shows up to these streams. You know, every time I come, someone is just bashing Bashy for trading 1 minute. What's your thoughts on Bitcoin? Good question. No idea. As I said earlier, crypto isn't my forte. I don't know anything about it really. To me, there is no trade here. Yeah, it's pretty much just a sideways pattern or a sideways. What am I saying? It's just a sideways range. There's no trade here. Even the daily is very flat. 200 moving average is quite literally on the price right now, so there's no direction. Weekly's bullish, which isn't a surprise for Bitcoin. Actually, let's see. Oh, well, Bitcoin has had a full 50% pullback and a rejection, but yeah, it's not enough for me. So yeah, to answer your question, I don't have any idea about that. What does someone ask for up here? Euro Swiss, CAD Swiss longs. Joseph, my question to you is, why do you want to sell the Swiss? Look at how the Swiss has been moving recently. Look at the Swiss pairs. I think you'd be trying to sell a rocket there, my friend. Found something on the 5 minute 100 SMA. Is that how you normally trade? Do you normally use 5 minute 100 SMA? You look bored? No, I'm not bored. I'm just exhausted. It's been a busy week and a half and not really in a good way. So I'm just kind of done for this week. But no, I'm not bored. I love being here. Yeah, just sleepy, I guess. I need an early night. Or need some wake me up. I'm joking. I don't do nefarious things. Okay, let's see if dollar CAD stopped me out yet. Oh, actually, it's not, surprisingly. What about NASDAQ? NASDAQ's just hanging around. Euro pound's moving quite well, and Swiss yen is fine. Okay. I've got an hour. If this H4 candle closes as is, I'll probably just cut the trade for a loss. Talk to Chris Pulver about wake up substance. Bash you only 5%. Okay, let's see. So yeah, I think London session tomorrow, I'm probably going to get into the FTSE long. I'd love to see a bearish London session. So if we can come down, then that would provide me a long opportunity to come higher. I think that's the play. Bow, hello. I love trend lines personally. This is just a confluence, right? For gold specifically today. I'm not sure what you're talking about. If you like trend lines, use trend lines. It's not my cup of tea. I think they're a little bit too discretional, because one way, I could draw a trend line, you could draw it slightly differently. Someone else draws it slightly differently, and you end up in a completely different thing. So yeah, not for me. I'll use a trend line if there is, a very obvious one there, but I never really draw them to see if there is one there, if that makes sense. I take dollar CAD buys because I was looking, and this was more of a contrarian place, not a fundamental trade. So I was looking to see if we could have or sustain this rejection off the 50% pullback. I also thought we're a little bit too far away from our 200 moving average, so I was looking for a bit of a reversion up there. I was also looking for the dollar to possibly have some bullish movements off this this monthly support. So yeah, look, just basically a technical trade, but low risk, so it's all good. Seeing if we could get something going. You have pending order on UK 100, Cedric. Yeah, let's run it. Let's make some money on the UK 100. Bar, can you go over UK fundamental and GU chart? Okay, we've got. Hold on, let me just check time here. I've got 5 minutes. Well, 4 minutes, and then we've got Alan Perez coming to take over. So I'm sure Alan can get into some stuff if I don't manage to finish it. So what was it? GU. Let's see. Let me just quickly do a recap here. Let me just double check to make sure I'm on the right track. The market, the main risk to our outlooks and job reports Tuesday and CPI on Wednesday, both which worse than expected to be reconsidered bias, potentially favor GP or GP longs. Yeah, okay. So it remains bullish. The US dollar isn't in a favorable position in my view, whereas the pound hasn't had great news today. Obviously, we had cooler CPI come in, but it's still got a better sentiment in the US dollar. Now, if we look at the EdgeFinder, we do actually have retail going short, which is obviously a nice contrarian signal. In terms of the data, let me just log in here. Okay, so we've got bullish seasonality. We have got COT that's flat, so that's fine. Retail sentiment, they're short. Seasonality is bullish. Trend reading is bullish. GDP is flat. Manufacturing is in the favor of the pound. Services flat. Retail sales in favor of the pound. Inflation's flat. Employment change is flat. Unemployment rates in favor of the pound. Interest rates are also flat. Now, even trying to understand the rate decisions or the rate probabilities is tricky for the US. But it seems like we're expecting a rate cut by the Bank of England and a rate hold by the Fed. But that's, again, that's quite loose just based on the tariff implications. So I would be looking to have a pullback into the 50% to 618 on the fib, let price come and meet this 200 moving average. Then I would be looking to continue long and let this trade ride. I think the US dollar's got further downside to go. It's just a case of how it's going to react in the short term. Just Blue 100K funded account today trying to short gold, amateur trading. Yeah, unfortunate, Mike. I'm sorry to hear that. Long stream today. It is a long stream today because it seems like Nick's going to stream Powell, I think. But no problem. I know it wasn't a super comprehensive one, but I'll be honest, I'm not that up to date. I did a quick read up yesterday, but yeah, I've not done a full economic breakdown or anything for probably a week. I want to see it Chef JPY to drop to 140 so I can take profit. Cedric, that would be lovely. But the way I see it right now is it's a way to accumulate positions and build up a longer term, larger position. Because yeah, there isn't anything really we can do now. Nick is going to stream it. Yeah, I thought so. Yeah, Alan's background is very nice, I must say. I'm a little bit jealous. It makes me very excited to move away from this cloudy hellhole we call England. James, you take trade when price hits 200 EMA. Sometimes, Cedric, there's two different strategies. So the 200 EMA and 50 EMA, I teach that. I think you're in the Discord, aren't you? I teach that one in the Discord. That's one strategy. The other strategy which I use mainly these days is the fib. So the 200 and the 50 EMA strategy is mainly an intraday trade. So I'll use that on sort of the 15-minute and the H1 time frame. And then the fib for swing trades. But anyway, guys, Alan Perez is here to take over the show, so don't leave when I do. Alan's a great trader, good guy, so you'll be in good hands. Have a good one. I'll see you all very soon. Don't get margin called. And if I don't see you before, enjoy your weekends.
We launched the EdgeFinder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the EdgeFinder is producing now. The EdgeFinder has helped traders go from beginner to pro in terms of the fundamentals and has helped many traders go from unprofitable to finding the missing pieces in the name EdgeFinder. So if you're not already using the EdgeFinder, let me tell you about the biggest discount that we offer all year long starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the EdgeFinder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the EdgeFinder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the EdgeFinder at the super discounted prices. Thanks for watching. And now back to the show.
What's going on, guys? Good day to be back to back. This is cool for me. James, thanks for the nice words. I know you're a fan favorite, so I hope I got some work to do if I want to keep the audience here. What's up, Bashy? What's up, Lee James? Cheryl's, you guys are regulars. Cedric, I believe I've seen you a couple times. So how you guys doing? Busy, slow day or slow week, guys. I'll be honest. I'm not really doing much. What's up, Shaw? Handsome fella. Thanks, James. Look, man, if I just had the height, I think I'd be all right, man. But I'm Mexican, so I'm at 5'7", 5'8" on a good day if I'm wearing some tall, bulky shoes. But thank you for the nice words, man. Pretty flat day, to be honest, or week, I'd say. Not really doing much just because we have got an alarm going on. We got Fed meetings, obviously, and just look at where price is at across the board. You got the dollar just hanging out here. You got Swiss franc well, Swiss franc kind of took a dive. Euro is just like flirting up here. This could be a fake out, but probably not, just because we have so much momentum. So pretty much everything across the board is kind of just in prices where it's not really good to trade. You know, if you're buying the euro up here, then you're chasing, and then you have all this to the downside that you got to be mindful of. And if you short it, well, then this thing could just fly higher, and then you're screwed. So pretty hands off. I'm just being selective. One thing I will say though, James is 6'1". Damn, that's pretty cool. If you look at the euro in the past, if you guys reference my weekly outlooks that I've posted, I called out this trade, euro longs, right? And essentially my thesis was strong momentum, and when there's strong momentum, pullbacks can get bought into fairly quickly. So this one lasted quite a bit. I think it was like 24 days, 22 days. And then we got like this trend line break retest to the T. If we zoom in over here, oh shoot. See that break, retest, and then we continued upwards. And then we started holding this level, and we got pretty much the same treatment. So downward trend line, we broke it, we retested it. If you look at that to the T, and then we flew upwards. So now we're like in this, I guess, same environment, but it's not really the same. Like if I were to draw that trend line, now I know trend lines are not like definitive or whatever. Like it's not the holy grail. It's just kind of a thing I like to just add on. But we kind of just broke it. We haven't retested or anything, and we've been in this range for, let's see how many days we've been in here. 5 days, so not that long. So I guess my thought process here for the euro dollar is just, if we're going to be in this range, and if we do, I just want to see a break higher or lower and just hold that level. If we break higher, then I think we can all agree that euro has so much upside to it, and it's just going to be one of those things like pretty much like gold, where it just keeps chugging. If it breaks lower than this range, then we could go ahead and see this be a fake out, and then we can probably go ahead and respect this longer term range that we've been in. If you look at this range, most of these currency pairs, like if you look at the Swiss as well, we've been hanging out in these ranges. So that's my thought process. But open to hear your guys' thoughts or things you guys want me to check out, or if you guys want my opinion on certain things, I'll be more than happy to go over that. But for the most part, my day, I've been just monitoring what's been going on in the world. I know China, and I think, who was it? China? Was it China that said if the US becomes more friendly or whatever, that they'll consider working something out? I think that's correct. UK services CPI came in lower. And then the euro also had their CPI came in as expected. So pretty flat. And then we had a good retail sales for us in the US. It wasn't like the best, but it was a step in the right direction. So if we're looking at these currency pairs that we're just really undervalued, if we're really undervalued in these currency pairs, then all it takes is a couple data points for the US to be looking more optimistic. Maybe hopefully these tariff concerns kind of go away. More optimism in the US, more inflows in the US as foreign investors try to buy back into the US stock market. You got to think, whenever you're investing in the stock market or in a country that's foreign, you got to exchange your currency. So if people abroad want to invest in the stock market, they have to make those changes into US dollars. And so that's why you can sometimes see equity indices going up, but as well as the dollar going up as well. GJ flew up 83 pips in 1 minute. Was that just right now, Bashi? That's why the yen pair scare the heck out of me, man. Their average true range sometimes are like triple digits. Oh, London session. So yeah, that's what I'm looking at. Like if I obviously on the Swiss, right? We broke this support. We broke it, right? But just because we broke it doesn't mean that we can't at least go back to here and retest it. In fact, we haven't gone back up here to retest it. So maybe, I'm not saying long term the dollar could continue to be bearish, but I don't know. It's just a matter of, is this thing so strong that every single pullback gets sold into, or are we going to have a brief moment where the dollar can take a breather, go ahead and retrace up to here. When it gets here, then we can go ahead and evaluate if we're going to continue upwards or we're going to just, get sold off into there. That's my thought on dollar Swiss and just the dollar in general. Dollar DXY chart, we're just hanging out here at the 100 pretty much, just shy below 100. So pretty flat week. It's pretty boring, but it's pretty good to be boring, to be honest. Like I do prefer when it's just a matter of like dedicating time to keeping up with the fundamentals. And the cool thing about that is when you're kind of just focused and dialed in on just staying up to date, you can find, these things that pop up in the news terminal that could be like, oh, okay, this could be a signal that we may be flipping. Solid support, but I want to see that push past that. On the DXY, are you referring to the downside, Bashi? But yeah, another thing that scares me too is the 10-year yield. It kind of wicked up there, starting to come down. If we do start coming back down here, I could see people pricing in more rate cuts, and the dollar will go ahead and in fact start to depreciate a little bit more. Yeah, Bar Benbisti. Cool name. GU. So GU got some very slightly lower CPI, which CPI is an inflation print. So lower inflation could give the Bank of England more room or more confidence to go ahead and ease their rates. And so we kind of got up to this resistance level. Well, in my eyes, my opinion, this could be a resistance level. And we see that we're wicking off here on the daily. If you go down into maybe like the 4-hour, really no confirmation yet. This could very much just be a little pullback and we can continue upwards. So as far as for GU bar, if we were to see a bearish close on this candle and then perhaps 2 bearish candles on the 4-hour following that, then I could see that maybe we have some downside for the pound dollar. Yeah, 2.6 versus 2.7. I didn't see the revisions, if there was any. But for the most part, yeah, that lower CPI is a little bit, bearish for the UK. Yeah, no problem, man. No revision. Euro also got a CPI print. Came out as expected. The month over month did come up a little bit higher, but it was as forecasted. So the month before was 0.4, forecasted was 0.6, and we came at 0.6 as expected. So that's why really we didn't see the many crazy movements. But the euro has been having so much strong momentum. Gold on crack, bro. I'm telling you, man, I wish I traded gold. In fact, I might start trading. I might start diversifying into these other, because I'm a macro trader. So I just like to trade what's in play. And the reality is that, Forex is not always in play. Is it tradable? Sure. But is it the most lucrative? No. So I have some stuff happening in my life that could allow me to have to switch brokers. And if I do that, then I could go ahead and go into something like Weeble, where I can trade, gold equity indices. You can also trade Forex through ETFs, through like FXY, FXS. So I might just do that. That way I can just widen my opportunity, because it sucks. Look at this right here. Look at that. 12, almost 13%. That's crazy. Now I had a good run in FX. In fact, I was on the right side of the trade whenever this whole tariff announcement hit. So that was really good. But imagine if I were to add gold into my artillery, or once, equity indices start proving that, we're back to normal conditions and we're pushing back up, adding that into my playbook would definitely help the P&L. So I don't want to miss out on that. And there's a possibility that I could, have to move brokers and include those into my artillery. There was a comment on Financial Juice saying that the euro was not making headway with USA. Maybe President mentioned something on that. Yeah, I don't know. Like they've kind of been back and forth, Bashi. I know like the euro, one of their important pain points is cars, right? Tariffs on cars and stuff. And I believe Trump's been trying to give every country their, I guess, their buffer or leeway on certain industries, like for Europe, cars, and China for electronics and chips and stuff like that. So I just hope, I mean, it's in everyone's best interest that deals get made, right? And things get stabilized. Brian, I'm a swinger. I'm a swing trader. Yes, that's my preferred, man. Especially when you have, I guess, a more busier life. I'm not saying that I have that right now, but yeah. Swing trader, I think it's the easiest, especially when you know, I would assume most of you guys have lives, right? You guys have important lives, whether it be children or families or maybe a career. It's really hard to be intraday and scalping these markets when you have that stuff kind of going on. And from my experience, scalping Forex or gold, they can be very volatile, and on the lower time frames it's really difficult, and like unless you can really dedicate time to do it, your edge is kind of taken away from you. And so the cool thing about FX, why I like FX, pretty much oldest market out there, so much data to back test. Technically, like on a technical analysis is what I mean. It respects levels, and they range for a long time, and they trend also for a very long time. That's what I love about FX. Yeah, you're a scalper. I've tried scalping. I've had good moments in scalping, but I wouldn't tie it down to me having a proper defined edge, if I'm being completely honest. LFT, heck no, bro. Yeah, that's my experience. I've tried it sometimes, and look, I will admit, like sometimes if you look at currency strength and there's like obviously a very strong trend, I take the polar opposites, or like if I get something really strong and then really weak, then yeah, I can play it intraday. But scalping is really hard for me, honestly. You thought you can make me laugh? I just kind of went back in there and nah, man. Let's kind of switch our focus. Let's get back into the game. Dollar Swiss, yeah, I look at dollar Swiss. So LFTJ, I'll give you my honest thoughts on dollar Swiss. I love dollar Swiss. It was a good trade right here, but we broke it. So I remember back in this time, September 30th, I was like down bad September 30th because I took a big hit August 5th when that sell-off happened. And so a couple of things were going into my thought process when I was trading around this time. I was so focused on trying to preserve PNL and just not dig myself any further in a hole. So I was very hesitant on a lot of really good trades. And so I haven't moved this thing for a while. If you look, I had a buy order right here for dollar Swiss, and I missed it. Now, typical Alan would have said, put me in the trade, I'll experience some drawdown, lower size. If we start moving in favor, then I can add into it. But because my mindset was more of a scarcity mindset at that point, preserve capital, I missed it. So I missed out on all of this right here. Like I literally could have made a ton. Now I did scale into it eventually, like once we got these pullbacks, but it wasn't the same. You have more confidence in a trade when you're getting at the very bottom, and you know that like anything that happens in the middle doesn't affect you. So what I mean by that, and why I went into that story, is because I had the same impression right here, but then we broke it. So now this zone right here is not really that valid for me. So now I'm just thinking like, look, we're in this tight range. We had one day where we closed bullish, and then right back, we just gave it all away. How long have I been trading for Cuh? How do you know I'm a Cuh, man? In high school, I was a Cuh. Trading, I've been in markets for like about 5 years. But to be completely honest, well, it started when I was in high school. My dad introduced me to Forex, and that's why I've stayed with this asset class, I'd say, for the entirety of my time. But then I neglected it in high school, and I graduated, and I picked it back up. I was demo trading, and then I worked at a bank, JP Morgan. I was a banker there, and I worked on a wealth management team. And there, they really showed me the importance of fundamentals, because they were professional money managers, and so I really tried to take advantage of that. And for the time I was there, really tried to learn the most. And so together we navigated. I remember like 2023 peak interest rates in the U.S. Investors were so scared. They're like, "What do we do? What do we do? What assets should we be in?" And so we were selling a lot of T-bills, treasury bills, and they were giving high yield, like 5% at the peak, 5.25%, depending on what our traders were negotiating, and that was the play. And so we had like T-bill ladders, so we were pretty much advertising, and the thought was you have these T-bills that are maturing every so often, right? So you get them like in a ladder. If you like think of a ladder. Could I try this? How can I draw on this thing? All right, I'm gonna do my best. So when you buy a treasury, it has a maturity date to it. They're not like money markets where you can just cash them out whenever. So you buy T-bill 1, 2, and 3. That was a horrible illustration, guys. I'm sorry. But this is the thought process. You buy the first T-bill, it matures in 3 years. So it matures right here. You buy the second one, and it matures over here. And so you stack the T-bills, and you're getting a high yield, but every so often they come due to maturity. And so on paper, or realistically, they are liquid in some form. Now, if you pull out premature, if something happens, then obviously you got to pay your penalties. But where I went with this is I learned that how important the environment is and how important the macros is. They literally considered everything. And so that really emphasized the importance. And then what I did was I back tested all of my demo trades because I was a registered rep. I had a Series 6, 63, whatever. So my firm prohibited for me speculating any trades, and it was a process. But it was not allowed to trade Forex. So I back tested all my trades, my swing trades, and I was like, man, like, okay, this thing hit profit off of this really big move. And I noticed that most of these big candles that were contributing to my P&L were at 7:15, 7:30, 12 o'clock when news was hitting the terminal or certain figures came out. And so I kind of got this realization that, like, look, I'm making these trades technically, but the actual driver and the mover that's making this trade profitable or not is the fundamentals. And so that's when I honed in. And then I found Nick. Nick's channel was pretty much the same way I trade, and I really appreciated the guests and the people he has on his show. And then I bought the EdgeFinder because when I left the firm, all of my analysis and stuff that was fed to me was taken away, obviously, because it was all proprietary. And so the EdgeFinder was basically my way of getting really good data fed to me, really easy. Didn't take that much time of my day. And yeah. Looking up this thing called Pitchfork Trendline. Swing trade just means holding for days or longer. Yeah, pretty much. Guys, I'm a swing trade, counter trend. I'm an idiot. I know scalping is like quick in and out. Swing trade doesn't matter which direction you're going, but the premise is you're trying to catch a bigger move. Now, for me, a swing trader is like, let's say I want to catch anywhere from 50 to 100 to maybe 200, depending on the move. That would be a swing trade. Now, depending on how long it takes, that's up to the market, right? If you get into a trade, but you got NFP coming in 2 days, and the NFP print comes out in your favor, and it kind of pushes you to your profit, then, you know, it was a swing trade, but you got it pretty quick. And I mean, that's my opinion. VIX looking like VIX is up 3%, 3.5%, but I mean, it's not bad. Ideally, if we can settle back into the mid-20s, then maybe we can see some more organic moves, in my opinion. Swing trade or swing long-term trade is 500 pips and more, and it has to be specifically fundamentals. Yeah. Well, the cool thing about Forex is, like, let's say you catch one of these range trades, like, you know, you kind of don't need fundamentals for this. Now, obviously, when you get up here to these levels, you gotta look at the landscape and say, okay, is what's going on in the world right now could be the catalyst that can push us out of this zone. But for the most part, if you just, like, you know, use technicals on a long-term basis, like this is on a daily, weekly level. That's the cool thing about Forex, is that technical analysis works really good for Forex. I'd say I'm a hybrid, though. I'm not really specifically only swing trade. You know, like, for example, this Euro trade that I called out on my channel. It was a swing trade, but I was active. So when we broke this initial size, cool. I was trailing profit, so I trailed out. But then when I saw that this level was holding and we had the same characteristics as the last move, then I was active again and I went in. And, you know, this trade lasted me essentially. I didn't take out at the peak. I took out at the 112. 23 hours a day. So my intention was to be in a swing trade, but the time horizon took me out pretty quickly. So I guess I'm dynamic in that sense. It's really just a matter of really I would say my strategy or my approach is following the macros as best as I probably could or can, and just use technicals to get in. That's it. And to get out and stuff. Issue with Forex is the low volatility, and it's kind of like random walk. It can be a random walk on the lower time frames. I completely agree with you. Especially now, like if you look at these candles here, let me remove these drawings for you guys. Like if you look at these candles, look at these wicks right here. You know, like tell me if you're like, look how misleading this wick is, for example, right? If you're like a purely technical trader, you don't include fundamentals at all. Look how misleading this wick is, right? After this close, I'm like, damn, this resistance zone, this could have been a fake out. We could have pushed lower. And then no, it continued upwards. And then we got another misleading wick here. This one closed bearish, long wick at the top at this resistance level. And we just completely ignored that and pushed higher. Next day, we shot up 300 pips, which is crazy. So that's why I really emphasize mixing in the fundamentals. Yeah. Plan on pound dollar. I went over it a little bit, but I can go over it pretty briefly here. I want to say I'm very hopeful in the US dollar that maybe we're starting to get some economic data points that are more in favor of the US, and that maybe we can get a shift in trend. So we're at this resistance level. We're getting this tall wick. If we can close bearish, and on the 4 hour we get more bearish candles closing, then I could say we have a good probability of continuing and respecting this resistance level. But like I mentioned with the euro dollar, it doesn't matter what these wicks give you, because if the fundamentals are still in line and it's still dollar bearishness, we can technically just ignore that and continue higher. Yeah, Igor. That's why you got to be mindful of it, and just even knowing what the economic calendar is going to look like and stuff like that. Just being mindful could be super helpful. Yeah, Lee. It's a game changer, man. Like that's my biggest advice to anyone that like wants to trade. If anyone wants to trade, swing trading and that style, I understand scalping like equities. You probably don't need fundamentals that much. You know, for the people that I know that are scalping equities and stuff, they're just order flow traders. They look at level 2, times and sales, things like that. They probably don't need fundamentals. But if you want to swing trade fundamentals, if you have a busy life and you want to be more active in markets instead of just investing, dude, fundamentals change the game. Guys, I'm fired up. I have this banging coffee. I think it's a double espresso. Oof. And the weather's nice outside. I might go for a walk or a run. I believe, Chandler, am I correct? Do I have someone else coming up after me soon? Let's see, 12:45. No, I have some time. Oh, I actually do. I have 1 more minute, guys. And then we have Nick and FOMC. So just let me know, guys, when I'm good to go, and I'll part ways. Make sure you're loading up. Coffee price will probably go up with this tariff. Man, you never know, man. It could really, if things don't get resolved, the tariffs stay high, it can really affect supply chains. You can see it in that news story when Apple was smuggling like a couple thousand or 100,000 iPhones through, I think it was India or something like that. If things don't settle down, then companies and things will have to take alternative measures. That's a perfect example. So what I look for FOMC is I want to see these ranges get broken one way or the other, and I want to see them hold. So for dollar Swiss, I want to see what happens in this range. Euro dollar, also want to see what happens in this range, because right now we're stuck. These are not conditions that I want to be in, especially when you are way up above a resistance zone, and this could be a fake out or this could be continued momentum. Fundamentals were like an aha moment as well, because it feels cause and effect sometimes when public sentiment match. Dude, you're spot on, man. Want to see something interesting? And please let me know if I need to head out, Chandler. Market sentiment. Nick is ready? Cool, guys. Well, you guys have a blessed one. Thank you for having me on again back to back. It was my pleasure. You guys have a good one. You guys are in good hands.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, everybody, welcome back. Look, I'm all dressed fancy because I've got I'm touring an office this afternoon. So, all that get rich quick, live by the beach, laptop on the beach lifestyle stuff, I can tell you, I trade with a good bit of size. Like I have a good size trading account in many ways. I'm very proud with where I've made it in my trading journey. And yet still, I still spend a lot of time in the office. And actually, the amount of hours I work, I gotta figure something out, because I work like this whole laptop lifestyle that you always see when you hear about like traders. I guess you could theoretically go down that path, but oh my gosh, it is. I've been grinding, tell you that much. But it's all worth it, because this stuff is, we do some pretty cool stuff between the live streams and the software and all that. Anyways, I'm working on something just before I jumped on here, and I want to. I'm just not going to be able to do this before stream. Shoot, I just did something bad. Sorry, guys. I'm working on something that I wanted to introduce on the live streams. I want to make it so that people can ask questions, and we could put those questions up on the screen, not just through chat, but through a form, because that form would give us way more to work with. So just bear with me 1 second. I need to actually, Chandler James, if you guys don't mind, can we roll one quick commercial break? Sorry guys, I need to write something down. I just want to make sure this is right. We launched the EdgeFinder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the EdgeFinder is producing now. The EdgeFinder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name EdgeFinder. So if you're not already using the EdgeFinder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the EdgeFinder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now, or in the description of this live stream. If you've been thinking about getting a copy of the EdgeFinder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the EdgeFinder at the super discounted prices. Thanks for watching. And now, okay, so I have this thing I'm working on. I want to make it so that you guys in the audience can ask a question, and those questions we can then discuss on stream. So should we try it? If you'd like to try it, James or Chandler, I just put this in our chat. James said he submitted one as a test. Cool. James or Chandler, if one of you guys could grab that link, and maybe both of you guys could just save it wherever is useful for you. But let's try it. Screw it. Let's try it. It's not ready. I didn't finish building it, but let's try it anyways, because I'm just an impatient person, and in some ways that helps me, in other ways it hurts me. But nothing is like, there's all types of people. Fortunately, I have a great team of mostly patient and diligent people to offset my absolute spontaneous decision making. Anyways, let's try it. If you have a question about your trading that you would like to be addressed on stream, no promises that this is going to work, but can you please try asking your question on this form? The reason we're going to do it this way is because oftentimes questions, especially great questions, get lost in the chat. But I want a way to save this so that I can respond to them and make sure that I don't miss your questions as they're coming through. So I'll have this better built by tomorrow, hopefully. But I think this is a cool concept, and I would love to get some questions from you guys. Let's see if that's working. If I go to my submissions, I can then explore incoming questions. So we have our first question from James. So this is what I'm talking about. So I have a way so that I can then see incoming questions, prompt you a couple things before answering your question, then we can address them on stream together. I'll have a better way to view these questions on stream at a later point, but this is how we're starting. So Alan asks a question. Alan, regular stream viewer, he was just on the stream as a guest as well, says he's been trading for 3 years. I also need to make it so I don't dox your email. If anybody wants to email Alan, go for it. He's a really nice guy. But how long you been trading? 3+ years. Primary goal right now is other. Do you own any A1 trading software? Yes, I do. And what's the question? He says, if you could change one thing about the retail trading space, what would it be? It's a great question, especially a first on-stream question from Alan. Great question. If I can change one thing about the retail trading space, the thing I would change would simply be the false expectations that social media puts on trading. So many people are operating in the trading space like you're in a casino. They have heard the stories of some, young man or young lady who's turned $10,000 into $1 million, and they want to do that too. And that's what their expectations are. And so they approach trading not realizing that they're about to try and drink water from a fire hydrant. Like that's the equivalent. People trade small accounts like it is absolutely possible to quickly make a ton of money. Okay, we got another question. Awesome. Thank you guys for the questions coming in. Like I said, we just dropped the link in the chat. If you'd like to ask a question, please feel free to do so using our form. We're going to be doing this from now on. I did a bunch of chart analysis earlier and I thought about it and I was like, I'd rather see if I could answer some questions that people have. So we're going to do this for now. I might do more charts in a moment if we run out of questions. Robert says he's been trading for 3+ years. His primary goal right now is to become a funded trader. And he says he does own some A1 trading software or has a membership with us. Let's be realistic, Nick. How much is good capital? Not everyone is a millionaire to start trading with. That's a great question. How much is a good amount of money to start trading? And I think it's a fair question because, the truth is it does take capital to make meaningful returns in the financial markets without gambling. But it doesn't mean you have to have $1 million to get started in trading and or investing. In fact, I would say as little as like $1,000 is a perfectly fine way to get started in the markets. But there is a difference between, the trader who has $1,000 to trade with or invest with. You can take that $1,000 and you can treat it with the kind of respect that will someday turn it into $1 million. And what I mean by that is the way you're not going to do that is trying to turn 1K into 10K into 100K into $1 million. That's not a reasonable way to approach the markets. But if you have up just $1,000, you can treat it with respect in the sense that you can start to slowly build up that $1,000 account into more over time, slow and steady, compounding gains, and more importantly, finding other sources of income to deposit into your trading account consistently or your investing account consistently to grow that figure, not fast, but steadily over time. So you don't need, now if you're talking about like how much money do you need in order to make a lot of money from trading? Unfortunately, in my opinion, the answer would be you need to already have a good sized capital, $50, $100, $150, $200,000 in an account to make meaningful amounts of money, right? Now, if you're talking about making, but don't let that discourage you. If you're like, well, I don't have $100,000 or $200,000 to trade, don't let that discourage you. I'm not saying it's impossible to get there someday. I'm saying just don't expect in the short term to be living on a yacht and trading by the beach every single day. That's just an unrealistic expectation. But you can use your $1,000, your $10,000, whatever you have to trade with, to learn, to scale up over time, and to deposit into that account and grow it into something more meaningful. Take the long-term journey. Don't take the short-term one. Lee has a question. Lee has been a regular stream viewer for some time. Lee says he's been trading from 1 to 3 years. He is looking to better understand sentiment analysis as a primary goal for him right now. He does not currently have an A1 trading software tool or membership with us. And his question is, why are markets overextended at the moment with few natural corrections? I asked James the same question earlier, but would like your opinion. So Yeah. So James, that's a great question. James in the chat, regular contributor. So thank you for being here. And thank you for your continued support for everybody who is a regular guest. We do really appreciate it. Okay. So by the way, like I said, I'm answering questions right now. If you would like to ask a question, maybe we could drop that link one more time for anybody who would like to ask a question and have it featured on stream. I'd be happy to answer your question, see if I can give you some insights that might be useful to you in your trading journey. Trying something new today on stream. So again, like I said, ask a question here. It just takes 2 seconds, and there's only a couple in there, so it's very likely that if you ask your question, it will be discussed on stream, and I can hopefully help you out. So to answer the question that James says about overextended markets, everything seems to be extended. Look, I think we're kind of all sitting in that, right? I think a lot of us probably feel the same way right now. We're basically, if you're looking to be, let's just say for an example, like let's say you're bullish on the euro and you're like, this thing's just not pulling back. We're having these wonderful moves, but I'm not able to be a part of them because they're just moving off without me. Or pound US dollar or dollar yen. What you'll start to notice, Lee, is that take a look. Here's dollar CAD doing the same thing. Euro pound doing the same thing. Everything is moving, maybe not so much Bitcoin, but gold, right? Everything's moving. It's shot in one direction, right? So you might be wondering, like, what's going on and why are all charts not correcting? And it's really frustrating when you're not a part of the move. But I would go back to what we discuss often on the show, which is the VIX, right? The volatility expanded dramatically in markets in recent times. Doesn't matter if you're looking at FX, the oil market, gold, crypto, for the most part, a big jump in the VIX causes a huge market surge one way or the other for most markets all at once. So we're seeing these big impulsive moves right now in most directions. Now you might be wondering, when's the pullback, right? So I know that Lee, you have a tendency to trade the DAX. I just know from many of your comments on the stream, you're an everyday viewer, and like I said, I really appreciate that. You have a tendency to trade the DAX. If you were looking for short setups, right? This thing already left the station. Now it's starting to pull back. But a lot of stuff, what you'll notice is that you've had these big moves with little to no pullbacks. The answer is they will pull back. You have to be patient, right? And that's not always fun to hear because it's like all the moves are happening and I'm on the sidelines, right? Especially if you're watching gold. And know a lot of traders here watch gold. It can be frustrating to have these moves. The only thing I can tell you from the years of doing this is that they do eventually pull back. We don't know when that will be. It could be in 2 weeks. It could be in 2 hours. But for me personally, if I'm in a move during these types of environments, all I do is trail stops and manage the position. And for charts that I'm not in, that I would like to be, I take my hand, I take my other hand, and I sit on them, right? Keep them warm that way. But also, it keeps me out of trades. And that's the thing. I don't need to be shorting this gold move. I don't need to be chasing this gold move. Those are my opinion and experience. That's a new word, opinion. In my opinion, that's the thing I want to do with gold right now. Nothing at all. Because anything I do right now, most likely, is either impulsively chasing or, tears in my eyes, shorting gold when it's just in a really strong uptrend that I really don't want to fade. So from my experience, people have been calling the top on gold for literally like 2 years now on this stream. We have addressed this 100 times, 100 times a month. People constantly saying gold's going to go down, gold's going to go down. And yet again, you have a 3%. Just when you thought gold was like, okay, it's got to be topping, 3% on a day. So if you're not in this and you're feeling FOMO, you're just feeling a normal reaction. If you're not in gold right now, I cannot blame you. There's been many times where I'm not in a trade and I wish I was, and it's frustrating and I can't, nothing's pulling back and I'm just sitting there on the sidelines. It stinks. But that's just part of trading. So I hope that answered your question. I know it's not an easy answer. It's just, that's why trading is hard, right? You have to think about this. Why is trading so hard? That's why. You have to sit there and wait for trading setups when everyone else seems to be making money. That's hard. Next question is from Kabil Raj. I apologize. Kabil Raj. I apologize if I said your name incorrectly. They've been trading for 3+ years, and their primary goal right now is to become a funded trader. And let's see, their question is, I've been watching you since 2022, kind of inspiring, and I'm close to getting a funded account. Congratulations, by the way, and plan to scale up. I'm kind of interested to know, how do you deal with drawdowns or losing streaks mentally and emotionally? It's a great question. So the answer that I would give you in terms of how do you deal with that emotionally is it never really gets easy in the sense that, like, here's the thing, right? If your drawdowns are like really, really intense, like I'm talking, you're having like 30, 40, 50% drawdowns consistently, I would say right there, you have a position sizing problem, no question. Like your sizing is just way too big and you're putting yourself in jeopardy over and over. No wonder you're freaking out. But your drawdowns can always be decreased simply by decreasing your position size, right? So that's one thing to remember. If the mechanics of your drawdowns are too steep, like they're simply too high risk and the risk of ruin is very high in what you're doing, reduce that size. That's what I would consider. If you are simply saying, I'm just frustrated, I'm going through like 6 months period of flat on the account, or I'm having a month of a drawdown, it's no fun. The answer is drawdowns never get easy. You just get better at making the correct decision, right? So what I mean by that is your position sizing gets fixed, and or you just get good at showing up and doing the right thing. There are times where I'm coming into the office and I'm going through a drawdown and it stinks. Like I'm losing tens of thousands of dollars a day for a while. For me personally, that's possible because my account size over years has gotten bigger. So there's some pretty ugly periods where I'm just like, I know I'm doing the right thing, but it doesn't mean it doesn't feel horrible, right? I'm showing up and, I'm taking trades, even though it kind of hurts right now. Like I'm in a losing streak. It's not fun. The point is your emotions, as long as they don't impact your actions, you're doing okay. But trading is hard for a reason. And it's because it's psychologically draining, exhausting, painful, agonizing. And all of us who do it long-term are insane. So hopefully that answers your question, but great one. Thanks for that. Ravi says he's been trading for 1 to 3 years. Primary goal right now is to improve his trading psychology. And what kind of mental status? So here's the question. What kind of mental status during ongoing winning trades? What's your mental status during ongoing winning trades? That's a good question, right? Like, how do you manage a winner, right? So we just discussed like losing streaks. How do you deal with that? Well, kind of reverse everything. When you're winning, what's actually common from what I've seen a lot of comments and discussions that I've had with traders over the years is winning streaks are actually hard too, because you want to protect profits, right? So a lot of traders that are like, okay, I'm in this trade and I want to take profits here, or I want to take profits here, or take partials here, because they're afraid that the trade could go back against them. Very common, right? So just like I discussed with losing streaks, your actions need to be what you focus on, not necessarily your emotions. A winning streak can make you feel like there's times where I'm like, oh yes, this trade is rocking. It's looking great. Good stuff, right? Basically, I'm getting hype, right? There's moments where I'm hype about a trade. I'm hype about this gold trade. This thing is rocking. It's awesome. But that's not going to change what I actually do. The actions are more important than your feelings around a trade or winning streak or losing streak, etc. Take a look at your actions. Focus on your actions, right? So if you're emotional about a winning streak or a losing streak, that's actually not, I'm not going to tell you to trade like a robot and not feel anything. That's what a lot of times you'll hear. I don't believe in that. I believe you're going to have those emotions. If they're too extreme, your position sizing is too big. And if you're having them and they're not too extreme, you're just having them and there's something you're dealing with, that's fine. Just basically make sure that your actions are okay. Focus on the actions, not necessarily how you're feeling. If your feelings are way too high and low, your position sizing is the problem, almost certainly. So let's see. Next, we have a question from Igor. Been trading for 3+ years. What's your primary goal right now? He says other. If you can't invest $30,000, you shouldn't be investing or trading. $1,000 is not something you will turn into big numbers. Must learn fundamentals, interest rates, PPI. Let me see what the question is here. Let's see. Hold on. Try to avoid trading all sectors. For Forex, I would stick to US dollar, pound, euro, because that is where the biggest volatility in Forex is. I didn't really see much of a question on this one. So thank you for sharing. I think more so the last part, would you stick to dollar, pound, euro? And is that where the volatility, if that's the question that you're asking, I'd say yes in terms of FX. If you're an FX trader, yeah, you probably want to stick to the primary currencies, euro, pound, yen, dollar. Those are where you're going to get the most liquidity, the tightest spreads, etc. That's personally where I stick to when it comes to FX. Ankit says, been trading for 3+ years. Primary goal right now is to improve trading psychology. And let's see. I have been trading for 5 years now in the Indian market, recently started trading Forex and working towards becoming a funded trader. Though I have good experience with charts over the years, I still somehow end up blowing my account despite making good profits. How do I overcome this impulsive behavior? So yeah, definitely a good trading psychology question. And so when we're talking trading psychology, again, we keep kind of repeating that concept here, but basically you need to look at the emotional swings that you're having. And if they're too big, your size is too big. That's the first and foremost. Reduce your position size, watch what happens. You start trading like a human being again, rather than like a maniac, right? If your position sizing is big, it's going to cause you to make some crazy, emotional decisions. Reduce that size, see what happens. I'm telling you, it's always a good idea, in my opinion, to look at your position sizing and ask yourself, is this making me too emotional? Because that's usually the problem. 9 times out of 10, traders struggle with position sizing and they don't even realize it. They just want to make money fast, so their position size is way too big, and it causes them to wreck the whole thing like a train wreck. St. G has a question. Been trading 1 to 3 years. Primary goal right now is trading psychology improvement. And question is, what are your thoughts on people who try to trade while working full-time jobs? What recommendations would you make? So I got started trading while I was in college, and then I traded during, when I had a software job. So time was tight. I traded the Asian session during that time, and I would usually get up really early. Before I quit my job and started A1 trading, my hours were disgusting. I would not recommend that. So I understand if you're like, my time is terrible. And this was back, by the way, before I was married. I don't have kids, and my timeline was horrible. I was getting up at 4:45 to 4:30 a.m. every single day. I would make content in the morning, edit it, hit upload, go to work all day, drive home, and then I would at night. I would at the time I was doing some work for a brokerage, so I'd record content at night. I would also manage emails, incoming stuff, customer support, respond to YouTube comments, and I would work until like 11. It was a disgusting timeline. So I don't want that for anybody. That was insanity. Like, that was not a healthy lifestyle. I didn't do anything fun. I'll tell you that much. I didn't play video games. I didn't watch TV. I didn't go to events. That was not a healthy way to live life. I think if you are somebody who is looking to trade while also having a full-time job, and you maybe even like your full-time job, like that's actually the ideal situation, is you can use your full-time job to scale up your trading over time. I think that's actually a great way to approach things, like scale up over time with your job. Find a trading session that works for you, right? So if you're someone who is, in my case, I'm in the East Coast US, I would trade the Asian session, which would be like 8 p.m. at night. I would trade 8 to 9, about an hour a day. I do some back testing, right? So back in college, I would do back testing at like random times of the day because I had classes, so my timeline was different. But specifically with a full-time job, there's going to be some sacrifices. Long story short, that's just the answer. Like, to learn to trade is a grueling, challenging thing. Your lunch breaks at work, if you have them, if your employer situation is like you get an hour to go, off and have lunch or whatever, 30 to 45 minutes, take that time to back test, study the markets, whatever, right? At night, in the morning, if you have kids, it gets even harder. If you have a spouse, it gets harder because obviously those are time constraining things too. So the reality is, do a time audit. That's what I can encourage you to do. Do a time audit. Look at your day. Look at your screen time on your phone. Are you watching TikTok for 2 hours? That 2 hours, claim that back. Uninstall TikTok, uninstall, things that are distracting you. If you really want to make it in trading, sacrifice. Find where you can sacrifice and make it happen. That's, the reality. Everything worth having in this world is hard. So that's the reality. Attila says they've been trading for 3 years. Primary goal right now is other. What do you think? And the question is, what do you think of AI in trading? Will manual trading be relevant in a few years? Planning to do something AI related? AI has been in trading for like decades. it's only been recently popularized by like the chat GPTs and stuff, but like algorithmic trading, like super intelligent robots trading in the markets have been around for decades. That's not a new concept. I don't think it's going away. I think it will continue to advance and accelerate. But manual trading, I don't see going anywhere, because as long as underlying market mechanics are run by humans, even the robots that trade the markets, there's human nature involved. Risk aversion, responding to market headlines, like that stuff is still baked in the market. As long as we have that, I still think manual trading has a place. And in fact, I actually think there's an edge in manual trading compared to trying to be a high frequency trader and fight against Wall Street, trading the 1 minute and 30-second charts. I think that's like a really hard, crowded trade that algos are going crazy. I think long term, there's still going to be an opportunity to be a manual trader on like the higher time frames, fundamental analysis, research. I think there's a long way, and you can use AI to do more research on that stuff. But I don't think AI is going to fully replace manual decision making in trading from a high level perspective for many, many years. Joseph says they've been trading for 1 to 3 years. Primary goal right now is to become a funded trader. And the question I have is scalping in the lower time frames profitable? Good question. I'm not a big fan of saying anyone's strategy or approach is just completely not profitable. But from experience, I'll tell you this. From the many traders that I've spoken with over the years, worked with, and interviewed professionals from my experience, the lower the time frame a trader goes, the less profitable traders I see in that time frame. People who trade the 1 minute, the 5 minute, the 15-minute chart. In my experience from interviewing traders and all that stuff, much less people reach profitability. I think that's the hardest way to trade, is lowest possible time frames. It's popularized because it's an exciting way to trade. There's trades all over the time. You can make lots of all over the place. Like you can make money and then get out for the day. It's glamorized and it's exciting because it's a cool concept. But just factually from my experience and interviews and people that I've discussed, 9 out of 10 people that I know that are profitable, like I've seen broker statements kind of thing, they're swing traders. Swing traders, the daily chart, the 4-hour chart, the weekly chart. And here's another one. Ready for this? You know who the most likely people to make money are in markets? Long-term investors. So the stats are in your face. Doesn't mean you can't make money trading the 1 minute chart or the 5 minute chart. But the odds of you becoming a profitable trader get worse on the lower time frames and higher on the higher time frames. Why? Well, there's a lot more trading costs on the 1 minute time frame. There's a lot of emotion. There's a lot of noise on the 1 minute time frame. There's a lot of back and forth choppiness that, it's just blips in the market. You're also competing with algorithms all over Wall Street. Things get hard on the low time frames. Not to say the high time frames are easier, but again, the stats would favor investors, swing traders, position traders far more than day traders and scalpers. Okay. Does not mean that scalpers and day traders cannot make money. I'm not here to tell you you can't. I'm just telling you from my experience, those people are much less likely to make money long-term than people who swing trade, position trade, and invest. The slow and steady crowd, in my opinion, actually, I take that back. There are plenty of slow and steady day traders. Don't get me wrong. But I think swing traders and position traders, like a lot of people who are just more naturally patient, make their ways to those types of charts. There are people who are patient who trade the day trading stuff, the 1 minute, 15-minute chart. There's people who are patient that trade the low time frames. Don't get me wrong. I'm just saying that I think of a lot of the new traders, the excited traders, the day traders that are like, I want to get in, get out, make money quick. Like, I think that crowd gravitates to the impulsiveness of the low time frames, and that's probably what stacks those stats so heavily against retail traders. We got more questions, man. People are these are great, guys. Thank you for this. You guys ran with this idea. Quang says he's been trading for 1 to 3 years, looking primarily right now to better understand fundamental analysis. His question is, do you enter a trade when you're on the same side as retail sentiment? Quang, that's a great question. Whenever I'm taking a trade, it's never based upon one single thing. right? So I look at a combination of sentiment analysis, like you're discussing, retail positioning, institutional positioning. I look at that stuff. Well, really, the software looks at that stuff, but by proxy, I look at that stuff. And then I also look at economic data. I look at trends happening in GDP statistics, PMI data, retail sales, inflation statistics, labor statistics. I'm looking at all that. I'm looking at the underlying trend. I'm looking at seasonality trends, and I'm combining all of it, right? So I'm never taking a trade just because retail is long or retail is short and I want to fade that, right? That's not enough in my experience to build a solid trade plan just because one indicator is saying something. I encourage traders to take advantage of a full list, a full data set before making their decisions just off of one thing, right? So expand your analysis to include these other pieces because I think it's really important that you do so. Bear with me, guys. Chandler, James, if you guys could roll just real quick, a quick commercial break. I need to just check how far away this office space is so I know when I need to leave. So we'll be right back in just a second. Guys, drop your questions during this break, and I'll try and get to as many as we can. We'll drop the link in the chat. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. Okay, so I have this sorry for the break, guys. I had to check where this new office that I'm looking at. I'm going to explore a new office potentially for us at A1. We'll see. But I just want to make sure it's not too far away. I am probably going to need to dip in the next 5 minutes or so. Chandler, James, so maybe we are going to roll the Powell footage on the stream, I believe, but may need just to have somebody step in for that gap. I know it's real cutting it close, but I just don't want to show up late to this office tour. Anyways, gold is ripping here, guys. Look at this. 3.1% on the day, up to 33.30. My goodness, man. Absolutely crazy. Saw a message from a channel member here. Bulent says, hey, there are rumors in the market that gold will be 3,700 by the end of the year. At this rate, it seems like we'll exceed 4,000 in a few months. What do you think? Yeah, Bulent, I mean, it looks super crazy bullish. My dad sent me a funny text this morning. He said it's going to 20,000. I mean, obviously, eventually I think it will, but in the short run, I think he was just kidding. But something to think about here with gold is why can't it keep going up? Right? For people who are like, no, it's got to go down. It's overbought. Why can't it go up? Think about what you're talking about. Gold or US dollars that they print more of every second. Gold should be going up every day, right? If you stripped out, if it was in a vacuum, simply the amount of gold in the world versus the amount of dollars in the world, over time, it makes sense that gold goes up. Think about it. They print more dollars, so the value, the purchasing power of the dollar and most fiat currencies, actually all fiat currencies, I believe, maybe the Swiss franc during brief windows goes up in value or purchasing power, but for the most part, most currencies lose purchasing power. And there's only so much gold. There's a finite amount of gold on planet Earth. There's an infinite or infinite amount of US dollars in circulation, and they keep going up. So it should go up, right? Is it overbought in the short term? Maybe. But how many times do we have to, what's that SpongeBob meme? How many times do we have to teach you this lesson, old man? You guys know what I'm talking about? Where they all like, if you know, you know. It's like that one scene where everybody in like Bikini Bottom and SpongeBob like beats up this old dude who's completely innocent. Anyways, the point is people have been saying gold's overbought, it's going to go down, and it just keeps going and going and going. It doesn't mean it won't have pullbacks or even could enter a bear market. It's just the bigger sin, in my opinion, has been trying to call the top on gold when it intuitively should go up over time. You need a real good reason to have a prolonged period where gold actually declines, a period of stability or the Fed hiking rates aggressively like we saw in 2022. Just something to think about. Chandler was on the call. I'm not sure where he went. James is still in here. Are we able to get somebody who could just pop in and fill in for just a few minutes before we get to Powell's speech? Guys, we're going to be live streaming the Powell speech here on this channel. I'm going to be stepping out for an office tour that we're doing here. I'm touring a new potential office for A1. But in just a second, we're going to kind of fill the gap here until that Powell speech. I believe it's set to happen at 1:30. Yep. It's about 6 minutes ago, or 6 minutes away. Anyways, real quick plug. If you guys don't already have the EdgeFinder, it's currently we're doing our biggest sale of the year right now. It's 45% off for a limited time. If you don't have a copy and you want one, we'll split it up into a payment plan option for you. If that's something you're interested in, you can try it for 30 days. If that's something that you're interested in, if you would like some information on that, in the chat right now, we're going to drop a link to where you can speak directly to our support team about getting access to the EdgeFinder. If you do not already have it, it's the biggest discount that we do all year long. So don't miss it. I'm going to drop that link here in the chat. Here you go. If you'd like some information. And alternatively, James or Chandler, you could just literally just go full screen and let the pre-roll on that play, whatever you'd like to do. But I'm going to have to step out, guys. I will leave you all in good hands. We'll play a quick break. And then we're going to count down to Powell. So Powell is coming on in just a second. Stay tuned. We will have that on the screen for you in just a moment. And we'll see you guys in just a bit.
Attention A1 Trading Show fans, if you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8Cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8Cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
What's up, guys? I feel honored that I'm freaking watching Jerome Powell here with you guys. So I'll be here until needed. I believe Nick had to do something, but Powell's coming on shortly in about 1 minute. And we'll see what he has to say. What do you guys think, guys? You think Powell's going to be bullish, bearish sentiment? Do you think he's going to say anything? Or is he going to have one of those moments where he's just pretty neutral and just saying data dependencies is what he's looking for? What color tie? So if he has the red tie, you guys know traditionally red tie is the power tie. That could be bullish, right? If he has a purple tie, that's a more, you know, low key tie. That could be bearish. You think purple tie, Igor? Now, if he has a gold tie, gold's going to the moon. That's my speculation. He's gonna say not a dang thing. Yeah, that's typical. It's good to see some new people interacting in the top. Renz, hello, Renz, Joshua.
Everyone, once again, please welcome past chair of the club, Deborah
Joshua, I agree.
Hafero.
We've been getting a little bit of better data here, but I'll go ahead and mute my mic. I think that's the tradition, and we'll let Powell speak.
Thank you. Greetings. I want to warmly welcome you to today's Economic Club of Chicago.
Welcome,
program.
Renz. Nice to have you here.
The overflow group that we have
this is in
here
Chicago?
in the
What the
room
heck?
in Chicago, and the countless others joining us virtually from around the country are a testament to the importance and the timeliness of today's topics and speaker. Today, we have the great privilege of hearing from the Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Today's a little special, so out of respect for our speakers, and because we're broadcasting this program live, I would ask that you please remain seated and quiet during the program so that we all can gain the full benefit of Chair Powell's remarks. And now it's my pleasure to welcome my friend Austin Goolsbee, the President and CEO of the Federal Reserve Bank of Chicago, a renowned economist and our fellow ECC member. Austin, take it away.
One of my neighbors here in Chicago, we live here in my building. He actually
Thanks,
worked for the
Debbie.
Fed.
It is a real pleasure and delight. Should I move that for you? To introduce our guests, two of the firmament of economics and finance. First, let me introduce the moderator, my friend and professor at the University of Chicago Booth School of Business, Dr. Raghu Rajan, the Catherine Dusick Miller Distinguished Service Professor. He is a world expert on banking, corporate finance, economic development, author of numerous award-winning books, was himself as a scholar winner of the Fisher Black Prize, which goes to the greatest financial researcher under age 40. He's since over age 40, but he was the inaugural winner. He is a member of the Group of 30, and he was the 23rd governor of the Reserve Bank of India, and before that, chief economist and director of research at the International Monetary Fund. You probably know him as a regular contributor to the Financial Times. He speaks extensively on economic and financial issues. Please give a warm welcome to Professor Rajan.
Patrick,
and
you
then
spotted
our
gold
featured
necktie for him.
speaker will be Jerome Powell, the 16th chair of the Board of Governors of the Federal Reserve System. As head of the U.S. Central Bank, as you know, Chair Powell plays a crucial role in the country's monetary policy, oversees major financial institutions, and maintains economic and financial stability in this country. He was first appointed as a board member of the Fed by President Obama in 2012. He was subsequently elevated to chair of the Fed by President Trump in 2018, and then renominated to his post by President Biden in 2021. He has the respect of members of both parties, and I believe that no one as Fed chair has ever had to deal with more and varied challenging issues than Chair Powell has had to deal with. From the pandemic to fighting inflation to bank runs and on, his leadership at the Fed has been a steady hand and one of the all-time greats. Before coming to the Fed, Chair Powell was a visiting scholar at the Bipartisan Policy Center in Washington, D.C. He first entered public service at the Treasury Department under President George H.W. Bush, with responsibility for financial institutions, the Treasury debt market, related areas. Outside of public service, Chair Powell has worked as a lawyer, an investment banker, and been a partner at the Carlyle Group. In addition to his service on corporate boards, he served on boards of charitable and educational institutions, including the Bendham Center for Finance at Princeton and the Nature Conservancy of Washington, D.C. and Maryland. He is a D.C. native, received a BA in politics from Princeton and a law degree from Georgetown University, where he was editor of the Georgetown Law Journal. Please welcome to the Economic Club of Chicago again, Chair Jerome Powell.
Thank you and good afternoon. It's great to be back in Chicago.
Purple tie.
And thanks for that kind introduction, Austin. So I'm looking forward to our conversation, my conversation with Professor Rajan Raghu. But first, I'll briefly discuss the outlook for the economy and monetary policy. So at the Fed, we are always focused on the dual mandate goals that Congress has given us: maximum employment and stable prices. Despite heightened uncertainty and downside risks, the U.S. economy is still in a solid position. The labor market is at or near maximum employment. Inflation has come down a great deal, but is still running a bit above our 2% objective. Turning briefly to the incoming data, we'll get the initial reading on first quarter GDP in a couple of weeks. The data we have in hand so far suggests that growth has slowed in the first quarter of this year from last year's solid pace. Despite strong motor vehicle sales, overall consumer spending appears to have grown modestly. In addition, strong imports during the first quarter, reflecting attempts by businesses to get ahead of potential tariffs, are expected to weigh on GDP growth. Surveys of households and businesses report a sharp decline in sentiment and elevated uncertainty about the outlook, largely reflecting trade policy concerns. Outside forecasts for the full year are coming down, and for the most part, point to continued slowing, but still positive growth. We are closely tracking incoming data as households and businesses continue to digest these developments. In the labor market, during the first 3 months of this year, non-farm payrolls grew by an average of 150,000 jobs per month. While job growth has slowed relative to last year, the combination of low layoffs and lower labor force growth has kept the unemployment rate in a low and stable range. Meanwhile, the ratio of job openings to unemployed job seekers has remained just above 1, near its pre-pandemic level. Wage growth has continued to moderate while still outpacing inflation. Overall, the labor market appears to be in solid condition and broadly in balance, and is not a significant source of inflationary pressure. As for our price stability mandate, inflation has significantly eased from its pandemic highs of mid-2022 without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. Progress on inflation continues at a gradual pace, and recent readings remain above our 2% objective. Estimates based on the most recent data from last week show that total headline PCE prices rose 2.3% over the 12 months ending in March, and that excluding the volatile food and energy categories, core prices rose 2.6%. Looking forward, the new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. These policies are still evolving, and their effects on the economy remain highly uncertain. As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs. Survey measures of longer-term inflation expectations, for the most part, appear to remain well anchored as well. Market-based break-evens continue to run close to 2%. So, as we gain a better understanding of the policy changes, we'll have a better sense of the implications for the economy and hence for monetary policy. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Avoiding that outcome will depend on the size of the effects, on how long it takes for them to pass through fully to prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. As that great Chicagoan Ferris Bueller once noted, life moves pretty fast. For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to our discussion.
Thank you very much, Chair Powell, for those remarks. I look forward to your elaborating on them in the course of the next 40 minutes or so. I understand last time you were here, Melody Hobson interviewed you. Well, I'm a poor substitute, but I'll try and compensate in the quality of the questions. As you repeatedly emphasize, communication and transparency are very important for the Fed. I would like to get more from you on some of what you just said. As a former central banker, the only sort of caution I've been given by the Economic Club is to not lapse into central bank speak. So I'll try my best not to do that. Let me start by saying you've guided the Fed through some really difficult events, including the pandemic, the dash for cash in March 2020, the great inflation, the banking crisis centered around Silicon Valley Bank. And then over the course of the last year, we've seen a growing possibility of a Fed-engineered soft landing. And now it seems like everything has changed. In the course of a couple of months, JP Morgan has shifted to estimating the probability of a recession this year at around 60%. What do you think about all this?
Well, first of all, thank you for being here today. It's a pleasure to be here with you. Actually, the appearance I did here was my very first appearance as chair 7.5 years ago. So it's great to be back. And I would agree with you that it's been an eventful 7 years. Putting it mildly, I keep waiting for the 3 months of calm, that never comes. But to your question, I guess to set the stage, let's look back at 2024. 2024 was a year where the economy grew 2.4%. Unemployment remained in the low 4s, close to mainstream estimates of maximum employment, and inflation came down and was running at the end of the year around 2.5%. That's the economy that we had, and I won't decide how to characterize that, but that's where things were. Where we are now, again to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. So that's the strong likelihood. And my hope is that we'll get through this and get back. Well, we're always going to be aiming for maximum employment and price stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year, and then, or at least not making any progress, and then we'll resume that progress as we can.
Let's talk a little more about tariffs. I mean, you recognize that some of the effects of the tariffs will be one-off, transitory, but you also have said that perhaps they will give room for a number of firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent, and what would make them have effects on growth?
So in a kind of a simple starting point is one tariff comes in that gets passed along in prices and raises inflation, but it's just a one-time thing. So the price level goes up, and that's it. But that can happen in some circumstances, but it depends on a number of things which we don't know yet. And I would point to a couple of them, or three of them actually. One is just the size of the effects. And as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So that risks higher inflation. And the third is just what I mentioned in my speech, which is my remarks, which is got to keep inflation expectations well anchored. So if we have those three things under control, that's what it will take. And indeed, our role is to make sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. That's a big part of our job.
What about the effects of tariffs on quantities? With the level of tariffs that, for example, have been currently applied on China, there's a fear that the supply chain may get disrupted, that firms may not be able to import their relevant stuff from China given the level of prices. If it turns into a supply shock, would the Fed's response be different than if it was primarily something which affected just prices?
So I actually had dinner at the Chicago Fed last night, and with a number of directors of various parts of the Chicago Fed, and many of them are CEOs of significant companies, and they this uncertainty that they're feeling and the issue with imported components to their products is just a huge issue. But with if you look back at the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high car demand. And it was a prolonged shortage because production couldn't keep up. And that led to an extended period, one of the things that led to an extended period of inflation. So when you think about supply disruptions, that is the kind of thing that can take time to resolve, and that can lead what would have been a one-time inflation shock to be extended, perhaps more persistent, and we would worry about that. In this case, you can look at the car companies, which their supply chains are likely seem to be on track to be disrupted significantly, and you would worry that that process will take some years and that the inflationary process might be extended. So these are all of this is highly uncertain. We're thinking now really before the
Hey,
tariffs
Chris,
have
it seems
their
like it's
effects
a whole lot of the same thing,
and how
huh?
they might affect the economy.
This is
And
classic
that's
classic
why
Powell, man.
we're waiting really to see what the policies ultimately are. And
I'm
then
just
we
typing
can
up a
make
summary
better
here.
assessment of what the economic effects.
I mean, I looked at Financial Juice to see some real-time stuff.
Let's
He's just saying the
move
same
to
thing.
Immigration.
Employment,
You
price
talked about
stability.
the labor markets
I don't think the
being
Fed's
in
willing to do anything
reasonable
when they keep focusing on
equilibrium
inflation.
right
The Fed
now.
puts nowhere to be
Of
found.
course, what we've seen over the last
But
few
clearly the market's sliding a little bit lower. It's like, what do they want?
months of
The market
previous
wants the Fed
administration
just come out
continuing into
printing
this
money and
administration,
like
is
dumping liquidity.
immigration
It's
has
just it's
fallen
not
off
going to
considerably.
happen. So
What's your
I think we're going to
sense
deal with a
on
lot of
how that will affect the
intermediate
labor
swings
market?
between last week's like low and high. I
Part
think
of
we're going to
why
be trading
growth was so
inside that
strong in
for
the
the
last couple of
next
years
couple of
was
weeks.
just very high
I
levels of
don't see anything
immigration,
really giving us
and those
clear
people went to
direction.
work.
Yeah, I think
economy
my biggest
hired
takeaway
them.
so far
There was
is
a
he
lot
was
of
kind of
demand.
woke
We're
on
still
just
working off
the
the labor
policy will
shortage. What's
move the
happened
Fed away
since
from its
prior
original goal,
administration changed their
and we see
policy,
the
as you
VIX now
mentioned,
hitting double digits, and
immigration has fallen
Nasdaq now
very
back in the
sharply,
minus
and therefore
3%,
Correct.
S&P
Yep.
2%. So we're
the
just going to
growth
be
of
hanging out.
workers has really stopped. It's really stagnant. But at the same time, demand has also fallen. And so demand for workers, so payroll job creation has also fallen, and they've kind of fallen in tandem, which is why the unemployment rate has been pretty stable for about a year. So in a way, demand and coincidentally, perhaps to some extent, demand and supply for workers has fallen. In terms of the effect on the labor market, right now we're still at full employment. And labor force participation is still strong. Wages have moved back down to levels that are now pretty sustainable, given an assumption about productivity. So the labor market's in a really good place. Longer term, the effects of immigration are not thought to matter much for inflation. The effects on demand and supply will more or less cancel each other out. So we wouldn't expect there to be a big impact on inflation.
You've seen in recent weeks substantial talk about layoffs in government, as well as freezes in research establishments and universities in jobs. How soon and how big will this be in its impact on labor markets?
So it's too soon to say, but what I can say is, of course, the people being laid off in government, this is highly significant to them. We don't know how big that's going to be. Right now, it's not big enough to affect a workforce of 170 million people materially. In terms of the cutbacks in funding and for science and things like that, we do see in areas, particularly in cities that have a lot of universities and research hospitals and research institutions, we're really hearing significant layoffs and significant impacts on employment. I don't know how much that will total up to. And of course, in addition, cutting back on scientific research may have implications for economic growth, for productivity, for health, for all kinds of things. But those are very difficult to estimate in real time.
Now, given that we're talking about the future, you may be confronted in the not so distant future with both higher levels of unemployment as well as potentially higher inflation. And of course, the policies that each one requires could be different. You talked a little bit at the podium about how the Fed would see these two and how it would address it. Just giving you a chance again to elaborate on that.
Right. So most of the time, when the economy is weak, inflation is low, and unemployment is high, and both of those call for lower interest rates to support activity, and vice versa. So most of the time, the two goals are not in tension. And they're not really in tension now. The labor market is still strong. but the shock that we're experiencing, the impulses we're feeling are for higher unemployment and higher inflation. And our tool only does one of those two things at the same time. So it's a difficult place for central banks, to be in terms of what to do. And so the best we can do is we actually have a little provision in our consensus statement, which is the thing that we vote on to embody how we approach these questions. What we say is we will look at how far the economy is from each of those two goals, and then we'll ask, might there be different paces at which they would approach those goals? We'll look at those things and think about them, and we'll make what will no doubt be a very difficult judgment. Again, we're not experiencing that now, but we could well be in that situation, as I mentioned in my remarks.
Just want to pick up on a word that is often used today, uncertainty. As a respondent to a Dallas Fed survey said, I've never felt more uncertainty about my business in my entire 40-plus years career. The worry today is not just about immediate policy uncertainty, but an entire change in the US's economic philosophy. Not just policy uncertainty, so to speak, but structural uncertainty. One of the effects, as you've pointed out, of higher levels of uncertainty is that firms postpone investment. For instance, even after the tariffs stabilize, firms that contemplate reshoring production facilities will hesitate, not knowing if the tariffs will be reversed in the future, maybe by the next administration. How do you take such longer-term uncertainty into account in your policies?
Let me just agree that what comes back very strongly, and everyone will understand this. These are very fundamental changes in, long held in some cases policies in the United States, and there's not any real experience. I mean, the Smoot-Hawley tariffs were actually not this large, and they were 95 years ago. So there isn't a modern experience of how to think about this. And businesses and households are saying in surveys that they are experiencing incredibly high uncertainty. There's a lot of research, some of it from the Fed, showing that does lead to businesses and households stepping back from decisions, which of course makes common sense. And you hope that that's something that you go through a phase, and then you know what things become more certain, and therefore people can resume normal economic activities given their understanding of what is the new normal. I mean, your question really is, what if the uncertainty remains high? I think that's a difficult environment. I think people's expected rates of return would have to be higher. I think that would weigh on, to me, investment just in general. If the United States were to become a jurisdiction where risks are just structurally higher going forward, that would make us less attractive as a jurisdiction. We don't know that at this point, but I think that would be the effect.
Well, let me turn to financial markets. We've seen some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on. And, it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So we've seen volatility also in the bond market. And at a time when usually there's a flight to safety, We saw
Chris, I think they're ending the stream here,
Japanese
but pretty much a whole lot of
government bond
nothing. We'll
I
see
mean,
what
I wouldn't say
he.
it's nothing. I mean, this is a chance for Powell to kind of make peace with what's going on, say that the Fed is watching things, but acknowledging all of the potential risks and all the uncertainties. And that's exactly why the market's dropping today. It's like the market doesn't love uncertainty. We're getting lots of it. Powell and the Fed is not coming to the rescue. As I shared this morning, big technical outlook for me is I think the markets can come back and retest bottoms, but I just posted this in my Telegram channel. Look, on the weekly time frame, this is actually pretty straightforward. The low from last week and the high from last week, I think are going to serve as the range for the next maybe 30, 60, 90 days. This whole tariff uncertainty is what everyone is worried about. Now, is there more structural damage to the downside? Not necessarily, because what would have to be worse? The tariff situation would have to escalate, get worse, and then more drama would potentially break the lows. But I think right now it's like there's just a bit of an offloading. I think there's opportunities for bigger funds out there to be de-risking and deleveraging, and that's essentially what we're seeing leave the market. Is like anyone that's levered to the teeth. It's just changing. Now, I think a good sign of a healthy market right now would be, okay, so we have S&P down, 2.26%, or the index is down 2.27. NASDAQ down over 3%. Dow is down 1.6. Russell down 1.7. Volatility is up again. I mean, Alex, having the volatility index stay above 30 is like head spinning. I mean, this is going to drive traders crazy. If we go from 60 to 30 back up to like 45 or 50, it's like I don't though, other than great financial crisis stuff, I don't know what else we're trading in right now with this. And a lot of this is also leverage leaving the markets and leaving the system, which I think is a good thing. But when the dust settles, it's like I think everyone needs to play defense. Don't do anything stupid. I keep saying this, like there will be years and years of good trading ahead, and there will be lots of good opportunities where you can make a fortune if you can survive this. And this is where most retail traders especially get in trouble. Look, there's going to be institutional traders that lose money. There's going to be institutions that lose money. There's going to be blowups in this economy. Like, this is not good for anybody. But if you can survive this, there will be opportunities that are plentiful. And I mean, triple digit upsides could be there. And the breadcrumbs are there. But it's just, I don't think anybody needs to be doing anything like taking crazy risk right now. I'm certainly not. I'm playing defense. I added to hedges today, and I just think we have a lot of uncertainty. So long story short for me is the market is in between some big technical levels. We had a bit of our kind of, Trump put, so to speak, previous resistance becoming support. I think this 12 to 13% rally off the lows to the resistance point, a 13.5% move in the SPX. I could see prices staying somewhere in between there. If we're lucky to have some type of wave structure, I know this is getting a little bit into the weeds, but if we have some wave structure, even something like this, we have a low to high, we pulled back once, we headed up to the highs again, we pull back again. I could see some support around 5,100 or 5,000. I could see some resistance back at 5,500. So if we chop around it here, the lows are fairly safe right now. The highs are fairly safe right now. You just got to survive. So I don't know how that affects your trading, Alex, but that's what I'm doing. Is I'm not really looking for any big directional plays. I'm hedging. If we come back and revisit lows, I'll take some profit on my hedges. But if we just have a bunch of noise and it's 1 or 2% swings, this is all happening within a 13.5% context last week. So there's a lot of ones and twos that can happen inside that range, and no real highs or lows are broken. So we could have a directionless market, but it just feels like nothing's good, right? There's no recovery. It's silent from the tariff front. There's no solution. U.S. and China relations aren't getting any better, and that's how this narrative has to change. Because clearly Powell today not saying anything different. The Fed is going to have to make a tough decision. I think if the Fed does step in, it's not at 4,800. I think the Fed's going to step in when we're at 35, 40, 45% off the all-time highs, and everyone is just obliterated. And then the Fed's like, well, now we can actually start firing up the printing presses and we can see quantitative easing with fiscal policy, blah, blah, blah. But I don't feel comfortable that it's going to feel like absolute trash to have that be the experience. If we have to survive a 50% downturn, so much damage will be done that it's like, who's left? There's going to be like Warren Buffett's left because he's 20% cash and he's just holding dividend stocks. But if you can survive this, there will be lots of money to be made. But I think right now is the time to be patient and be disciplined and trade smaller with less risk. And that's how you can get through this. If you're a short-term trader, if you trade short-term futures, you trade currencies, that's fine. There's plenty of volatility to swing at, but I would still trade smaller. I'd still take your stabs, but I would just not be taking a lot of risk right now. I think it's too crazy.
Yeah, I think long term, if we get pulled back, like you said, at the bottom of this market, longer term, maybe some pullback opportunities. But you brought up something interesting that I wanted to ask.
Okay.
You said it would take something new, right, for us to go lower. Is there anything specific that you're looking out for that will cause us to go lower? Because I think we, like you said, we kind of priced in the worst case scenario here.
I think we did price in worst case scenario, but what gets worse would be, let's say that it's revealed that countries aren't just, jumping in line to negotiate with the U.S. right now. And all of a sudden the outlook worsens. Let's say that this first couple weeks of earnings season for Q1 looks terrible. It's like we're trading at like I think the price to earnings on the S&P is around 21 times sales right now, or 21 times earnings. And to find a true bottom, especially after a high valuation period, like we had 24, 25, 26 times earnings, if we compress down to what would be like a reversion to the averages, which is around 17 times earnings, that number is very scary. And I know this doesn't happen immediately, but I just got off the phone talking about, it's interesting how this whole thing has been timed, where we have this needed rotation followed by tariffs, followed by potential earnings compression, followed by potential, disagreement between the Fed and the current administration, followed by employment that could get worse and like put the U.S. in a recession. I mean, all these things could just happen one by one by one by one, but it's all happening in the same like 6-month window. And that to me would be like, we break the lows. And if you look at your chart here, it's like, what do you see on this chart that looks good if price is below 4,800? To me, nothing. Nothing is good. So I put in here bottom area as if we had a bear trap. But if we don't have a bottom here, this scares, and this should scare everybody.
Yeah.
It is wide open to basically coming back to the COVID high. Look at how good that technical resistance was to that 2022 bottom support. That area scares the crap out of me, because that survival is not going to be easy at all.
Yeah, that's deep. That's deep.
Right? And so that's the wound that you're forever going to remember, forever going to feel. And if you can survive it, look, man, give it time. If it takes 2, 3, 4, 5, 6 years, but you can double your money, it's worth it. But if you can't survive it, it doesn't matter. You just have to start over, So it's either way, it's not going to be fun. But what has to be new? I mean, I think the government needs to just stay quiet unless things are good. Don't share anything. Say nothing about tariffs. And I don't know if that makes the market crazy uncertain or not, but until something is good, don't say anything. Trump shouldn't say anything unless it's going to be good. He should say anything like, hey, look, we're talking to China. I'm going to China. Anything to maybe get the market excited. Meanwhile, earnings can come out. Maybe they're okay. If earnings are okay, then the market can stabilize and have some sense of optimism. Employment data is not really going to hit until September or December. That's the window where it's like the federal government that have been laid off, all those workers are going to go private sector, and we'll see what unemployment rates look like at that point. But tariff talk needs to be quiet, or it needs to be positive. Like, hey, 20 countries just stepped up. We're doing terms with them. This is what we're doing. It's working. It's great. Everyone's happy. Like, that's the narrative I think we have to see to kind of get some optimism. Otherwise, the Fed, they're not going to say anything the market wants to hear. It's going to be the same song and dance from Powell. The Fed's not doing anything until probably June, right? May is a rate decision. They're not going to do anything. It's like an 80+% chance they pause. So June is the first rate cut. If you look at the Fed cuts, Alex, look at I think at the Fed rate here, Fed funds rate. Yeah, check this out. Okay. Look at this one from the higher time frames. When did the Fed start cutting, and line this up with how the market reacted? So let's go back here to 1989, 1990. Fed started to cut rates. Downturn in the market. Right here, 2000, 2001. Fed started to cut rates. Nasty downturn in the market. 2006 and 7 and 8. Nasty downturn in the market. 2019, 2020. Nasty downturn in the market. What have we done here? Well, we started to cut rates. We did 100 basis points last year. In the first time in 40 years, the bond market did the exact opposite. Yields have not gone down. This is, to me, this is like the sign of, even if the Fed is cutting, they're usually cutting in a weaker market. They're usually cutting in a weaker environment. So if we continue to cut, it's because they're forced to, and the markets are typically declining. And I understand, like, not every downturn in the market is faced as a recession. Sometimes I think it's like 50-50 right now. Like sometimes recession stocks go up, sometimes recession stocks go down. But as we started the cycle, none of these periods right here have ever been good. We cut. The markets have not done well. So we're clearly down. I think we're down double digits now year to date. I don't know what's going to close at the end of the day, but I can look at that right now. But yeah, I think there's just nothing good. I mean, from the all-time highs, we're currently sitting down about 14% from the all-time highs. We had about a 22% correction in the S&P from the yearly candle so far. Here's the yearly candle. You got to discount the wick because we obviously stretched up there into February. But the yearly candle for year-to-date S&P right now with live price, we're down about 10.84%. So we're down double digits. Now you can argue and try to paint this picture like, oh, that's a correction. Well, we were down 20+% from the all-time
Yeah,
high.
no, yeah. Once you're in the 20s, well, definition is what, 20%. Now you're in bear market. So
exactly.
Yeah.
Yep. So it's a lot of uncertainty ahead, and I'll go back and just kind of wrap it up here. I think that the low for right now is safe. I think the high for right now is for the bulls to try to claw back. They get back to the highs, but I think it's going to be met with lots of resistance. I would just expect prices to stay somewhere between this low and this high, and we're just going to bounce around in here with some uncertainty. And it's not going to be fun if you're a crazy short-term trader, maybe taking some stabs in the short-term markets. Maybe. If you're a swing trader, good luck, because you might have zero direction. I'm spaced all over the place. I've got day-to-day prices that I trade. I trade a lot of indexes day-to-day. Swing trades, I'm picking my battles where I'm way out here for some forgiveness, and I'm way up here for some forgiveness. And so I'm not trying to pick the noise. I'm trying to stay out of the way. I'm trying to trade the highest probabilities. Bigger picture, where would I get really long? I would take some bites down here again, and I would be looking at what's 30% from the all-time highs, what's 40% from the all-time highs, and what's 50% from the all-time highs. That is where I'm going to start taking more stabs. And long-term, look, I've got plenty of cash at the ready that if we offer a 50% discount in the S&P, I'm going to buy it and hold it and probably not look back for 5 or 10 years and try to make as much money as I can. It's going to take time, but that's a great place to say, hey, look, I just started trading stocks for the first time in career. The market's 50% off the all-time highs. I mean,
that's a wonderful opportunity. That's
my
wonderful.
Point. If you had the opportunity to start investing there, you have a huge head start. And again, that will spoil you to what is the future, because on average, you're going to get about 6 to 8% gains a year. But when you go down 50% and then you go up 100%, let's say it takes 5 years. Well, you just still annualize like a 10, 15, 20% gain per year. But it's like, how does it come? It comes with, on the average drawdown, you're looking at about a 15% drawdown on average for the S&P in order to make a plus 8 to 10% a year. That is the risk-adjusted return in the S&P for 90 years. So if you're willing to accept this risk, you have this type of reward. And the last couple of years, we've had 20+% gains, and it's made everyone spoiled and think that all you have to do is buy the SPY and never look back. But it does come with volatility. And if the SPY is down 50%, the NASDAQ's probably down 60, 65, 70%. Again, a great place to start, but my gosh, man, it's very, very damaging to the traders that are stuck up here, excited about the Trump administration, buying the highs, and then being just killed by these drawdowns.
Yeah, that's painful and traumatizing for sure.
So, all right, man, any final thoughts from you?
No, man. I know we probably have to head out, but thank you for sitting with me and reacting with me. Hopefully, maybe next time in the future we have more time where we could exchange ideas.
Sure. Sounds good. Anytime. All right. Thanks, Alex.
You guys have a blessed one. Bye-bye.
Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.